Gut, also dann fange ich an und du machst dann bei... Nee, aber wenn man spricht...
Bo, hallo?
Cool. All right, so let's get started. Please come in, make yourself comfortable, take a seat, and yeah. A very warm good morning from me and the whole Digital Euro Association team. Everybody doesn't know me, I'm Jonas. I'm currently chairman of the Digital Euro Association, co-founder. So one of the organizers here, and yeah, super happy to welcome all of you here in Frankfurt. It's 9, and already a lot of you made it here, are sitting in the room and have joined online. So we are really, really happy about that. And also happy around this year's conference in particular, because it really developed nicely since last year. So just to share a few numbers, I think 320 people registered on site. We have way more also participating online. Actually, more than 50 countries and nations that participate in that, which is great for us because we always wanted to not, of course, also focus on Europe, but also look way broader, look what's happening globally. And we are happy that this is also resembled in the participation, let's say, nationalities. Also more than 70 speakers across three stages. So really, it might be a challenge for you guys to see in which room you go and what you watch, but I think good problems to have. So again, really great to have you. And maybe before we go into the topic of today, let's very briefly and really briefly tell you a little bit more about what we are doing with the Digital Euro Association here, because what we started with, basically with the mission 5 years basically ago, was to become a voice on the digital money topics, primarily around digital fiat currencies in this regard, so covering CBDCs, stablecoins, tokenized deposits, all of the sort, and really unite a broad, bring together a broad community around these topics, because it's a topic that concerns everybody of us, all stakeholders, and that's also why I'm really happy that we do see from all kind of different stakeholder groups people here today. So be it central banks with 25 central banks, regulators, banks, fintechs, crypto companies, law firms, consultant companies, all of them are here and also members of our association. Within the association, we focus on 3 core pillars. One is education, and around education, of course, today is one example, hosting conferences, online events, having a podcast, just ensuring that our members are informed and kind of ahead of the curve when it comes to digital currencies. Then we try to build communities around that. So we really want to break out all the niches, so the not central bankers are just talking to central banks and banks talk to banks, but really break up the silos and open the dialogue, which we also aim to achieve today. And we are also engaged in a lot of public affairs topics, be it on European level, be it in level on Germany, in other European countries, where we really try to push into some directions that also, our members are resembled and heard in these voices. Yeah, just to give you a small feeling how our community is comprised. So there are banks are part of it, fintechs. We have a few central banks as members. We have strategic partners, be it Digital Dollar Project in the US or some other folks in Asia. So again, we are particularly focused and keen on Europe, but we think it's important to share experiences globally, to come together from across the globe. And we are really thrilled that more than, as said, 50 nations are part of this conference. But before we go into the topic for today, we also are super excited because we have a few announcements to make, as always, at this conference, because we have been growing in the past year and have a few partnerships that we want to announce today, where we are, again, really excited and have all of the companies with us today. Number 1 is Accenture. So recently Accenture became a part of the Digital Euro Association here as one of the leading companies when it comes to IT implementing, also having a lot of initiatives and projects engagement when it comes to digital currencies, and primarily in the context of retail, CBDC. That's number 1.
Yeah, very warm welcome from my side also. I'm happy to see all these faces, familiar faces and new faces in the community. I would like to announce a new Invest, has been part of the wholesale settlement trials also, and a very big player in the digital money sphere. So we are happy to have you on board.
Number 3, last but not least, KPMG. Also, again, super excited to have KPMG as a key player in the space with us. So you see, we are basically growing as a community. This conference is growing. But yeah, this is kind of the scene for where we are today.
So Jonas, why do you think the community is growing like this?
Well, I think, there's just so much stuff happening. So if you look into stablecoins, for example, in Europe, we now do have the markets and crypto assets regulation live. So basically one of the first uniform, harmonized regulation which provides clarity in the legal context.
But it was quite complicated, right?
It was complicated. Like Germany was a little bit late to the game, so we knew there were elections in Germany and it was, a lot of pressure before Christmas to get this implementation law in place, right? So that was quite an effort, but the Germans made it, luckily.
The French were very, very fast, right? And that's why Circulus there also got the license, and we have the first stablecoin, MiCAR-regulated stablecoin, also in Europe now.
Actually, yes, we do. And at Circle, and also a few more initiatives are going on. And for yesterday's conference, we heard also a lot about BaFin, and there are also stablecoin initiatives coming out of Europe. So AllUnity being an example, who's also soon coming and launching here, also out of Germany. And they are also part of the conference. And of course, there are more stablecoin issuers. So a lot of initiatives and excitement around stablecoins.
We will hear about that today during the day. So check our agenda if you are interested in the development of the stablecoins today. Why is that? Why do we have these stablecoins? Why is it that so important, and what else is happening? Besides the stablecoins, we saw a speedy progress with wholesale settlements on DLT. 2 years ago, we didn't expect at all that the ECB is looking into the topic of wholesale CBDC, because they were really focusing on retail CBDC and at least talking about it also.
But a lot of fuss and a lot of interest from the market, right?
And suddenly, yes, they started to say, well, we are having experimentation and trials. And not only they saw that it's going to happening, also the market participants, 64 market participants participated in the trials, with 40 trials. And you saw a very, very big interest in settling in wholesale, in digital central bank currencies.
And I mean, we do see that also another phase has been announced recently by the ECB, right? So there will be even more traction, more initiatives.
We will have a short-term version soon, that's what the ECB said, to have wholesale settlement possibilities in central bank digital currencies. And that's something, I guess, we didn't expect last year, that we will see a European wholesale CBDC probably soon, or the first steps into that, right?
And what about the elephant in the room, the digital euro, so the retail digital euro? What did we see there?
Well, I guess there was some progress made also. Even though if it didn't happen with the legislative proposal, what we were all hoping in the past 1.5 years, we didn't see anything yet coming, but we have a new rapporteur, Fernando Navarrete. I hope I pronounce his name rightly. And we hope that he's going to hurry up with the proposal, because we want to have a decision in October, right?
And it's also getting a more geopolitical topic here, right? If we look at the US, what's happening there.
True.
So.
But I think the ECB has been doing a lot of progress on the digital euro, because we see that the rulebook has been developing very fast. We will see an almost final version of the rulebook, I guess, this year. Besides, we saw a lot of work streams where they invited market participants to participate on the development of the digital euro infrastructure and to get feedback of the market. And they even announced innovation partnerships and asked people to participate in innovation partnerships on conditional payments. And that was something we didn't expect at all, right? The digital euro and conditional payments, how does that come together?
And it's great that you also, the market is involved, right? So it's not just central banks doing things, right? But it's also the industry is on board of that, and private sector consultancies, where a lot of them are here today. Yeah, so definitely a good step.
So it's going to be involving the industry. Is there something else coming from the industry?
I mean, the last one is really tokenized deposits, right? So that's kind of the fourth version, let's say, of this digital fiat currencies. And here also progress was made. So if we look into initiatives, there are a few ones, for example, where the DC Bank is involved, or also Patchay, who's also supporting this conference, who's also working a lot on tokenized deposits. We also do have central banks actually here that experiment more, like in Korea, on topic of tokenized deposits. So also progress here. But of course, from my perspective, this is something that is still, if you compare this to stablecoins, to host a CBDC, a little bit, more in the pilot stages, at least from my understanding. But this is also something we hear today about in the agenda, where are the hurdles, where are benefits. So you can be excited for the day ahead.
And 2025, I guess, in the digital money sphere. I guess we will see a lot of development in 2025. And yeah, I'm looking forward to that.
Yes, so this year will be exciting. I mean, I'm also saying this every year, but this year I also mean it. I'm really looking forward to that. No, I'm just kidding. But you see, for today, so the topics we discussed, that's all covered in today's agenda. So wholesale, CBDC, retail CBDC, tokenized deposits, stablecoins, also tokenization in general. And we do have 3 different stages for you today. So you're here in Frankfurt, the on-site people here in the main stage where we cover a lot of the discussions. We do have the innovation room where a lot of deep dives are happening when you look into practical insights, into tech solutions, into insights from central bank pioneering experiments, if you will. And lastly, we also do have, and this is new this year, a roundtable room where we basically do have more informal discussions. So it's very important to mention that the main stage also for all of you and the innovation room will be recorded. So this means you can, if you don't know where to go, you can basically watch it at home again. In this sense. But the roundtable room is not, and we also decided that because a lot of people approached us yesterday, the last days, and said, I didn't register for the roundtable, but I'm very keen, I want to participate. So what we said is we do have some spots left for some roundtables that you can participate still if you like. So again, for these roundtables, and Marcel will also tell you more about this later, if you want to go to these roundtables, you have to go to the check-in desk and basically put in your name, and then you are on the list and can also join the roundtables, at least the one that are not fully booked. So if you want to do this, of course, please don't do it now, do it in a break, but you have the opportunity to do this in that regard. Good. I hope I didn't forget a lot. So I think we are also very good on time now. So it's really great to see the room now. Getting more and more packed at this very early hour. So great to see. Thank you all for the interest and this conference. I'm sure it will be exciting. Have a lot of good discussions. And lastly, I would like to hand over to Marcel Kaiser, who is the moderator today, third year in a row. It's always a pleasure to have you, Marcel. You will bring us through the day. And enjoy, have a good time, have good discussions, and we hope you like the conference. Thank you so much.
Yeah, happy conference.
Thank you. Thank you. Hello and welcome from my side. My name is Marcel Kaiser. It's a great honor to be moderating this Digital Euro Conference again. And thank you, Jonas and Anne-Sophie, for giving us a taste of what's to come later on today. I'm sure it will be exciting, it will be controversial, it will be, first and foremost, very insightful. And I am also very honored to welcome to the stage Dr. Alexandra Hachmeister. She is Director General Digital Euro at Deutsche Bundesbank, and she will kick off the day with her opening keynote on the role of the digital euro in the financial ecosystem. But before you give her a huge round of applause, keep in mind that you will be able to post your questions online as well as here using Slido. I think we had a QR code at some point behind me. If not, we will make sure that it will be shown to you later on, and make sure to be part of the discussion if you have the chance to ask direct questions to fantastic speakers like Dr. Alexandra Hachmeister, who I would like to welcome to the stage right now. Please give her a warm round of applause. Hello.
Good morning, everyone. It's a really great pleasure to be here today. And I can tell you, normally you would expect from a central banker, I would say rather very technical, data-driven, structural presentation. You will get some of that. Nevertheless, in preparation of this conference, I sat together with the team and I asked them to be a little bit more political. And that is because we're living in political times. And I'm really happy that we're all here together and that we can really discuss the future of digital money in Europe and obviously in other regions around the world. So, I think there's supposed to be a presentation, right, that I can click. should I?
I'll check real quick.
No, it's okay. I'll take a step back. Do the magic.
That's you.
Okay, again, as I said, ladies and gentlemen, it's really an honor to be here today and to discuss a topic that is not only timely, but also crucial for the future of our financial system, and that is digital money for a digital ecosystem. As we gather here, we are all actually acutely aware of the challenging geopolitical landscape that surrounds us. The world is facing unprecedented shifts, and these changes are influencing every aspect of our lives, including the financial markets, of course. The digitization of finance is no longer a distant future, it is our present reality. And this transformation brings both opportunities, of course, and challenges that we have collectively to navigate with foresight and innovation. And I consider it a distinct privilege that today I can deliver the opening keynote here in this round, because this conference marks a significant milestone as we come together to explore the future of digital money and its role in shaping, and you will hear that word a lot during my presentation, a resilient and forward-looking financial ecosystem, because that is what is on central bankers' minds these days, resilience. In this context, and we have heard about that by the two of you already, the Bundesbank and the Euro system have a unique opportunity to take on a leading role. We consider this really an opportunity. We are actually believing we're at a pivotal moment where we can set global standards in payments and work towards redefining a financial market ecosystem that is resilient, you heard it again, and forward-looking. We believe that by embracing digital money and leveraging our collective expertise, we can shape the future of Europe's financial landscape and ensure it remains competitive even at the global stage. So what I'd like to do is I'd like to invite you to explore with me how digital money can serve as a cornerstone for a robust digital ecosystem. Together we will examine the potential it holds for enhancing resilience, autonomy, and efficiency. We will also consider the strategic steps that we need to take. So thank you for joining me. I'll take you on a journey now through the digital euro on the retail side, which is, as you highlighted, is a very hot topic these days, in particular in Brussels. But obviously, I'll also talk about wholesale CBDC, because for me, those two go together. And you will realize, and that was also mentioned by the two of you, that actually we're talking a bit about a triangle here. It is retail CBDC, it is wholesale CBDC, and it's also how does B2B fit in there? That's a question that we'll have to answer. So, if you look at digitization in general, it actually has rapidly transformed our lives. And what we see is that Europe still lags behind. I mean, that's our reality in terms of embracing the potential that we have. However, despite these challenges, I think there are still a number of compelling reasons, and we have every reason to remain optimistic. So you will not hear, I would say, a complaining speech by me today, but you will hear what I see as a very strong opportunity for all of us in challenging times. So I remain optimistic. And that's a lot for a central banker, I guess. So what I'll do is I'll briefly focus on one promising area where Europe is already at the forefront of digitization, and that is the digital euro. And later in my speech, I will, of course, address wholesale CBDC and how we are going to make progress there. As I'm sure you're all aware that the Euro system is hard working at actively exploring both, right? We really have been at the forefront, which is actually quite surprising. Usually Europe is not known to be at the forefront of innovation or changing, the future when it comes to digitization, yet we managed to be there. I think recently we also started collaborating with market participants to identify relevant B2B. That's what you already mentioned. Use cases which actually aim to foster a new ecosystem. And this is why we chose the title. It's not just digital money for specific processes that we have today, but it's really thinking about digital money and how it can be used in a digital ecosystem that we're going to expect. And I'm a firm believer that CBDCs are the next big thing. At the political level, we perceive that the digital euro has gained further importance, also due to current geopolitical challenges. And this is reflected, for example, and you might have seen that, the statement by the EU heads of state and government last week. And that was actually a pretty strong statement that we saw by the European Eurozone heads. And it said they were calling, of course, among other things, to get progress on the project. They actually urged that we get our things done. And I think just a few days later, ECB President Lagarde emphasized in a hearing, and she was at the Committee on Economic and Monetary Affairs of the European Parliament, that the euro system, she was very precise. She said, we'll stand ready. We will have completed our homework from a technical point of view, from a financial stability point of view, from a single rulebook point of view in October. So she pretty much made a strong promise that the euro system will get its act together. But as you're all aware, there will be no digital euro without the legal framework that we need. So it was basically a clear signal in Brussels, toward all people there, all decision makers, everyone that prepares this, that they should also intensively work on getting the basis done. Bundesbank, in that role, we're actually committed in this transformative journey, and that is we are part of the Eurosystem internal consortium, and we're actually prepared to contribute significantly to the development and provision of the core components of the infrastructure for the digital euro. And I think this commitment underscores our dedication to ensure that Europe remains at the cutting edge of digital innovation. But what are we actually aiming to achieve by introducing a digital euro? And I get that question a lot when I speak. Why do we need this? Where is the use case? I'll have some answers for you. And we are, I can say, more convinced than ever. So let me start and share a few of them. In an increasingly digitized society, it is essential that we adapt to the changing needs and demands of consumers. Simply, right? There are consumers, and we might rethink our payment services. That's just a simple reality. So in a nutshell, there's 3 key motivations that drive us. We sometimes like to summarize them: resilience, autonomy, and efficiency. That's what we are looking for. Let me start with resilience. With the digital euro, we're aiming to enhance the resilience of the euro area by securing the anchor function of central bank money, thereby creating the foundation for our independent monetary policy. And we have seen how important that was during the last 2 years in particular. And in light of recent political developments across the Atlantic, it is actually now more essential than ever, and with that I mean together as a united Europe, that we take action in order to prevent market disruptions. We can't rely on others. We have to be sure that we are capable of handling situations ourselves. So this is resilience. Second, the digital euro is essential in order to actually improve for us our autonomy. What do I mean by autonomy? What we have seen, the trend, so the consumer, the trend towards digital payments is making us increasingly dependent on non-European card systems and big techs. I think we all know who I'm speaking of, all American companies. So the digital euro offers a European alternative, thereby enabling us to strengthen Europe's autonomy in payment transactions. And in view of global political developments, it's actually vital that we become more independent and actually dare to embrace more Europe. That's what we need. Third, there's the issue of efficiency. Despite a number of initiatives in the past, almost 25 years after the introduction of the euro, actually, we still do not have a pan-European payment solution in place. We have a very fragmented landscape if we look at the 20 Eurozone countries. And what the digital euro aims to reduce is this fragmentation, and it aims to simplify cross-border payments. Common standards also help to increase competition and efficiency. European providers could thus regain share in the payment market without high investment costs, actually. And I assume this issue will be discussed in greater detail in the coming panels, because I'm acutely aware of all the discussions that I have myself on this topic. The next topic, which I think is increasingly important, and I mention it, is the B2B. Right? Because if we're talking about a digital ecosystem, it doesn't stop at certain use cases, but we have to think it all in once. So if we fully want to leverage the potential of the evolving payments landscapes in the area of CBDCs, last October, the ECB actually organized a special focus workshop on innovations in B2B. And you mentioned that, Anne-Sophie, that it was actually a one-of-a-kind platform to learn more about the potential use cases of the market. So what I really like about the progress that we're making on the different topics is we are engaging very strongly with the market to really understand. Of course, we have a clear central banker's perspective on the things that we do, but when we think about digital ecosystems, we really believe that this is a collective endeavor that we are going on, and that we need to understand what the different needs and interests are. We have right now the innovation platform that is still ongoing to collaborate with stakeholders. And what we have seen, and you mentioned that as well, is that we actually looked at conditional payments, which I think is very important. And it was a step, as you said, I don't think everyone expected that we could ever do that. So much for the retail side of things. Let me switch to wholesale now. When we're in a digitized world, obviously it's not only about changing needs and demands of consumers. No? We also rethink our payment services for the wholesale financial market transactions. In particular, it is and will remain essential that we are able to settle transactions in central bank money using new and innovative technologies such as DLT. Why is that so important? We know that today, following the principles for financial market infrastructures, large transactions are supposed to be settled in central bank money. So if the way transactions and assets change, we actually believe that as central banks, we have to provide something that fits the developments. And this is why we are so keen on wholesale CBDC. So what, on the one hand, we see that the market, so a lot of you, have recognized the potential of DLT for settling financial market transactions, especially with tokenized securities. And on the other hand, we have seen legislators, and in Germany and Europe, support the potential of its technologies with regulations like the EWPG, that's the Electronic Securities Act, and the DLT pilot regime. So we're seeing regulators doing the job. We're seeing the market is really going forward. And what that means is we see an entire ecosystem evolving around the tokenization of such securities. And like these financial players, we, as central banks, see significant benefits in the use of new technologies. So the advantages of DLT, such as automated settlement through smart contracts and reduced reconciliation needs, I mean, that's a pretty clear benefit here. But if we really want to harness the potential, we need to think further. And what we are seeing is a clear preference on the part of the market for settling DLT-based transactions in central bank money. That is actually what we get. They say, okay, we're developing the asset side, but we would actually like you to find the perfect match for us, and that is the cash side. Shall I get this closer to me? Yeah, I can do that. You should have said something, raised your hand. And now I'm saying something where I look at you now. From a financial stability perspective, we would always prefer a wholesale CBDC, obviously, over a stablecoin. But more so over crypto tokens, to be honest, and over tokenized commercial bank money. So I think I'll leave ample room for you to discuss later why it is so much better than wholesale CBDC. And as I said, for us, it is really about thinking how will a future ecosystem overall in a digitized world look like, and how will all of these things fit together. However, when we think of large financial transactions, for us, it is to be done in CBDCs, because it is secure central bank money that is needed. So we are therefore working on developing something. And for us, CBDC in this world will really be a game changer, right? And this is why, and you said it in the beginning, we have been surprising the market a bit because we had focused as the Eurosystem so much on delivering on the retail digital euro that sometimes is overlooked that in the background a lot is going on. So because it was just on the agenda and everyone could see it so clear and everyone was talking about it. And this is the difference between the two topics. I think when it comes to retail digital euro, basically everyone has an opinion. And it is very a public topic. When we're really talking about wholesale CBDC and technology in that space, it's more a topic for experts. And that means it's also not as detailed discussed in that sense. So, if we look back, in 2009, DLT was basically introduced, roughly, right? 2009, it became very well known. But yet, we cannot consider it a mature technology, right? I mean, that's over a decade ago, but it is not yet a mature technology. And what we're looking at is, and this is why I've brought you this chart, is that current use cases are merely aiming to build existing business processes on a new technology, especially for security settlement. That's DVP and cross-border payments when we're talking PVP. And for the time being, the vast majority of use cases reflects DVP transactions. That is where we see the bulk going. As the market participants, you seem to be very engaged in that field, which is a natural reaction because you're doing a lot on the front of digitization, digitizing assets. I actually believe that PVP will be much more prominent in the next months and years to come. We actually see, when it comes to PVP, some room for improvement, definitely, knowing that we have dependence on only a few correspondent banks, and we have sometimes cumbersome transaction chains, and that makes cross-border payments opaque, makes them slow and expensive. If I look at that chart, what I see is that we're trying to replicate what we have with new technology and simply trying to make it better. That would only be a technologically driven efficiency case. What I would like us to do is look on the right side of that chart. Because if we really want to reap the benefits of new technology, we have to really think of a vision of future financial markets. Because I'm not completely sure, and we haven't seen completely scaling cases of DLT for infrastructure that we already have today. So we really have to go beyond that and really ask ourselves, where do we want to put the use of this? So for us, wholesale CBDC is something that we see as part also of a new market infrastructure to evolve. Because the fundamental idea of DLT for us goes beyond making just the cash leg more efficient. Honestly, RTGS settlement is pretty efficient today already. So where is the case, right? So for us, it is about shaping a new financial market infrastructure on the basis of holistic platform with assets, cash, and information. And this is a very recent research topic. And to be clear, I think we need first clarity on where we want to go. So, vision always sounds like something very blurry sometime in the future. So you need to get there, right? So what has happened in the Eurosystem? I think a first step on the journey to a new financial architecture was actually the exploration phase that we were doing. Over 6 months, the Eurosystem tested 3 different solutions for the settlement of DLT-based applications in close collaboration with over 60 market participants. So that's what we did. That was basically our own prototyping, so to say. And what we did as Bundesbank, we actually started quite a bit earlier. We already investigated the possible application of DLT technology, and I think you will remember that, the Blockbuster project. And that was in 2016. So there is quite actually a history in working on these topics and trying to understand where we want to go. A second solution, and we had the trigger solution you're all aware of, and I see many participants, and thank you for trying it out so intensively. That was actually a great experience for us as well. And the second solution tested was the TIPS hashlink solution by Banca d'Italia, which is also based on a bridge that connects the DLT world with the Eurosystem's real-time payment system TIPS. And the third solution that was tested was the full DLT interoperability solution, DL3S, by Banque de France. And this solution actually allows the settlement of wholesale financial transactions in central bank money in a DLT-based account held on a DLT platform provided by the Eurosystem. See, that's the fact part. So the so-called trigger solution, like the ones developed by Bundesbank, they form a bridge. So how do they function actually? The Bundesbank's trigger solution connects DLT networks with the existing target services, the T2, which is, as I mentioned, a very proven RTGS, so real-time gross settlement system. And this solution translates information from the DLT into the RTGS-compatible payment messages. After the payment is executed, so what happens next? A confirmation is automatically sent to the DLT, where the original transaction is finalized, through, for example, the delivery of the securities if we're in a DVP case. The intermediary infrastructure acts as a trustee in that case, controlling the transaction process and ensuring the simultaneous settlement of goods and money through delivery versus payment. The trustee function could be fully automated technically through a smart contract functionality. So furthermore, the Bundesbank's trigger solution enables the connection of different DLT protocols and networks, right? So this is what we were aiming at. And I know I'm a bit technical right now, but I think it is very important when we talk about these topics that as much as we need a vision, we need to be clear on what we are doing today and how we're doing it. And I think what we have seen with the exploration phase, it was very important to have the market's commitment and willingness. And that is a big thank you on behalf of the Eurosystem here to the market to participate so actively and try out and work so closely together with us. Following the exploration phase, so what are we doing now? We learned a lot. And I think the whole point was, okay, are we done now? Have we learned enough? What's going on? And this is where what you see on this chart, the 2-track approach comes in. What we are doing is we will work in 2 streams. One, the track 1 is the short-term solution, as we would call it. And track 2 is the long-term. So what is the difference? Why do 2, right? I think there is a very simple answer to that. Time. If we want to make sure that we don't lose out on the momentum, we have to deliver something rather fast. Because what we know is that the market is moving on. You are continuing with your developments. And if we want to make sure that wholesale CBDC is the answer to what you're doing, then we need to provide something. So this is why we're talking about a track 1 and a short-term solution. Yet, I showed you the chart where you saw, on the right-hand side, the vision. We need to do our homework there as well, of course, right? We cannot simply stop and say, okay, we have one thing that figures a few, that solves a few of the issues that we have identified. We need something where we really think in terms of what should future market structure look like. And that's track 2. So what you will see is probably in the track 1, and I actually recommend, and it's not as dry as it sounds, reading the press release from the Eurosystem, because it explains actually very well how we are, from a governance perspective, are also going to go about it, right? How are we going to handle the process? For me, the biggest difference, if I look at track 1 and track 2, is that in track 1, you harness what you have learned. And I deliberately mentioned all 3 solutions, because I think there's merit in all 3 of them, and it is up to the Eurosystem to provide something where we say this is combining, if we combine it in a building block approach, this is the best that we can deliver right now, right? That would be an approach maybe a tiny bit untypical, not going through a year-long processes of defining all user requirements, etc., but rather working with what you have. Because what we have seen is how the market interacted with what we had offered through the 3 central banks. If we look, however, at the track 2, it is really about doing your homework in understanding, is market infrastructure going to change in the long term? Right? And how do we think it is going to change? Do we expect new players in the market, etc.? So there's a lot that we have to keep in mind when we're talking about track 2. And knowing that technology is never built in one day, we have to make sure that with track 1, we deliver rather quickly. And with track 2, we'll be very precise and discuss what we need and want. So what we need is for track 2, actually a deep analysis, right? And this is where we probably will be feeling very comfortable with as central banks when we go back to that. On the other hand, I feel, and that is what we have seen with many exchanges of you participating in the exploration phase. I think we got a good understanding how it worked, what worked well, what you liked, what didn't work well, where there is room for improvement. So I think we have a fairly good starting point. And for me, when I look at Europe in that regard, I think we were actually surprisingly ahead of things. That's not a standard for Europe to be at the innovative front, right? So let me come to some concluding remarks. The development of a new financial market infrastructure can be an important contribution to enhancing European capital market efficiency. And this could actually help, as I mentioned, integrate the current market fragmentation that we see. Resilience and autonomy are vital in the face of current geoeconomic fragmentation. And what we see, the trend of withdrawing from international cooperation, exemplified by the Trump administration's termination of all CBDC collaborations via executive order. I might want to repeat that actually. The termination of all CBDC collaborations via executive order. I think that was a very, very strong decision taken there. And what does it mean for us? How does it resonate with us? Well, for us it says now more than ever, the Eurosystem and Europe as a whole have the opportunity to take a leading role by presenting a united front in the spirit of European solidarity. The swift implementation of a productive wholesale CBDC solution is essential in order to maintain the relevance of the euro in the international monetary system and to secure its leadership. This is not just a technical topic. The euro is a relevant reserve currency, and its role and its strengths also determines how monetary policy can actually function within Europe, and we need it. And if we fail to do so, this could actually jeopardize the credibility and the reputation of the euro system. So actually, we feel quite pressured. And if you look at the recent Genius Act that aims to regulate US payment stablecoin industry, by setting, and they're very precise on setting clear licensing and supervisory requirements. It's balancing federal and state authority. It is light touch regulation to a certain extent. It is not passed yet, to be clear. It's as many things that we hear from across the Atlantic. It's something that is said, but it doesn't always get executed. But it's on the table, so could be done, right? So if passed, it could create a uniform regulatory framework for stablecoins and advance the role of digital assets in the US financial system. And that's actually the intention behind it, right? And while the impact on Europe is uncertain, a better regulated US stablecoin system could make US dollar-backed stablecoins more attractive internationally, outside of the US, even as a settlement asset. And I think that point makes very clear why we are concerned about that, right? It is essential that Europe develops an innovative and market-demanded wholesale CBD solution to maintain sovereignty and autonomy here. So Trump's withdrawal from international cooperation should not leave Europe disheartened. Pretty clear. I said it in the beginning. I'm optimistic. I think instead we should view it as a positive wake-up call and seize this opportunity to take meaningful action. At the Bundesbank, we certainly see this as a call to action, as confirmation that we should continue shaping the future of the euro. For us, it's pretty clear where we are heading. And it goes without saying that such a complex journey towards the introduction of the CBDC does not come without its fair share of challenges. So that's not going to be easy. But I believe we can overcome these challenges, individually and collectively. Thank you.
Thank you. Thank you, Alexandra, for this very insightful keynote. You definitely sparked some debates in the Telegram chat, which is exciting. You really activated the people. Sadly, there were no direct Slido questions a minute ago, but I am certain you will be approached here today by many people, which, dear audience, I encourage you to. I'm sure Alexandra is very open to that.
Absolutely.
Great. Thank you again. Before we continue with the program, I want to tell you here and everyone on the stream that the Innovation Room is now opening as well. Since I was already asked about its whereabouts, if you walk to the reception and you walk to the right side, straight behind the reception, there you will find a door to the Innovation Room and a red stairs which lead you up to another room that will open later on. If you're online and wonder how you can access it, the stream link is in the same email that this stream link was in. I hope you will find it. And now, continuing with our program, we've got our first panel coming up, and it's going to be a very good panel, I assume. It's on a little bit of a contrast. It's on the alternatives from the private sector, namely stablecoins and tokenized deposits. And I would like you to welcome Sonja Davidowicz from the IMF, Jens Paulsen from Deloitte, Alexander Höppner from AllUnity, Joachim Würmeling from ESMT Berlin, and Digital Euro Association's very own Lena Grale, who will moderate this panel. Enjoy.
In the order?
There's no specific order, but just leave the far right one empty.
Thank you for the great introduction, Marcel. I'm really excited to be chairing the very first panel of this year's Digital Euro Conference. My name is Lena, I'm a board member of the Digital Euro Association, and I'm joined with 4 excellent panelists. So as Marcel already introduced, we will be talking about private sector alternatives. We've already heard everything that the Euro system and the Bundesbank is doing, but the private sector isn't just sitting there and watching everything. They've been very, very active, and I'm sure we'll learn all about it now. Also, on the politics and regulation side, we've seen quite a few changes lately. There have been changes in US policies, or at least drafts to change things. Also regulation in the Euro system, with MiCAR having started recently. But I don't want to waste too much time just talking. I would like to hear more from the panelists. If you wouldn't mind, would you please introduce yourselves one by one and the company you're from? Jens, would you like to start? Just grab your microphone.
Sure. So Jens Paulsen, I'm working for Deloitte. I'm heading our digital assets and Web3 team for Deloitte Central Europe, where we are obviously working with financial institutions, with central banks on those topics. But personally, for me, it's when we look into those topics, always about where will we find economical value, but also value for the society. So this is actually what drives me now on this topic here.
Hi, thank you very much for the invitation, Lena. It's great to be here in person for the first time, so I'm super excited to be interacting with everyone live today. I'm Sonia Davidovich from the International Monetary Fund. I'm a senior digital expert there. In that capacity, we do a lot of economic research and analysis, but also capacity building and technical assistance for IMF member countries on all sorts of questions around CBDC, digital assets in general, and digital economy questions. I recently returned from a leave of absence, and I was at the BIS Innovation Hub Singapore Center. Before that, I was part of the Digital Euro investigation phase for about a year. But I've been most of my career with the IMF, so I'm excited to share some of the insights today in the panel.
Yeah, Alexandra, thank you very much for being here. I have the pleasure and honor to run Allunity, which is a company which is owned by DWS Galaxy Flow Traders, and we applied for an e-money institute license to list an e-money token. Doesn't it work? Now again? Yes. Nothing? Okay, I'll start again. I'll speed up. Alex Höppner, I have the pleasure and honor to run Allunity at a very exciting time, as Alex said already. The company is owned by DWS Galaxy and Flow Traders, and we applied for an e-money institute license to list an e-money token in Germany under BaFin regulation. The token, as soon as we get licensed, will be available on all relevant layer 1s and layer 2s, public and permissionless chains, so widely available globally. And we strongly believe in the security aspect, so we put the reserves cash only 100% on central bank account because we think that stability is key. And even if we come from the private sector, we must do as much as we can to come as close as we can to what is offered from the central bank service.
Thank you very much for having me. Jochen Würmeling from ESMT Berlin, a leading private business school. I'm a researcher there on digital finance, in particular on digital money. We are focusing very much on the B2B use cases, which I think is the future of digital money. And that's, of course, very interesting in this round because in B2B use cases, it's not necessarily do not need to be necessarily settled in central bank money. So here is, I think, a big use case. I'm also a lawyer at A&O Sherman, an international law firm here in Frankfurt. And I'm looking back to a long history in central bank finance, insurance, politics, and administration. Thank you very much for having me.
Thank you, everyone. So I'd like to start off this panel by clarifying the landscape a little bit. So we've already heard a lot about public digital money and what's on the market and what's being researched there. But what are the options when it comes to private sector initiatives? Jens, maybe starting with you, you're advising financial institutions. When it comes to regulatory questions, what do you think are the main differences between stablecoins, CBMT, and tokenized deposits? What is there to consider when thinking about those options?
Often we talk about risk in this perspective, but I would rather talk about the options. mean, the only real risk from my perspective for a financial institution is to not look into the space at all. That is true holds true for retail CBDC in the banking sector. It's a great opportunity to get back the interface from big tech. That holds true for big tech too. That's a great opportunity for them too. And this brings in competition also with the other forms of money that we talked about, digital money, that you are working on and others are working on. And competition is always great to make better solutions. So to what Alexandra said, I'm actually quite happy that we do have competition, as long as it leads to better solutions and not to getting so much friction in the system that we don't get a good solution here. So that is mainly the thing that we look into there. And then it's about the purpose of the different tools, because all of those have, from my perspective, a place, a good reasoning. There are different use cases that are tackled. Some are overlapping in some senses, but it's all there so far for a good reason from my perspective.
Maybe thinking about the purpose, Alex, you're currently building a stablecoin infrastructure. What are the advantages of a stablecoin? So why is it interesting to you?
I think we need to clarify a little bit of a religious thinking that is running around. I don't think it's an either or, it's an and. There is today a huge benefit and there's a market and there's a demand and a need for wholesale central bank money. And transporting that to the digital world is a natural must-have. So that is a given. Is a little bit different, my view is a little bit different when it comes to retail, to the retail side of it, because Alex rightfully said from my point of view that we need to be, let's say, independent from also all payment means that are currently US dominated. And that has a wide variety and it needs a wide variety and flexibility of the use cases. And my question mark is whether that can be fulfilled on the CBDC side. And there is the big use case, from my point of view, on stablecoins, because they are so flexible that technically speaking, you can use them on B2B side, you can use them on the B2C side, you can use them for global payments because the Eurozone doesn't stop at the border. If we want to do global transactions, then also what we use as a currency needs to be accepted globally by others. Will wholesale CBDCs? Yes. Retail CBDCs? Question mark. And this is exactly where stablecoins can fit in and offer that flexibility and availability on a global basis for internationals to come to Europe, from European citizens and corporates to go international.
So I already grasped, and Jens, you really said that, it's a risk for companies to not look into those tools and into those options. But Sonja, I would like to learn from you, what are risks for the financial market, for financial infrastructure, potentially impacts for the financial system that need to be considered?
Yes, well, it's a good question because in actuality, there's no perfect settlement asset. Like even when we speak about public money, there's the risks that are inherent to a CBDC, right? Like there's huge reputational damage potentially to the central bank. Adoption has been very low, especially for retail CBDC around the globe, and the lack of interoperability. I think for when we speak about stablecoins, the risks look a little different. So in essence, we can say that there's huge financial integrity concerns. The same compliance burden that applies to regulated financial institutions, deposit-taking institutions, are not, stablecoin issuers are typically not subject to, at least not in all jurisdictions. So that introduces a little bit of regulatory arbitrage. And we have seen from reports that stablecoins are used for illicit financial transactions. So I think there's going to be increasing pressure on stablecoin issuers to up their ante when it comes to compliance by design, or just increased compliance measures just to make sure that these type of transactions don't occur. There's also widespread concerns by central banks around the globe on the currency substitution, effects of currency substitutions. There's a lot of countries where macroeconomic fundamentals are weak, currencies have huge exchange rate pressures. In those instances, when stablecoin issuers offer their products, they're directly affecting the ability of the central banks to conduct their monetary policy and kind of counteract or have like effective instruments against those pressures that occur. So it's a huge concern, especially for emerging markets and developing economies, and we've heard that many times. So especially for stable coins that have the network effects that have the global reach, so to speak, it's something that central banks don't take lightly. And then finally, I would say that a lack of interoperability, I think that all like public and private sector settlement assets are marred by. Like we still see a lot of interoperability issues, not just vertically within the domestic financial systems, like with other banking or payment systems, but also horizontally when it comes to cross-border payment solution. Of course, stablecoins have been a lot faster in adopting solutions that scale across borders, more so than central bank digital currencies, but we do have to think seriously about how we will integrate with legacy payment systems because they're going to be here to stay for a while.
Thank you. And turning to you, Joachim, would you agree to the risks that Sonja just mentioned, or do you see them too? And maybe also a question for Alex. Sonja talked about potential illicit transactions happening with stablecoins. I could imagine you also have an opinion on that.
Well, no, I agree very much. Well, financial stability, of course, is based on the confidence of market participants in the system. And this confidence is, of course, assured by the state, by public institutions like banking supervisors, but also by the existence of public money. But also in the past, public money and private money existed in parallel. And the important thing is here that a right balance is found between public money and private money. And of course, private money with new functionalities, better money for the digital age, could potentially crowd out the public money. And that could bring the balance out of order and create a risk for financial stability. So if we could, well, if in the future digital money replicates to a certain extent the repetition of work between private and public money, then that's fine. But to achieve this, public money also needs to take the digital form.
Let me be a little bit provocative around that one. I think we are comparing apple to peaches because when we look at stablecoins, we all have in the back of our head Tether, and we should reflect how Tether became as big as Tether is today. And it's not the market we're targeting. It's just not. Yeah? And so saying, yeah, stablecoins are not the right means because they are not regulated or they're lacking this and this and this. Yes, by definition, because that was not the purpose. And when you look at what Tether is mainly doing today is banking the unbanked. And yes, you're right. It is mingling in the local, let's say, monetary flow. But the problem is the 1.7 billion who don't have access to bank accounts, they don't care. They can't pay their stuff. They need something, and Tether's there. And there's another 2 billion who are on a high inflation rate, and the central banks, sorry to say, they don't get it done. And so the way out for these people is just Tether. There is no alternative. Is there a better alternative possible? Absolutely. Yeah, and we should aim for that, absolutely. And a collectible push by the central banks is the answer to that, but we're not there yet. And so when we look at stablecoins by definition of the technology are not bad just because they are coming from a different background and they are used differently. I think we should embrace that and make it, and MiCAR is a perfect example. We have stability now, we have a regulatory framework, especially when it comes to KYC and AML. And for us doing that in Germany adds another level on top of that. And so I think we can address that. Now coming to the second part, and you know, that very often comes up, the illicit transactions. But guess what? Nobody cares that for the last 100 years we used US dollar. Who's complaining about US dollar? Who's restricting US dollar for terrorist financing? Nobody. And since we're talking digital, everybody goes gung-ho on, oh my God, can be used for illicit transactions. Well, yes, like every other currency before. So yes, we need to make sure that the rule book is correct, that it is ideally as restrictive as we can possibly be without strangling it. But yeah, whenever there's a currency, there's a potential for illicit transactions.
No, that's very true. My argument, though, is that, and you're right in that central banks have been very slow, and it's a very complicated and complex endeavor to issue, especially a retail CBDC. So I see the point, and then somebody stepped in to fill the market gap. Where I disagree, though, is where we see that, you know, the currency just takes over, so to speak, the economy, because I think it's not to be underestimated if the central bank loses its ability to conduct monetary policy. I mean, we see that when we have high inflationary pressures, all of a sudden the hands of the banks are tied. And while the consumer may not care immediately when they receive their remittances, it's great for from a financial inclusion aspect, but in the long term, the repercussions of high inflationary pressures or exchange rate pressures are devastating on the whole local economy, including those consumers that receive their remittances from overseas. So I wouldn't take that lightly, because there's a reason why central banks have monetary instruments at their disposal to be able to ease those pressures once they lose that ability, and that is very much the case for emerging markets and developing economies. I cannot emphasize that enough. It becomes very difficult to manage any of those pressures. So while probably, you know, lots of central banks, for example, have taken Libra a couple of years ago as an impetus to issue a central bank digital currency, we don't necessarily have the same thinking right now. This was years ago. But I do see the concern as a legitimate one as a policymakers who actually have the mandate of ensuring price stability, and in some countries even like a level of employment. So I wouldn't just discard that as the consumer doesn't care, because in the long term they will be affected by those pressures that arise from a currency substituting the local national currency.
This is why I said a little bit provocative on that one. And I think that when you look at the 1.7 and 2.7, there's several billions left, and they pretty much care. The question for me is the right answer to that, let's say, neglecting it and pushing it to the sideline, or is the right answer for a central bank to step in and say, hey, we take part of that, actually we step in, and for our point, then just making a weird, like, we just take a part of all unity and make sure it stays within the boundaries. So you can be inclusive, or you can just push it to the sideline. I'd say, let's make it inclusive.
And to that point, sorry, but that triggered some thoughts there. You talked about mandate also. So the question is also, where is the mandate of a central bank? It's stability, it's inclusivity. It's not about, it's probably also providing options in that sense to the other. I don't think that you have any interest in providing a means for illicit transactions, right? So, and this is also why, I mean, we always come with, either we try to forbid it, but the real answer is to set up good options, other options that can be used. And the other thing is set up a good rule and good framework in which you can operate in a legally, rightfully way. But the answer cannot be to try to forbid stuff. I mean, try to forbid unhosted wallets, which is technically, I mean, that's where it starts, right? That's where I always lose the path.
Just a cynical remark, the most prominent means of payment for illicit actions is central bank money, cash.
Yeah. Actually, a question has just popped up on Slido, a question from the audience. So someone said about those illicit transactions, so far they've mostly been made by like central bank money or with central bank money. Would a euro stablecoin even affect this? Would the illicit transactions even go up or down? I assume no. Do you have any other thoughts on that?
I think that generally speaking, when we talk about the rising of the digital economy, it is also substituting a lot of stuff which is more, let's say, offline right now. So I don't see that it is exploding in a sense. We're swapping. Right now we're just swapping. And that means for me, might be a little bit more, might be a little bit less. Overall, it will not change dramatically, depending on the rule book. So if we have a sound rule book, I think it will be literally the same. And actually programmable money, on which level it ever is structured, has the ability to actually prevent it even better than the classic currencies that we have, or currency means that we have. It will take some time because that comes at a cost of flexibility and availability. But I think ultimately it is the perfect means to actually prevent it. But we have to learn how to use it to not come to a conclusion that we strangled actually the market because we cannot find out what is really illicit and what not.
And we shouldn't focus, it sounds a bit odd, but we shouldn't focus too much on the illicit transactions, because while we're doing that, we might lose the opportunity to have this innovative platform actually to build solutions, to build new solutions. And so far, Europe has been surprisingly good in providing a framework or playground in which you can thrive and really build new solutions. If we now do what happens often in Europe and we pivot to the other side and say, oh, that there might be a problem, so let's forbid it and then let's talk about it for the next 10 years, then we really have an issue, because then we see the competition that Alexandra also pulled up, that we talked about in the preparation also, that we see from a political side, a political pressure that's coming up to Europe. And so that is really important. We should not lose that. And also you talked about adoption. Adoption rate is not so high yet, but we are also very, very early in the process. I mean, taking the wholesale CBDC trials as an example, that was, it's not meant as a critic, but that tool wasn't done yet at all. And still we dared to try it out, which is really great. And it showed the potential out in the market, and also the adoption on retail CBDC, when there is not so much yet to adopt. That's different for stablecoins in a bubble, to be honest also. But there's so much more to come, and we need to have this wiggle room to get there without being too much in boundaries.
Thank you, Jens, for already mentioning something that I wanted to talk about next, and that is the geopolitical aspects. So you already said we shouldn't think too much about potential flaws or drawbacks, but we should just get things started and figure a few other things, or like the details out on the way. So Alex, in her keynote earlier, she already started off the keynote by saying it's a little more political than we would usually expect from a central banker. And that is because it's maybe hard to not think about geopolitical aspects currently. What has happened in the US in the past weeks with several bill drafts on stablecoins, pushing stablecoins forward, and not like basically saying goodbye to a CBDC, to a dollar CBDC, is really interesting, and also should affect what we are doing in Europe. So maybe, Joachim, what do you think, how should Europe react currently? Like what should be a European response to what has been happening in the US lately?
Well, it's indeed very interesting that the last 3 months have shown that the digital euro is not just a new means of payment, but it's a geoeconomic and geopolitical European project. And that was made very clear by Alex this morning, and I agree to that. But when we want to use the digital euro as a tool in this new rivalry, we need to have very important features which are not foreseen yet. For instance, the exterritorial use of the digital euro is in the EU regulation is very restrictive. We must be much more open because only then we can strengthen the euro in the world, because if the digital euro or wholesale CBDC is not available in other countries, it makes no sense in this respect. And the second point I wanted to make is that it is not only a competition between US stablecoins and digital euro and euro stablecoins. It is also a competition between public and private money. And the US, by forbidding creating a digital dollar, is favoring only private money like stablecoins and cryptos, whereas the European way is a balance between public money, digital euro, wholesale CBDC, and stablecoins. And this is not only a theoretical differentiation, it is another balance in the global monetary system and the global financial system. And in my belief, the US strategy is a threat for monetary and financial stability of the world economy.
The US and USD denominated stablecoins largely dominate the stablecoin market already. Do you think what Europe has been doing lately, the MiCAR regulation, is a good response to that? Maybe a question to Alex or to whoever.
It's a little bit, once again, apples to peaches, because where does the US dollar dominance come from? It's tether, it's cross-border payments or remittance payments or banking the unbanked, and then it's crypto derivatives, which are mainly traded on Asian exchanges, so US dollar dominated. And beforehand, there was not really a need for a euro stablecoin because the euro stablecoin had no benefit in regards to US dollar stablecoin traded on these crypto exchanges. Now with MiCAR, I think we have a fantastic framework because we have in the law embedded anti-depegging. And that means that wherever I trade, it will not fall below €1 because if it falls below €1, we will all buy, we'll come back to the issuer, we get the euro. So it's a very, very, very stable coin. And that means that especially for large traders, be it now on crypto exchanges or classical exchanges when we talk to tokenized products, or if we talk to real economy corporates, they use the stablecoin. There is in the law embedded a stability factor. Now, yes, we still have to work on the framework to make it even more resilient. Central bank money is a means of investment which can help on that one. But I think now you have for the first time the regulatory framework that it makes a difference. But still today, stablecoins are mainly used on perpetual swaps traded on crypto exchanges in Asia. And this is why you don't see the pickup. But since the announcement, we for All Unity, we saw and we have experienced so many corporates calling us who thought about tokenization, who thought about using stablecoins of US issuers, and they're all ditching them. They all want a euro-only solution. And so there is a huge demand. We're early in the cycle, but there's a huge demand and a huge benefit.
Thank you. Sonja, turning to you. So when the US has announced their new pro-stablecoin push, ECB leaders, as Alex has already mentioned, were saying that's one more reason why we need to work on a retail CBDC, and we need to work on it even quicker and deliver results quickly. Do you think this is the right approach?
Well, I cannot really comment on whether right or wrong because that's ultimately subject to the policy objectives that each currency union or each country has in mind when they're issuing a retail CBDC. All I can say is that regardless of the policy objective, right, I think it's very important not to underestimate the complexity of the project. I mean, I'm just saying that because there's a whole lot more pressure on central banks because of the potential reputational damage that might incur to the lender of last resort, which is the economic function of the central bank in the currency union or in a country, to get it right. Stablecoin issuers have the luxury of failing and trying again and doing all sorts of funky stuff. Central banks cannot afford that, so they have to get it right from the first go. So the appetite for risk is very low. There's a risk-averse institution. So all I'm saying is, I guess, that it's important to keep that in mind because it cannot be just a reaction to the current political events or, just a knee-jerk, jump the gun, we need this quickly now. It doesn't work that way. These are complex projects that take years to make. They have to be coordinated across bodies, across the governments. In Europe, even more complicated with 19 central banks that are part of the euro system, and the legislation that is required to even enable the issuance of a digital euro, and then all sorts of things like offline privacy considerations, user experience when it comes to the app. I mean, one thing that people often forget is that central banks are not well-versed in product development, right? They're not like your average or typical product development, stablecoin issuer, but rather they have a more traditional mandate, so it gets even more complicated. So I would say it shouldn't be a knee-jerk reaction in responding to an event, but rather think it through, what are the exact policy objectives you're trying to achieve, and work towards it, and keep a focused mind on what is lying ahead, as opposed to responding to current political events, because it's as complicated as it can get. So involving any kind of external pressures from the outside makes it just more complicated and might risk like designing something that is not sustainable and viable for the future. So it's best to just not respond to events, but keep the eyes on the actual policy objectives.
But here comes.
Sorry, I think Joachim was first. He already gave me a little sign, and then
I just want to mention that here is a very strong financial stability issue as well. Of course, there's the innovation, there's the consumer, retail, but there's also financial stability issue, and Europe needs to make sure that the euro remains the monetary anchor of the financial system in Europe. And the monetary anchor function is not provided by cash or credit cards. The monetary anchor function is provided by the balance sheet of the central bank. It is the possibility of the banks to refinance them every day for whatever, how much money they want to need. And it's also that the payment system for wholesale transactions are settled in central bank money. So here is, let's say, the core of the function of public money. It's not that much affected by stable coins, but when a big country like the US wants to change that system, we need to make ourselves resilient against these changes, and this is exactly done by a speedy introduction of the wholesale CBDC.
Well, speedy introduction holds true for both wholesale and retail. So when the euro system is done and their work, the banks first start with their work, and ideally they start in parallel in some perspectives. But if we start, let's take retail. So in the end, we end with a euro system app. That's what we know. But then the banks need to start also to implement it there, and they need to go through all their processes down to mainframe in the end to see where it's affected, to rebuild it, to either clone what they do with cards right now, or to build something entirely new, embed that in the system, roll that out to the customers and explain it while we are having hopefully a huge marketing campaign, also to explain why there are now two balances. So there is a lot of work to do on that side. The same but applies also to the wholesale part. So if you look at the trials and how we need to work there, those are not embedded in integrated solutions yet. So key handling is done via email. Where does the wallet pop up? All those things that we have done with Murex and all those systems already done, but for tokenized assets, it's not there yet. It needs to be built and implemented and tested, and we need to set up the processes. So there is a long way to go. Not to be too pessimistic, but it takes a lot of time.
No, I agree with you wholeheartedly, especially when it comes to compliance. And this is one of the projects where I would agree with you as well, that technology can really push the envelope when it comes to using solutions that will help automate and streamline compliance related processes. One project I wanted to call in particular is Project Mandala, where we used multi-party computation, zero-knowledge proofs, while at the BIS Innovation Hub, to streamline and automate these compliance processes. But in the pre-validation phase, before the funds are even released, all these compliance checks are done off-chain, and then the proof of these checks is attached to the asset. And that's the beauty of using digital assets, because you can do all these sorts of things and be compliant by design as you're designing your product. And that applies to a CBDC, a tokenized asset, or a stablecoin. Really doesn't matter, because they're all subject to the same rules, especially when it comes to cross-border payments. So yes, on compliance, we have so much more work to do, and technology can be a good answer.
What you said is, and it's perfect hearing from Alex that on the wholesale side we are so fast, and I fully get the point why it is so complicated on the retail side. And that's actually why I push so hard for, in a good environment, and we can still work on that to further strengthen it, the stablecoin side. Because, and yes, Alex said it again, sorry, we're always referencing you, but that's a keynote beauty. Signing an executive order doesn't mean it's getting implemented. But if you assume it gets implemented, then we need to have, at the same point in time, an answer. Because we are not in a vacuum. Companies in Europe have transactions and they make business with US companies. If we don't have a digital answer, we have to use theirs or we won't do business with them. That means not only our payments are there, our identity is there too. So if we don't have an offer, a European offer, and that needs to be over the full chain, wholesale and stablecoins and deposit token and what have you, that then is the interface to the US side. So we keep our identity here and the payment transaction is swapped on the US side or Asia, then we will give all our credentials plus payments to the US side or China, whoever is driving that. And that needs to be prevented. And we can be extremely fast with stablecoins. And that's just the thing where I say, let's embrace it, let's work on it to make it even better, but let's embrace it because it can be there like in a few months.
Well, we need to be mindful of the time. We only have 4.5 minutes left. I want to talk about one question that came up on Slido. It's actually a quote from the Circle strategic officer who said CBDC in Europe is like trying to compete with internet by designing an intranet. Do we consider a global perspective designing CBDC, wholesale CBDC? Do you have a take on that?
Yeah, but this is only true for the retail euro.
It's actually talking about wholesale CBDC, but that's just the question.
But for the right here who can ask. There's a chair.
For the retail euro, it's true because it's a closed system, but the wholesale CBDC can be designed very openly, and that's what my demand was, to design it openly that it can be used worldwide.
Okay, so I see a lot of disagreement on the panel.
I mean, I think that what I said earlier is also applies to wholesale CBDC. We have to not just think about interconnecting wholesale CBDCs across borders, but also interconnecting with RTGS and other payment systems. I think it would be a missed opportunity. Like the Bundesbank trigger solution is a perfect example of how you can bridge the two worlds. BIS innovation hubs work really hard on coming up with projects that enable interoperability across wholesale CBDC systems, but also instant payment systems, because we cannot assume not every country has a wholesale CBDC in place, and they may not even have one for the foreseeable future. So we have to really expand our horizon on how we think about cross-border interlinkages.
I think that it points to a very important issue, and that's interoperability of stablecoins or to CBDC and reach beyond the border. And of course, the trigger solution has its limits at the boundaries of the target system. So it is not possible to use it beyond the Eurozone. So we indeed need the second step you pointed out, where more or less a tokenized digital euro, which can be used on blockchain everywhere.
Okay, to wrap up, quick questions for you, and I'm asking for quick answers. Jens, if regulators could get one thing right about digital money, mainly thinking about private digital money, what would it be?
Well, I mentioned that before, actually, setting a good playground that sets sound rules, but not limiting innovation too much.
Okay, similar question to you, Sonja. If regulators could get one thing right about private digital money?
I think this interoperability aspect in integrating payment solutions, because I don't think we are in competition between public and private money, but there will be use cases that both forms of money will hit. So we have to think creatively. What are those use cases? How can we interlink those payment systems? And how do we protect the consumer in providing a private solution that is safe and sound for everyone to use?
Alex, what is the biggest misconception about stablecoins that needs to be corrected?
Stablecoins are not crypto. They're still somehow deemed as crypto assets, and then I don't get a bank account, which is ridiculous. Stablecoins are not crypto.
I like this quick and concise answer. And Joachim, looking
Try my best.
Looking 5 years ahead, what will play the biggest role in financial markets? CBDC, CBMT, or stablecoins?
There will be a balance which will be made by the markets. My hope is that the balance between private money and public money will still allow that the financial system remains stable.
On point. Perfect. Thank you so much. I really enjoyed this discussion. And
Thank you.
Yeah.
Thank you.
Thank you, Lena. Thank you, Lena. Thanks to all of our dear panelists. I am very grateful that this panel outlined the spirit of today's conference, not only showing how the private sector can be complemented by the public sector, but also where they compete. Is my microphone on, by the way? Nobody hears me. That's a little bit sad, though. It is what it is. Oh, now I'm on. All right. Everybody stood up already. I already said my piece, to be honest. But I want to inform you very briefly that the roundtable room is now open with the discussion on markets on crypto assets regulation. You find it right next to the innovation room. Have a networking break. See you soon. All right, welcome back, everyone. I hope you had an exciting yet relaxing networking break. I've seen outside, it was full of debates, which is really exciting and in the spirit of this event today. I already announced that I'm not sure if everyone here heard me. The roundtable room is now open as well. It's up the red stairs right next to the innovation room, but please make sure to ask at the reception if the currently ongoing roundtable discussion is still accessible and open. All right, and I'm also very excited that we continue right away with advancing the digital euro. We have our next panel discussion coming up, and I am very pleased to welcome Clement Josiak, I hope I pronounced that correctly, Menno Broos, Atze Faas, Dr. Jan Rosam, Jan Haas, and our very own moderator, Anne-Sophie Gógl, to the stage. She just left the stage. I am sure she's coming back any second. But I take the extra time, or in the meantime, I want to take the time to thank our beloved sponsors who make this event possible. And I think I can take the freedom to, oh no, let's wait for everyone before you introduce yourselves. I think that makes it a little bit more rounded. Anne-Sophie, are you back in the room? Yeah, I think she's looking for the rest of the speakers. My suggestion would be, once Anne-Sophie is back, there she is, but she's not accompanied by the speakers. Once we are set up and ready, we will be back with you. And until then, we'll have a very brief 1 or 2 minute intermission. Don't go anywhere. We'll continue any second now. Sorry for the inconvenience, and thank you very much.
Hi, Jan. Hi, Jan. It's funny that there's two people named Jan, but it's not the same.
Yeah, hello everybody. Sorry for the little delay. Coffee breaks are always important for networking, but we still want to continue with our topics, and we have a very interesting one because it's called Advancing the Digital Euro, Building a Dynamic Ecosystem. We heard that the digital retail euro was not the most dynamic project in the past year. And I'm very happy to have the market participants, the central bank, and financial institutions here on stage to discuss how dynamic has been the digital retail euro actually, and how we can build the ecosystem we have been talking today and we have been heard today quite a lot. So I would like to the panelists to introduce themselves and to explain what dynamic role they have within this ecosystem and within the Digital Euro project. So we start with Menno, please.
Thank you. My name is Menno Broos. I'm the project lead Digital Euro at the Dutch Central Bank. So for me, it's a very dynamic project indeed. Yeah.
Thank you.
Hello, so Clement Josiak. I'm representing Worldline, which is a payment leader in Europe, which is really bridging gaps between merchant and banks in Europe. So really trying to bring the best payment methods for the merchant, but also helping the banks, of course, to work on this one. And here we are really supporting the ECB in shaping the payment industry, basically.
Yeah, so Jan Rosam, I'm a partner at EY, and I lead our digital payment practice in Europe. And yeah, we advise financial institutions, but also merchants and industry participants on digital payments, and this also includes the digital euro.
Good morning, everyone. Thank you for having me here. Vaas. I work for Eurocommerce as a payments advisor. I feel, as they say in Dutch, the strange duck in the pond because I'm representing merchants. Eurocommerce is the trade federation for retail and wholesale. So that's from your bakery around the corner, your small grocery shop, to the big brands like IKEA, Zara, and Inditex, you know, those kind of folks. And payments, of course, is a very important function within retail. Without that, we couldn't do business. So I'm covering from, let's say, cash to digital euro and representing, for instance, merchants in the rulebook development group and in the ERPB engagement sessions of the euro system.
Yeah, my name is Jannah. Also, thank you for having me here. I'm consultant at MSG for banking, and I'm leading the business area for digital money. And yeah, what are we doing? We support our clients in digital money projects in strategic decisions and also in the implementation. And related to the dynamic future, we try to help our customers to navigate in this dynamic landscape, but not only the digital euro, but all the digital money.
Project. Right, that's better. Right, so Menno, you said for you it's a very dynamic project. Since 3 months and the executive order of Trump, or has it been dynamic before, and what do you consider as dynamic?
Okay, so I think the executive order didn't change that much. It's more the overall unreliability of our US partners that has changed the dynamic in this project. So we heard from Alexandra Hachmeister that there's a very strong statement now from the Euro Summit last week that clearly gives more political support to the project, and I think that people there understand now that when it comes to payments in Europe, we don't have the cards to say it like Trump did. So we are very reliant on our US partners, and they are obviously acting strangely lately. So yes, the dynamic has changed. We've seen more support from the council side. So I think we will see lots of developments on the project in order to be ready if there's a political agreement in October. So the ECB is working very diligently on that. I think two aspects here. First is the European Parliament is still very uncertain, so we've seen very strong support, political support from the Council, but the other co-legislator is the European Parliament, and that's still, to me, a black box whether they also support the project. And secondly, if you talk about a dynamic ecosystem, like in the title of the panel, I think you also need to look at the private initiatives, and you need a private pan-European initiative next to the digital euro. So that's also one thing I wanted to say. Thanks.
Thank you. So now we are talking about the retail euro. What is about the retailer's perspective? Do you agree with Menno? Do you feel enough involved through the rulebook development group?
To answer your last question first, I think we are. I think the euro system and merchants realized that we are a little bit on our own, you know, having positive feelings, let's say, about the retail digital euro. You hear a lot of, you know, pushback from the political side, from the banks, private banks, and from you know, some members of the public. If you look at the Digital Euro LinkedIn page, it's always, you see 3 or 4 people, conspiracy theorists, I would call them, making all kinds of comments. But let's wind back a little bit. You know, as retail sector, we have been quite concerned with the lack of competition in European payments, driven by a strong position from American players, Visa, MasterCard in particular. And it's always, of course, the definition of market, that's the key question, but you see in the recent ECB report, you know, sort of confirmed that within card payments, Visa and MasterCard play a big role. Now, they're great companies with great products, but it leads to a situation where the cost of payment is only increasing, you know, helped by e-commerce in COVID times and the popularity of buy now, pay later. So we see the potential in the digital euro. We saw that already a couple of years ago. Look at our position paper from March last year. The potential of the digital euro to lower the average cost of payments. I'm saying the average. So, it's not to replace cards, it's not to replace buy now, pay later, it's not to replace cash, but just to have something on the lower end of the spectrum to help do that. Now, I'm saying it very carefully. We see the potential. So you hear a but is coming. So some of the buts are it needs to fit into our infrastructure as much as possible. And what we would hate to see is, like a parallel infrastructure and all kinds of complications from the back end, from the technical end, from the contractual end, from the financial end to implement it. So then came, of course, the, let's say, geopolitical situation, and there, all of a sudden, the resilience question, the autonomy question, boosts the whole conversation. So I would say it's more dynamic than ever, and we are really calling on the market participants, including the public bodies. The time to act is now, if it wasn't yesterday. If Mr. Trump would have, let's say, a bad moment, he could say, triple the fees, block a country, sanctions terrorists, his favorite words, and we would be basically screwed. Excuse my French. So I think we should act much faster. And one of the things that was mentioned by Cipollone in a call with merchant associations is actually, if you look at the retail digital euro, it's three pieces. It's the legislation, it's the infrastructure, and it's the product. Now, what about this infrastructure piece? If we were to come to a European road system, standard road system with signs and traffic lights and what have you, where public vehicles and private vehicles could drive on, that's the competitive space. You want a green vehicle, a big vehicle, whatever. So that would, in our mind, sort of, reap the benefits of the network effects, but still allow that competitive space. So wrapping up, we are seeing also these moves in the council, that it's moving in the right way. We're deeply involved in RDG and ERPB, as I mentioned. Indeed, I had the opportunity to meet with Navarrete, and he is very much in the area that the retail digital euro may threaten the financial stability. He's an ex-central banker, Bank of Spain. Spain and Portugal, when they joined the EU, they had, of course, the big benefit of joining a stable area. So he doesn't want to jeopardize that. My counter-argument would be, okay, but if the proportion of cash in the market is decreasing, there's a bigger reliance on private payment means, that is in itself also a form of instability, and banks could be then too big to fail. So I'm going to have this debate with him soon. I was supposed to meet him the day before yesterday. He couldn't make it, so more to follow on that area. I hope I have been able, now for something completely different, to give the retail perspective.
Thank you very much. Yeah, please, Jan.
Yeah, no, just want to add to this. So I think the merchants will love the digital euro because, as you mentioned, So and I think it's also important because we talk about the ecosystem, isn't it? So I mean, I argue that the acceptance of the digital euro will be mainly driven by the merchants, because as you rightly pointed out, it will be one of the cheapest form of payment. So therefore, I think it's also important for the ECB and the euro system to engage very actively with this group of participants. Otherwise, it will be a challenge to bring acceptance to digital euro. So therefore, I would argue we would need to see more of these type of engagements with merchants, large retailers, e-commerce companies, just to make sure that the digital euro is gaining traction in the ecosystem.
Yeah, very good point. Thank you. Now we have been talking about rulebook development group. We have been talking about infrastructure. I guess we are looking into one of the biggest IT projects in Europe right now. What are the challenges and how would you tackle them, Jan?
Thank you. I think we all agree that the digital euro is really one of the most ambitious IT projects in Europe, with a lot of opportunities, but also with a lot of challenges. And we need to overcome these challenges. And from my point of view, there are three main challenges. The one is more on the security level and the resilience. The other one is more on the infrastructure integration and the interoperability of the digital euro in the financial market. And the last one is the adaptation, also what you said, and you said also. Regarding the first one, the security topic, the digital euro platform needs to handle millions of transactions in 1 second by a high availability of the system with low latency. And it should be as reliable as cash. We need to make sure that we can pay at all times, also during cyber attacks, during power outages, or in geopolitical crises. And therefore, we need really to focus to build a resilient infrastructure where we tackle all these topics and we have the right security mechanisms, and should therefore also focus pretty much on the offline payment solution, as this is compared to other digital payment methods, other payment methods, is this the key difference? And so we really need a stable offline payment solution that really is capable that we can pay at all times. And related to the second point, to the infrastructure and the interoperability, it will be the digital euro will be a huge impact on the retail banks. So the central banks are building the platform, the infrastructure, but the retail banks need to integrate it into their systems. And therefore, it's really crucial to design the infrastructure that it's easy to implement, that it can be integrated into the core banking systems and also into the other payment methods and into the landscape without disrupting or to disturb the payment operations. I think that's really, really key. Otherwise, it will be a huge challenge. And therefore, it's also really important that the digital euro is also then integrated in all the other payment initiatives that we have on the market. You mentioned earlier all the stablecoins. We have Wholesale CBDC, we have AP with Euro, and we have all the other payment topics, all the rulebook changes, all the upcoming regulations. So it's really important to see it as a whole and to integrate it then in the roadmap, that we can make sure that we also are capable to implement it in Europe. Otherwise, I don't know if we have that much payment experts are not in Europe, so we are still a little bubble, and we need to make sure that we can also manage it. And related to the last point, it's what you also said, that the key is the adaptation. Without the widespread of the digital euro, it will not succeed, and business or also the end customer might hesitate to switch to the digital euro. And therefore, to handle that, we need to, the focus should be on the user experience, on the trust, and also on the right incentives. So we need to integrate the digital euro in the whole customer journey, into the online banking systems, that it's really easy to use, the onboarding is easy, and the payment is easy. It needs to be smooth and convenient for the customers. And the other point is trust. So that's a big topic. I think the most critics are from the end customer is related to privacy. So we need to make sure that we have a private, like a good private protection, a privacy protection implemented, and have a good balance between regulatory requirements for anti-financial fraud, for example, and the privacy topics. Where we should have maybe a two-tier model where you can say, okay, with low transactions, you have more privacy probably, and with higher volumes, we have more verifications, for example. And the last point is, I can just agree to the colleagues before, the incentive. The merchants should lead the topic, and we need to create the correct incentives for all the players in the market, from the end customers, for the merchants, and also for the retail banks, that we can have a new system that creates a win-win situation for everyone. And therefore, it's really important that
everyone works together. So the central banks with the merchants, with the end customers, and with the retail banks. And then I think we can handle these challenges, actually.
Thank you. So a smooth implementation would be helpful, I guess. Clément, what do you think about the IT project, the incentives, and the challenges around?
So I think a lot were said. Thank you, because I think you said so many things that you almost said everything. But I will still try to maybe to wrap up in a way, or to say from a different perspective. So I see a couple of indeed challenges. So I think Melo mentioned it on the legislative package. This is for sure one, but I will not come back to that. But this is for sure one that we should, of course, not forget. Then when it comes to the technological front, I think it was said a bit, but especially the offline is a key one, and we said it as a use case for sure. Maybe we'll come to that afterwards, but for sure from the technological standpoint, it's something that is requiring a lot of attention, which is the case, I think, today from the ECB. So that's one. Then if we look at the deployment side of it, I think we should also mention this as well, in terms of how you go to the market in a sense. I mean, is it like a big bang, or is it like a progressive one? Which I would more favor to go in a progressive way, of course, and not to try to do everything at the same time, which is for sure something that should be looked at, but also looking at the components on the market, like the POS or the ATM and all those things. This will have an impact, of course. So we need to consider all of this to avoid to really confuse everyone. And then maybe lastly, it's on the consumer side. I think you mentioned it a bit on the trust, for sure, but indeed for me, the consumer side of the thing is one of the most important ones, in fact, because you need to convince the consumer. And today, if you speak to anyone, I think in this room you should know what it is, of course, but if you speak to your belongings or anyone around you, they don't understand what it is. Let's face it. That's the reality of it. So you need to build the trust. You said it. I think it's very important. I think question around privacy for me is a very, very big question, but I know that the ECB, it's, I think, one of the top topics on their agenda, and I do believe that it's really being tackled today. So this is very important. But also on the adoption, we should also consider the way the payment methods are being provided today on the market. I mean, let's face it, you don't have the same, let's say, payment methods in the different markets. In some markets, you only have like Visa, MasterCard, are very, very strong. In some other markets, you have local payment method, which is already A2A payment method, which is very, very strong from the consumer perspective. So we should also be careful, I think, in the way we believe it's going to come to the market. It will not come in the same way everywhere. So we should have all of this in the perspective as well.
You both make it sound very easy. This is.
Thank you. Yeah.
Yeah, exactly. So I mean, so we estimate this to be in 6 to 7 billion investment in Europe. And I think first question is who's paying for that, and I think that is also a question which still needs to be answered. And then I think even if we have implemented all the stuff you already mentioned, then still banks cannot make money with it. So therefore banks need to think about, okay, what do we put on top of this to add additional services to make money with it? And that's also something which comes on top of all the stuff we have discussed. So I think it's really a challenging project, and so as you rightly said, I also hope for standardized solutions because I mean not every bank in Europe can afford these kind of big projects, so there needs to be some kind of easy implementation solutions, but for the moment at least they are not there yet.
So just to put that in perspective, 6 to 7 billion is what MasterCard and Visa make in 3 months. So it's really not that much if you want to invest in strategic autonomy for Europe.
To put it in even more perspective, 1 day of transaction in the retail sector is 1 billion. So, guys, 6 billion, whatever the number is peanuts compared to what we are, at risk of losing. 1 day the European economy is hurt is costing way more than that amount. 800 million for European defense. That's the kind of number. So 6 billion, with respect, is peanuts.
Thank you. And I would say all these payment methods are used because they are trusted. So we talked about trust, and if our consumer don't trust the retail euro, then it's not going to get anywhere. So in Europe, trust often comes with legislation. And so we are now jumping into the legislative proposal who's going to be decisive for the digital euro and the next steps for the ECB and for the whole further development, also for the rule book development group. It's a very important step because a lot of topics will be decided through legislation to then be implemented in the digital infrastructure. Now we have seen the legislative proposals here since a long time, 1.5 years, nothing happened. So, Jan, what would be your advice? Why are the participants not getting together, and how do we get all people together? How do we get dynamic in the process of the legislative proposal?
Wow, I'm not a political advisor. No, I think as you rightly pointed out, and as Alexandra Hachmeister said and Ulrich Binzal yesterday at the speech, so I mean the ECB made very clear, so there will be no implementation without the legislation. So I mean, current assumption is that, and we heard this again, October is the magic deadline. Of course, we have also people in Brussels, and we're very close to the legislation, and this seems to be ambitious. So what we are hearing is that this is the earliest state where we can get the legislation passed through to a number of reasons. But I mean, there are a couple of questions which, of course, need to be asked. And for example, I mean, not all of the European countries have adopted the euro. So I mean, it's of course a question. So why should they vote for the digital euro? And so therefore, I think there are some political questions which need to be answered. My perspective is the constitution of the European Parliament hasn't changed due to the European election, as this was a big discussion. So therefore, I think it will pass. And I personally agree with the statements Mrs. Hachmeister did earlier. So there's maybe even an urgency after the Trump administration to proceed more quickly. But of course, I mean, Brussels takes time, the process. Yeah? So I believe there is, all of the parties agreed there is we need to proceed. So I can't see that they will stop it. But still, I mean, even you mentioned that it's still open. And I think October is probably earliest, I would say.
Manu, what key points, key aspects do you see? What does need to be in the legislative proposal so that you can do your work?
Well, we were very happy with the legislative proposal as it came out from the Commission. I think what's necessary now is the autograph of the Parliament and the Council. So a lot has happened in the background. I think the Council is working very diligently on these key issues like holding limits, compensation. There's really some very relevant, for politicians, very relevant aspects to it. And at the same time, we won't sit on our hands, and we will work on technical aspects. So the Eurosystem is really working on how could this technically work out. We do that together with all parties involved in the rulebook development group and others. And obviously we need to, this phase was ended in October, so there was budget until October at the ECB to work on the current phase, which means we need a decision in October what we will do next. And I agree that we will likely not have a green light from Brussels. So that will probably mean we do a bit more experimentation and get the back end straightened out before and then wait until the green light will pass, hopefully next year.
Talking about experimentation, we were surprised by the announcement that you want to get involved into conditional payments within the retail euro, because it's not DLT based. Often we think about smart contracts when we think about conditional payments. And now we were looking at that RFP and at some hands-on use cases that might be presented through this experimentation phase. Why did you get engaged with conditional payments? Where does it come from? And what did you expect? And I don't know if you already saw some ideas, if you could already look at some ideas that have been handed in. And what was the initiative here behind?
So the conditional payments is not what is mentioned by some programmable payments. So the conditional payments is really how to trigger the payments initiation or the payment settlement because of a certain event that occurs. For instance, your monthly payment to Netflix that occurs on the 1st of each month. So it's not up to us to look at the use cases of these conditional payments. I think it's really up to us to make sure that the technical standards, the roads as they were called, will be ready for private initiatives to build this innovative layer on top of that. So I think the use cases should come from the people here on the panel and from other private parties, and it's for us to make sure that the technical architecture is ready to provide for those use cases.
So then I would like, yeah.
Yeah, maybe I can jump in there. So going back to the question around urgency, solving, let's say, the competition question as well as the resilience, our pushback would be to both politicians and the Euro system, simplify. Let's take a step back. Let's do the buy now, pay now kind of solution, the one-off payment first. Offline is a very important use case, but in our mind can come a little bit later because of the technical complexity around it. But let's get the, everyday spend, your groceries, your fuel, let's get that going. And then worry later about all the nice bells and whistles like conditional payments and recurring payments and pre-authorization and automatic refunding and that kind of stuff. So I get that the interest is there. Some of our members are very keen, the Amazons, the Netflix, the Spotifys of this world, of course, love that. The fuel companies, the whole pre-authorization aspect is important for unmanned fuel or unmanned electric vehicle charging. But let's get, for the consultants here in the room, the 80-20 rule, all familiar with it. With 20% of the effort, we can get 80% of the result. Let's get that in the books. Let's crawl and walk first before we start running into all this sophistication.
Okay, thank you. Is there a different opinion? Do we need exciting use cases in conditional payments to advance the digital euro, Jan?
I would agree with you, but I think it's a really good step to start an initiative like that, because the industry is often talking about conditional programmable payments, and as what we discussed before, it's important to encourage all the market participants also to test or at least to explore such use cases. And I don't know if they really will be exciting new use cases so that we really can say, okay, wow, I've never saw that before. But I think with possibilities like that we have a pre-authorized payment, that we can start a reservation and then we can trigger the payment, we have newer options during the payment flow. For example, that I can say in cases for pay-per-use, for example, I can just pre-authorize my payment and then the system around can trigger the payment just because I did it already. And then I can really pay just as I use the services. And also the classical use cases like payment versus delivery, for example, so that I don't have the risk that I paid something and I don't know if I get the delivery. So I can create a reservation and then the trigger will come when I signed the delivery, so that I can say to the postman, okay, I got it. And I think that these are not really exciting use cases, but I think it's our important use cases because it makes payment easier, and I think we all agree payment is a super exciting topic and is really, really important, but it should be somehow in the background, and the user should not recognize that I pay actually, and that's why I see it's really important to have that use cases or that project, this initiative.
Yes, I mean, first of all, I think it's great that the ECB so early on started this working group to bring people together from the market to really think about innovative use cases. I think, and I just heard here from some people, there's really progress in these working groups. So therefore, I think this is great. And I think this has been one comment from a lot of people on what is the use case. So, but funnily, I mean, some of you may have seen the CBDC talk from John Kiff yesterday. So I don't know if he's in the room. So he talks about the question like, do we want this, I think he calls it Death Star CBDC, or do we want to have a specific use case driven CBDC? And I think the Digital Euro Initiative, it's what he's called the Death Star Initiative. So basically, it aims to solve all the topics at the same time. So, and it's explicitly not saying that we only want to have a particular use case, and therefore it will be challenging what you said to say, okay, let's start with isolated use cases before we bring in everything. So I think they ECB set the expectation already in saying, okay, it should be used on point of sales, in e-commerce, and all of these things. So it will be interesting to see how the rollout works. Brings us back to our ecosystem. So because I think there will be a lot of work need to be done by the national central banks, by the countries on rolling it out in different jurisdictions. And so yeah, it will be interesting to see how the rollout really works.
Yeah, Clément, please, first.
Just reacting on also on what you said. I think you're right. ECB says that it's for everything. But still, I think what is being done with this experimentation is to allow the market to come in and to take it for himself. Because otherwise, it's always the central bank that will try to push something. And still, in the end, I may be wrong, but we might see specific use case to be pushed, because then you prove that it works, that it brings some value, then you have the also consumer understanding, and then you can go further and bring some use case. So I think it's at least interesting from this perspective. As you mentioned offline, and I think it's clearly, we speak about use case, but clearly offline is very unique, right? You don't have things like that existing on the market. It's very technological, very difficult to do, I would say this way, for sure, but I think it's a very, very nice one. I think you mentioned also the day-to-day payment. I would really agree with this one. I see a lot of situations, like, I'm from France, and in France, I'm used to go every week to an open-air market, where I do buy my vegetables. Honestly, more than half of the payments are done by cash here. Some are getting to be done by cards, but you see the reluctance from the merchant, by the way, using that. And this use case is very interesting on this one. You would have the chariot who could very easily, tap and go. I think this one is very interesting. And maybe taking one on the conditional payment, I don't think it's a secret, by the way. But if you look at the kids, I think there's a lot to be done there. Wallet for kids, I think nothing really exists on the market, even though I see some startups or fintechs trying to step in. But there is a pain from the parents. I am a parent. There is a pain to help your your children growing and giving them what they need to have at the right age. I think it's something very important. And maybe to conclude on my side, I think I would like to try to use an analogy with the mobile phone, in the sense of, the digital euro, we should see that as, and Menno, you would confirm or not, by the way, we should see that as the operating system, of the payment. ECB is not there to make everything for the consumer at the end. They are not there to make the apps for the consumers. They are not there for everything. They are there to provide, let's say, the foundation, the rail, basically, to make it happen. And that's the private sector, but also public sector, to be able to be there and to create those apps for the market.
Atze, you wanted to add?
Yeah, great points. So interesting, this Death Star analogy, because I usually say, and Menno, you know this, let's not build a space rocket where we need a passenger vehicle or maybe even a bicycle to start with. To your point, Clément, merchants are the interface to consumers, and I hear everybody who is saying, and it's in my family and friends as well, why do I need this? So I think we need to be very simple and clear from the beginning. It's the digital form of cash, full stop. Let's get people on board, let's get people using it. It won't reach 100% market penetration, it will not be zero either. So maybe 10%, 20%, let's say, in the payment mix. Then, consumers getting used to it, they understand it better. There needs to be some action, like was done with the introduction of the physical euros. And then, gradually we see what works and what doesn't work in this experimentation kind of mindset. And then you build, from that strength. And that could really set Europe apart from the rest of the world.
Yeah, I agree with that. So we had a prep call actually last week, and where we both agreed that if you're designing public money, you should stay very close to what you already have, which is cash. And I think the reason why we cannot focus this European project, the reason why we cannot focus the digital euro is because the starting points of all the countries are very different. So if you look at Germany, for instance, and many of you know, they don't need a second life for cash, because cash is very much still used here. Germany wants to have an alternative to PayPal because they don't have an e-commerce solution. So obviously, if you're then designing a European project, some of you might know how this Euro system then works, then this is added to the mix. So doing everything is basically the lowest common denominator here. And that's too bad, because I think the project could use a bit more focus. I agree there. To me, cash would be a very logical starting point. So you would start with low limits, separate app, markets, maybe public transport, and take it from there. And then you would at the same time give room to private initiatives to work on parallel. And there is one other thing where the digital euro would then help, and that would be by opening up these standards, you could say the exits of the highway, where Europe now is not in control, which is the seat-based standards in the terminals, and I don't know what, it's getting very technical if you start with that, but so yes, I would agree with having a more focused approach on the digital euro project, but at the same time you should look at what standards need to be broken up to really make sure that European players can compete there.
Thank you. I would like to open up now to the audience. Do we have questions from Slido to address from our online community? I don't know. Maybe we open up first on site. Is there any question?
My question is going to be, what Europe is going to do with SEFA? SEFA is under euro. And when we use CBDC, we're going to use local money to do transaction. What solutions you guys going to do for us? 170 million.
Sorry, the CFA, the African, Central African franc.
Of 8 countries, and we're using SEFA. A SEFA is under euro. And when you use CBDC, you got to use local money to do transaction. If you see the project Nexus, the project Embridge, all is going to be about local money. We have our local money, and our local money is under euro. How are we going to do transaction? 170 million.
So I think it was already mentioned, the extraterritorial use of the digital euro, which is currently very limited. So with the current proposal, you wouldn't be able to do a lot of transactions outside of Europe unless certain merchants would be onboarded by an acquirer, European acquirer.
We're not going to buy food? We're not going to buy food? How are we going to do? If there's a digital euro, and the digital euro is going to the KYC, and we don't have all this KYC infrastructure, we don't have no MiCAR, what are we going to do us? 170 million. I do my doctorate about CBDC. I work in CBDC for 6 years now. Now I'm gonna ask him, we're part of the world. What we gonna do? We're not gonna eat?
Well, I mean, you're really in the same boat as Europe. You need strategic autonomy and your homegrown initiatives in order to.
The thing is, we do the initiative when we're not part. You guys do the initiative when we're not part. We need to blame the French. We need to blame the Europe. Because that's the French who bring it to the euro.
I think we shouldn't blame anyone here.
we need to eat.
Yeah.
I think there's a wider question here, and one that needs to be addressed at some point in time is the interoperability with other parts of the world, but even within Europe, with non-euro countries. I know the Swedish e-krona project is, and even the digital pound. They're sort of, seeing that the ECB, the euro system, is quite ahead in, development. But it is an interesting question. Not sure, Menno, whether you have any thoughts on it. If I would be the Swedish central bank and I see Swedish people using digital euro in Swedish stores, what does that mean for my Central Bank of Sweden currency monetary authority, And, by extension, if you would take that into outside of the EU, into Africa, then, as an African, let's say, a central bank, I would say, what are you doing here, please? And I know there's legislative proposals around it, so maybe you can elaborate on that.
Yeah, well, so currently we only foresee the use in the EU. That's very clear from the legislation. But what you could do is just copy the whole technical platform and bring it outside. I mean, and you can add bridges to that. I think what we're doing with TIPS now. So TIPS is our instant payment settlement developed by the Eurosystem. That's also now being copied to go to I think some countries like.
Can we do like
Bosnia and?
Can we do like a stable coins in Africa, linked to the digital euro?
I'm no expert there. Sorry.
No, I'm asking. There's a way we can do stable coins in our local money and link to the euro, because you guys already have MiCAR. If you have all complained about the GASP, can we do a stable coins in Africa, linked to the euro? And we can be part of the digital euro.
I think that's a good question. That I think so. As Menno said, that the first step is that the digital euro must first of all work in Europe. But there are a lot of other initiatives in stablecoin areas, and also like with you mentioned Embridge and so on. So there are a lot of initiatives to try to connect local CBDC systems, local payment systems with other payment systems, and I think that's way so looking more into the future. But it is a topic which is discussed in the industry. How can we connect different? If it's connected into a CBDC system, like digital euro, I don't know. But I think there are a lot of initiatives. They are looking exactly in situations like that.
Do we have time for another question?
Yes, we do.
It's a question about adoption of retail CBDC in euro, of a digital euro. Clément mentioned, you guys talked about adoption. How are you guys going to drive adoption, and how are you going to convince the users, the consumers? What are the key arguments?
I think there are a lot of key arguments. I think one really important topic is what I said earlier is, and what you also said, we need to focus on the end customer, and we need to make sure that there is the best convenient, and we have a smooth integrated system that it's not like sorry to say, more a German or European app that it's not really sexy. It should be really, it needs to be state of the art and like the best usability. It needs to be better than PayPal, and it needs to be better than other systems. And then I think that this one point that you can then also reach the widespread of the digital euro and the adoption. And the other point is to integrate all the merchants. So the merchants, they have like really a benefit also then of the digital euro. And when they drive the digital euro, then I think also everyone else, when we're at the point of sale and we see, okay, I can pay with digital euro, and maybe the merchants also incentive is a little bit because it's cheaper than maybe MasterCard or Visa, then I think the adoption will be easier, actually.
It will. However, there's always a but. One of the things that merchants will need to influence consumers into using digital euro, and instant payments for that matter, is the removal of a surcharging ban. If you have a surcharging ban as a merchant, you have to apply sort of a weighted average of your payment methods in your end consumer price. That means you cannot use price as a steering instrument to seduce consumers to use digital euro, or and if they want to use buy now pay later, okay, you pay a little surcharge for that. That's fair because you get extra value out of it. So that's a key point. But I think what is going to be crucial in the communication is this European autonomy question, and that is hard to explain to the average person in the street, but it's going to be crucial. And actually, Mr. Trump is helping us there. And it's a lot of focus is on how private digital euro will be. So the ECB is not interested on how many hamburgers is buying. But the other point is the data stays in Europe. With Visa, MasterCard, and so on data, they are American companies. The American authorities have the right, I don't know if they use it, to access that data. That money that is going into American providers is ending up in the US. We don't know how much of that is going to be invested back in Europe. So if we get this, support Europe, pay European thinking going, that will help a long way in convincing consumers.
One last sentence, time is running.
It's not working anymore. Sorry, thank you. Yeah, maybe just to go on the consumer side again. I think what you're doing with the conditional payment use case is again a way to get the use case. I'm going to come back to the use case. If you find a way to demonstrate by the usage the value of it, I think it's going to be strong because we will try, of course, to do many things around protection of data and all those things. We must do that, and this is key. You're right. Merchant will have, this is right, but many consumers will just look at, okay, but I have my wallet, what I'm using today, why should I care? And if you really find use case to really demonstrate the interest of it, I think it's going to help a lot. And even potentially going to incentive. I think we should also recognize that. Incentive for the consumers. I mean, when you are doing some type of very specific use case, you can get something back. It's also a way to get people on board.
Thank you. To sum up, I would like to say we have been criticizing quite a long time that market participants are not enough involved in the process of the digital retail euro. I think we have seen today that this has been changed, that we have a big involvement of all kinds of market participants, and that it's how we build up a dynamic ecosystem. Thank you very much.
Thank you.
Thank you.
Thank you, Anne-Sophie, and thank you to all of our panelists. I think that was indeed a dynamic discussion with an involved audience. Thank you very much for that as well. Now, I personally appreciate that we revived the question of do we need the Death Star digital currency, or isn't a far more specialized one more useful and less invasive? Now we talked about several regions, right? We talked about the EU, we talked about the US, we even talked about Africa. But there is another neighbor that I would love to pan the view to, and that is Switzerland. And I would like you to, I would like you to give a warm round of applause to David Newns. He is head of SIX Digital Exchange, and he will speak on Switzerland's leading role in the digital token ecosystem. Please give a warm round of applause to David. I don't see David, though. Oh, I'm so sorry. Wow, people are so sneaky lately. I'm so sorry. Welcome.
Thank you.
And I hand over to you.
Thank you very much indeed. And it's a great pleasure to be here today. So thank you very much indeed for the Digital Euro Conference for having me speak. And I'm really looking forward to going through some of the progress that we've been making in Switzerland with you guys, as I think it's certainly worth sharing some of our understanding and what we've managed to achieve. So I'll start with a show of hands, because I have been told that one of the ways you do a speech, you try and engage the audience and make them wake up and pay attention to you. So I was going to ask, so hands up if you think that in a developed Western economy there's actually a wholesale CBDC somewhere in production. So it's a meager show of hands, because the answer is there is one, and it's in Switzerland, and we've been in production now as a result of what's called the Project Helvetia pilot. We've been in production with wholesale CBDC since December of 2023, and we've issued something in the region of almost £1 billion worth of bonds at this point in time. So I wanted to share with you how we got there, because although Switzerland is not the size of Europe when it comes to the economy and population and so on, I think that it more than makes up for that in terms of innovation and forward thinking and some of the sort of structural aspects of the country which has enabled us to get to where we are today. So first of all, who do I work for? What do I do? I work for SIX Digital Exchange. I'm the head of SIX Digital Exchange. I've been on board since October of 2021. It's a wholly owned business of SIX Group, and SIX is the financial market infrastructure provider for Switzerland. Now, Switzerland's a little different to other countries in that a lot of the activities, a lot of the financial market infrastructure, specifically things like the RTGS system, so the interbank clearing system, and the repo platform are actually run by, from a technical perspective, they're run by SIX on behalf of the SNB. The SNB operates them, and that's kind of an unusual situation. There's a lot of public-private partnership that goes on between the Swiss National Bank and the FMI. And as a result of that, there has been this opportunity to do a lot of orchestration around innovation between the Swiss National Bank and the financial market infrastructure provider and the market participants. So basically leveraging SDX as a vehicle for orchestrating the transformation of digital assets within the Swiss financial center. And that's enabled us to achieve a substantial number of industry firsts. So SDX became the first regulated, first FMI to be granted a license to run a CSD on a blockchain infrastructure anywhere in the world. We were the first FMI to issue a digital bond on regulated blockchain infrastructure, the first to issue a regulated, issue a digital equity, and ultimately the first to settle in wholesale CBDC on regulated blockchain. So, and why do we get there, and how do we get there in addition to this relationship that we have with the Swiss National Bank? I think it's also, as a lot of people I'm sure here are aware, Switzerland has a long history, as far as that can be the case in digital assets, of providing a very supportive environment for crypto. We have the Crypto Valley. There's a lot of foundations that are set up in Switzerland. So it's from a regulatory perspective, and ultimately that's then led to having a big pool of talent. That's meant that it's really enabled it to achieve a substantial amount that we could then bring over from that crypto space into the traditional financial market space and move the needle really when it came to adoption. So where we are today is we have 15 or so participants onboarded onto our central securities depository, which is more than, we're heading in the right direction. That's more than about 10% of what we have on the traditional CSD. We're currently onboarding an additional 5 at this point in time, so it's accelerating. So you can see the direction of travel that we're going in. And they're all the names you'd expect to see in Switzerland, but we're also now seeing our first international issuers coming on board. So we have Commerzbank joined the platform last year, and as part of the CBDC initiative as well. And we'll see before the end of the year, well, before the end of the half year this year, our first American bank coming on board. And we have also our first Asian entity came onto the platform last year, which is SBI Digital Markets. As I said, we have about 1.5 billion francs of bonds having been issued so far. We have another one being settled tomorrow, which will bring us up to be above 1.6, almost 1.7. And then we have these 4 critical wholesale CBDC projects that we've been involved in with the Swiss National Bank. So what have we been doing to kind of get there? What have we been building to actually get to this point in time? And there's been a lot of talk about, I think, in the abstract around the sort of the components that are required to achieve this sort of the building out of this financial architecture for digital capital markets. So I would start with what we had in Switzerland for many years, which was clear and effective digital securities regulation. So we're very fortunate that the regulation that was already in place in Switzerland was actually very supportive of digital ledger or blockchain-based technology providing the same sort of functionality as we had within the traditional, or the same legal kind of constructs as we have within the traditional infrastructure. So we started with already having that sort of substructure. And what we're talking about here is how do I get from, how do I actually take advantage ultimately of the innovation that the blockchain represents? And how do I get to the point where I can actually deliver services in the traditional financial space that can depend upon that blockchain and ultimately be able to benefit from the inherent benefits, the technology sort of differentiation that you get with blockchain that we see so much happening in the crypto space. So we see DeFi, we see sort of we see sort of instantaneous mobilization of collateral and so on. How do we enable that? And that's a step that requires a substantial amount of foundational building, of substructure building before we get to that point in time. So we had in Switzerland this clear and effective digital securities regulation that enabled us then to get a license to operate a blockchain, which would then facilitate or provide certain services which our members could then take advantage of, and in a way that they knew that they were going to be in regulatory compliance around. Now, as has come up a number of times in previous conversations today, the wholesale CBDC component, we believe, and certainly that's the result of our experience, is a foundational piece of financial market infrastructure for us. In the context of financial market infrastructure, it's a bit different in blockchain than it is in traditional finance. In traditional finance, the separation of the payment leg in terms of systems and operations and services is a very distinctive aspect of traditional finance. In the case of blockchain, it becomes an integral part of the infrastructure because you need to really take advantage of the opportunity that blockchain represents, you need to have the settlement asset on the same ledger as your investment asset. Once you have that in place, then you can do a whole bunch of really exciting things around programmability, instant settlement or precision settlement, composability, and so on and so on and so on, that you can kind of see a hint of if you have a trigger mechanism, but you can't really take advantage of the full functionality unless you have that ability to swap a settlement asset with the investment asset on the same ledger. And so we very early on determined that was going to be a real prerequisite for the overall architecture that we needed to build. And then on top of that, a critical mass of participants is clearly important. It's just a Metcalfe's law type analogy where you need to get participants onto your blockchain so that services that you're providing or issuances that are being made into that environment can benefit an ever increasing number of participants. And then once you've reached that level, in fact, I'll go back to one. Then we have interoperability, which is also really key. So interoperability with traditional market infrastructure. And I have concrete examples of how this has worked in our evolution. Standing this up as a separate piece of infrastructure outside of the traditional infrastructure causes all sorts of problems especially around sort of cold start issues, actually getting benefits to be delivered to participants. So interoperability, I think, with traditional market infrastructure is not just required to get moving in the first place, but I think ultimately to be able to deliver services to customers within the space, you need to be able to do that in a way that is relatively low friction. We're not talking about a set of participants when we're talking about traditional financial market participants who are very keen on completely new services, completely new interfaces, having to look at new work streams to actually support innovation. They want to be able to have delivered through the same interfaces, the same services that they are used to receiving services via, innovation that's supported by this technology. And that interoperability, therefore, becomes of crucial importance. And then, as I mentioned, a critical mass of participants on board. And at that point, now you can begin, and it's after all of those previous steps, now you can begin to actually deliver services where the underlying blockchain is really able to be, the benefits that are intrinsic to that technology can be delivered. Because without having everything underneath it, you can't really get there. You can't get, so at that point, now you've got the ability to deliver collateral management services, fractionalization and so on. And that's very much where we are now with SDX. Having built all the substructure, we're now at the point where we can deliver services which are outcompete the traditional. But without having got there in the first place, then you really are unable to actually go forwards with the new functionality. So drilling down a bit on the CBDC side of things. So we've been involved with the Swiss National Bank in two projects, one of which has been a 5-year-long project now, which is Helvetia, and the other one, which is Project Euro. So Helvetia is all around tokenizing central bank digital currency. The initial project, the phase 1 was technically, could we do it? So just using the SDX blockchain to tokenize central bank money in a test environment. In phase 2, we also involved a whole slew of market participants. And at the end of phase 2, we proved that we could, and the SMB could, operationally and legally and technically, and with full integration to the bank's core banking systems, tokenize central bank money and settle transactions, again, in a test environment. Then the project Helvetia phase 3 was where we actually began to settle wholesale CBDC in production. And as of December of last year, we've settled something in the region of £1 billion worth of bonds so far in wholesale CBDC, and that is the sort of standard mechanism by which we now carry out settlement on the SDX blockchain. It's called the Helvetia pilot. That's the sort of internal process that the SMB goes through as it heads towards this sort of full production. And at this point in time, we are intending to be able to support everything that we can do on CBDC that we could do with a traditional central bank money, but it's going to take, obviously, it's a multi-phase approach. It takes quite a lot of time. And as you go along, it's already around learning. And this is very much the sort of experience that we've had. So we've been, over time, evolving our platform. And the way that we have evolved is through issuance of bonds. So I don't think that bonds themselves are the most exciting instrument in the world for tokenization, but there are a lot of them. And they do keep coming, which is very helpful. So it acts a bit like ammunition to help you innovate. So in November of 2021, we issued our first bond, which was actually SIX's own bond. And although it was very innovative and revolutionary and groundbreaking, and we got awards and stuff, which was fantastic, it was by no means the sort of the end of the story. It was really sort of opened up the possibility of really understanding what we'd need to actually scale this up. So it was a dual tranche bond. It had a physical component as well as a traditional component. The interoperability between those two was manual. If you wanted to move from digital to traditional, it actually took more than a day, so not particularly elegant from that perspective. And 2 ISINs, and therefore a bit of a pain for the investor community to handle, for treasuries to handle. But off the back of it, we had a whole slew of requirements that came from our members, and our initial members being UBS, Credit Suisse, and ZKB, about what would be required to scale up this solution or to scale up the offering. And as we went along, we basically kind of checked off all the boxes that our members had put down as being prerequisites for scaling. And the first one was interoperability with the traditional infrastructure. So we only had 3 members on the platform that represented something around 65, 70% of the investor community in Switzerland. So it meant that as an issuer, you were very restricted in terms of who you were going to have on the other side of your issuance, the attractiveness of your issuance. And that would affect the price, and therefore, from a fiduciary perspective, was going to be an impediment to actually getting new issuances onto the platform. So we built a bridge between the SDX CSD and the traditional CSD, so that when you issued on SDX onto the blockchain, you could also trade and settle that on the traditional infrastructure. So it's a bridge between SDX and 6 SIS, the traditional CSD. So again, another industry first, so a bond that could be issued on blockchain, but could be traded and settled on traditional FMI. That alone enabled us to get a bond issuance out of UBS. So that was one of the largest ones we've done, which is 375 million in November of 2022. The bond is also dual listed, so you can both trade and settle it. You can trade it on SDX, you can trade it on 6SIS. Also nicely won some awards. But the other piece that was really critical for that was that we went through a long process with Moody's to establish that there was no impact on the risk rating of the bonds that were being issued, so that when they were issued on blockchain versus traditional infrastructure, which meant that, again, from the perspective of this being our equivalent to traditional, we checked that box as well. But the real challenge that we had was that was sort of slightly beyond our control, was that we needed to have a way to address the restrictions that we had on the cash leg. So prior to the CBDC being available on SDX, you as a participant could deposit Swiss francs with SDX. We had an account at the Swiss National Bank, and we issued tokenized Swiss francs to enable you then to settle transactions on the blockchain. The challenge with that is that, and it's a challenge with all forms of private money, and why CBDCs are critical to the scaling up of this infrastructure, is that that is commercial bank money. You have a risk with the issuer, which is SDX in that instance, even though we have our account at the SNB. We had a number of options we looked at to try and mitigate that risk, which was, for instance, bankruptcy, remote setup, and so on. There was nothing that we could identify that would eliminate both settlement risk, with counterparty risk, and liquidity risk. So if we had a bankruptcy remote vehicle, that meant that you would eventually get your cash back in the event that we as SDX went bankrupt. But in the intervening period, you could not detokenize. You couldn't get access to your liquidity. So you always had a liquidity risk. So this is why we believe very strongly that at the base of this entire infrastructure that we're talking about in the financial markets context, you need to have a riskless settlement asset, because otherwise you'll have an inherent counterparty or liquidity risk built into it. And that's what comes with, unfortunately, every other form of tokenized money that exists out there, whether it's a stable coin or a deposit token or a synthetic CBDC. So it was only as a result of, I think, the ambition of the Swiss National Bank that we managed to get that particular problem sorted, and actually enabled the tokenization of central bank money on chain, and now have what essentially is an equivalent financial market infrastructure to what you have today. And going back to my previous slide, will then enable us as a capital market participants to adopt this technology in the most sort of effective way possible. I think that my hat goes off to the Swiss National Bank for their ambition in this space, and that certainly paved the way for other projects that we're involved in, such as Project Agora, which again is taking a lot of the learnings that we have had through Project Helvetia and what we've done with SDX into a broader context where we're looking at tokenized central bank money for cross-border as well. But it's enabled us really to get to where we are today, and as I said before, that is the substructure that then enables us to really begin to explore the superstructure, which is where the benefits of this technology ultimately can be realized. And those benefits are what we've been targeting all along. So I have 23 seconds left. So I'll thank you all very, very much indeed for your attention and the opportunity to speak to you about this. Thank you.
Thank you, David. I wish we would have time for questions, because even I noted down some. But you will be around the whole day.
I'll be outside, yes, absolutely.
All right. So if you also have questions for David, approach him directly. Thank you very much for being with us. Between you and the lunch break, there's one more panel, but trust me, it will be worth it. I would like first the topic, lessons from wholesale CBDC trials. And for that, I would like to welcome Anne-Sophie from the Digital Euro Association and her esteemed panelists to come to the stage and to introduce yourselves. Please give it up for them.
Good morning. Yeah, this works. Good morning, everyone. Thank you for joining, everybody in person as well as online. Thank you all for coming as well and taking the time. I think we are very timely with our topic today, and as we've heard before, discussions always center around the retail digital euro. So everybody talks about what we use in everyday payments at POS and P2P. But if we really want to look at it holistically, we need to consider the wholesale aspect of this as well, which is what we're here for now. And we're going to discuss in length, so please feel free to ask questions online or in person as well. I think that, I mean, we'll get to it, but the ECB's recent announcement on deploying DLT for wholesale CBDC will be very interesting to assess. Before getting there, there's been a road, quite the road, I guess, that you've all come along. So we'll start with a little bit of a technical exploration, the experiments that have been done, dive into a bit of a market side, and then go to the DLT-based Eurosystem announcement. So if you would, all of you don't mind introducing yourselves for a second, I'll leave that to you.
I start. My name is Philipp Köhler-Brinkmann from KPMG. I'm Senior Manager of the DLT practice here in Germany.
Holger Neuhaus, I'm Head of Market Innovation and Integration at the ECB. So I've chaired, for example, our market contact group, actually on the topic of the wholesale work, and also coordinated the work in the Eurosystem on this.
Maximilian Pfeiffer, I'm from Austria National Bank Treasury. There, I started my journey in the crypto world. Then I went to some commercial banks in Austria, and now I'm a central banker. So I hope I don't have the stigma attached to me that I'm a conservative central banker when I will talk about stablecoins later and other stuff.
Johannes Duong, my name, and also from Austrian Central Bank and from the Treasury back office, and I'm responsible for cash management and also for the fintech projects like our Delphi project.
Adeline Bechellery from Banque de France. So I'm Deputy Director of Innovation and Financial Market Infrastructures, in charge in particular of the tokenization aspects and CBDCs.
Thank you. And if you don't mind, Adeline, I would like to actually start with you, because like I said, there's been a lot of exploratory work going on for the last few years, and the Banque de France is quite advanced in their work, we can say that, I think. So if you don't mind starting us off.
So yes, we have been working with market players for more than 5 years now. And it's quite important actually to remember maybe why we started this work. So when market players came to see us, they explained that they wanted to explore the opportunities offered by new technologies. In particular, they wanted to tackle the complexity of financial markets and fragmentation. And they wanted, for instance, to offer automation to financial assets that did not benefit yet from delivery versus payment. And they would like to better integrate this small market segment with their system, with their traditional systems in the bank, actually in the banks. And so this is maybe the first key point, is that they don't want to work with a big bang approach. They wanted to integrate this complexity and how to tackle it in their current systems, as they also recognize the efficiency of our payment systems. So this is the first key point. The second one is that they were exploring the security leg in particular, but they came to see us to ask for the cash leg, meaning that they wanted to use central bank money to settle their financial securities. And so, of course, we can agree with that. And this is a first lesson before starting the experiments. They wanted to use central bank money, in particular in the form of tokens on DLT. So that's why we have started our work. And so, as you know, we tested last year within the Eurosystem program lots of use cases, and it was quite important for us to be integrated in this Eurosystem program to test more use cases. Of course, issuance of securities, redemption, corporate actions, but also clearing. And it was, there is also another important point that, of course, some market players do not have access to central bank money. And it was important for us to work on the combination between central bank money and commercial bank money with new technologies and how we could better combine them. All of our work, our approach actually is in line with our mandate of financial stability, and it's crucial for us we are in charge of the smooth functioning of payment system, and that's why it was important for us to work on these new technologies.
I think it's quite interesting to see that this stemmed from demand from the market, right? Because oftentimes CBDC is seen as a threat to the market and competition with the market, but really it is a collaboration, like you say. You work closely with market participants. So do you in Austria, I believe. So maybe if you want to take it on and share your experiments.
Thank you. So we also in the ONB, I think 5 years ago, we had created an innovation lab in our house. And our directors, they asked all the departments to hand in innovation ideas. So, and we are thinking from Treasury side, what could be interesting, artificial intelligence, machine learning, and we finally say, okay, the DLT blockchain could be very interesting, and it could disrupt our core business, is the settlement, because we work every day on settlement, cash management with SWIFT and reconciliation and all this stuff, and the DLT could disrupt all this process and reduce intermediaries, reducing costs. I think everyone here sitting here knows that the efficiency of using DLT to reduce intermediaries and all this stuff. So when we start to create our own platform with our IT, and nearly I think same time with Banque de France, and we start the communication and exchange with Banque de France, and yeah, and together with we have some stakeholders, or some commercial banks, and also the Austrian Treasury is on board in our stakeholder round, and then the exploratory work come across, and we also joined it with our own created market DLT for an experiment. And maybe it's important to point out there is between trials and experiment. Trial is with real money transactions, and the experiment is only mock transactions. It's more focusing on the technical point of view, and this is what we did, is experiment together with Banque de France system.
I think, like you say, there is an important difference here, experiments versus trials, and going from theory to practice, if you will, and merging these two worlds, which is, I think, exactly what you also, Philip, you say in your white paper with KPMG. You published this on DLT-based capital markets. You need actually practical solutions and to be able to scale them up and to do so fast. So if you don't mind on that basis to share some insights from the practice side.
Sure, my pleasure. Yes, KfW has issued last year 2 blockchain-based bonds. So the second one also used the trigger solution from Bundesbank, and we observed the issuance and evaluated the issuance process, and also the setup with all participants of the issuance. We had major participants involved, banks, asset manager, FMIs, custodians. So it worked. So this is it worked very well. So we had an DVP without a central securities depository, and the Electronic Security Act worked as a legal framework. It provides a secure framework for the issuance, and of course there were some details concerning what are the legal basis, what needs to be amended concerning the contract. Those are details, technical details. What we want and what we want for the future is a compatibility with DLT-based central bank money.
So I think we're going on to Gógl. If you don't mind now, in all of this context, seeing central banks exploring this, the market reacting to it, now we'll get to your recent announcement at the ECB.
Yeah, yeah. Sorry. Just to put this in context, actually, it's not just the market reacting to this. Actually, we had reached out some years ago, actually, to the market 3 years ago, roughly 3.5, and asked questions about, and then also after having received feedback in a structured questionnaire, there was also the market saying we would like to go ahead, and central bank money is one of the enablers of innovation. So now who acted, who reacted is an issue. So we then actually took this up and then actually set up these trials and experiments. So from that point of view, it was really public and private sector working very well together, I would say. And that is also one of the points I come to, that actually it was also not us prescribing the use cases, but they revealed a lot. It is just us giving a framework. And sometimes the difference between actual transactions and experiments was also because of our choice, because for some things it was easier to set up a framework for doing actual work, and for sometimes some legal points, operational points were not ready yet to do that. So we actually said only for securities use cases there are trials. For the others, it had to be experiments. But the big point is, where do we come from? So for us, I mean, also to understand the decisions that I'm just going to recall is, we find it important that central bank money is being used and that the two-tier financial system also with private monies is working. So we have actually worked on that over decades, and we would like to maintain that. And that's why in 2023, our press release, when we said that we will do these trials and experiments, it was part of our approach that we want that central bank money is being used for the wholesale market. And if the market is then going or looking into a new technology, we have to and want to look at, do we provide central bank money in a form that is relevant for the market? So it's basically to keep the same, one has to change things. That's, I think, the idea. Another objective that we have in mind is, when it comes to the securities and capital market, is of course that actually whatever we do, it should improve the situation compared to have it as we have it now, because we want to go for a capital market union or saving and investments union. So that is for us important also in whatever step we are taking. And that's where the trials, experiments helped us to really see, okay, what is the case? Because it is not an issue about how to make the settlement, etc., more efficient. It was also said at earlier panels that, I mean, a centralized system that is specially built for this is hard to beat. But what we saw in the trials and the experiments is that the market participants, yes, of course, they did want to have a settlement in central bank money, but the use cases were much broader. It was about the value chain, about making transactions across the ecosystem, so that actually the core of the issue is that it's not about specific processes, specific parts, it's about, if I may say so, putting the whole ecosystem to work on one shared and a distributed database so that everybody knows what they can do at that moment and be able to react very quickly. And that is where the architecture and the promise of the DLT is. So it's not on a specific part, it is looking at the ecosystem. And that is a big promise on which actually is not just a technical point, and that's where also the market participants said, okay, we would like to go ahead, but what will you do now? And how do you provide central bank money? Tell us early, so that we also know what to invest in, and also tell us if what you will provide. If you want to do something soon, tell us whether that is the step that you're doing or whether it's part of more. And that's where we came actually pretty quickly after the trials out. So in November we closed, and our governing council decided to announce in February early in line with what the market demand was to say what our steps are. And that is, one, we will provide actually settlement of DLT-related transactions in the short term, whatever the short term means, so that that will have to be specified, but soon. And the second is that is not the end of the story, because we understood it is about providing something meaningful for the ecosystem and helping the ecosystem to set itself up. So there's also a second track, which is then on how to do that, because it is not just a central bank that can do something, because the market has to use it, and vice versa. So that's also the important part. It's about the whole financial, it's the securities, but it's also the payments system and that whole ecosystem where this is together. So that's where we have to work on together. I stop here, happy to explain more in detail.
I think Adeline also said that, right? It's not the securities necessarily only, we're looking at a bigger picture here. We're not just looking at one aspect, we're looking at all of them. I think it's quite important also to highlight, like you say, we have two tracks here. We've heard it before today for the sake of completeness, I guess. We have track 1 and track 2 at the ECB happening in the Eurosystem. Track 1 is working on an interim solution, where the Bundesbank's trigger solution is being deployed, versus track 2 is working on a longer term solution. I think it's important, we heard it, sorry, please.
No, just one thing, and it's not only that, so it's also that on the second part of the financial system, the two-tier financial system, so with actually also with private monies. Because not everybody, I mean, we could grant already now access to central bank money more broadly. We don't do for reasons, and that will also be there in the future. So the central bank money cannot be there for everybody, but then it's important that, for example, the clients of the banks who have access to central bank money can also use that. And if the market is going to DLT, then how is this being provided? What are the private solutions? That always is also an important part of the story. Really, just to say, because they were early in the morning, there were the discussions. Is central bank money saving everything and doing it? No, it will not. It's the ecosystem. It's really the full system. Yeah.
It's a coexistence, right? Like you say, nobody's supposed to be crowded out of a market. We're just trying to enhance the system as it is. But the system as it is perhaps has some limitations. So if anybody of you wants to jump in, I think the trigger solution is meant to connect to existing systems, and the long-term solution is meant to perhaps go beyond. So where are currently some limitations you might see that could use some improvement in the longer term, or could go beyond existing structures in the longer term?
One point is, it was good we could do also trials, so actual transactions, because there are national laws that actually allowed it. So there were early adoptions of this law, and that was good. The problem is we have national laws, and they are specified. They are not talking to each other in the sense they were not actually written to look at each other and see that. So if I take the logic that the promise of DLT is to work on the same database again, as a simplified picture. A shared database is super useful in many aspects, but it is less useful if the data standards are not the same. So there are many rows in the database, but everybody has their own standard of how to do that. That is a challenge. If there's information about players in the database, but in different countries they have different roles, they are different things that they're allowed to do, it makes it possible to use the database to link everything, but it makes it very difficult to put that together. So taking that, just that one is, if you really want to use it, it's not only that you have to work from this database, but actually the more you can harmonize, also something which we are working on since decades. But the more you harmonize, the better you can reap the benefits of this. So whether it's on legal issues, technical standards, and also business standards. So that is important. That's one point. That's on the general level.
But new technologies is also a good way to leverage and to be able to work again on harmonization, as we have already done with previous projects such as Target 2 securities. So it's also a good way to continue the work.
Maybe I can add something to the technical part of this. The free solutions that were tested in the trials, they are also all linked to the existing target system, which is an important fact about them. And if we're talking about maybe long-term idea of having 24/7 capital markets, trading, and also then the settlement of assets, that's an additional point that is more on a longer-term view that's not applicable right now.
But one question from my side, the trigger solution could also be the long-term solution, right?
I mean, I'm not from the German Bundesbank, so I can't comment on that.
You raised the fact, so that's my question, yeah.
So that's, any of the three solutions might be. That is one of the points of how frictionless, again, this idea of the common database. So how frictionless is this, is the information flow? So, our board member, Mr. Cipollone, put forward in the speech from last October the idea possibly of a shared ledger. In the same speech, he said that does not have to be the future because, there are also some, if you want to set up actually such a common such a shared ledger, you have to do it. Yeah, that's. But then you have to set up the governance and maintain it to be relevant. That's a challenge there. But the nice idea for that to picture this is you are on one platform, everything is seamless. So then there can be alternatives, and then how seamless can it be with alternatives? And if really the ecosystem was working on DLT and more broadly private sector, also corporates, etc. If they do that, maybe then is the question: does the cash have to do there? The intuition would be that everything is then on chain. But does it have to be? That's something we have to see. So the tech stack, again, is not the question. That's probably one of the last questions we should answer, because then there's also more progress to see what is the best at the end. So it's the architecture, I think, around it.
Since you say all three solutions could be also the longer-term ones, Adeline, do you care to explain a little bit, the differences, let's say the key differences with the L3S platform versus Trigger? What are the differences in the approaches?
Yes, so to remember, to settle the securities and issued on DLTs during the exploratory work, we used three solutions. So one developed by the Bundesbank, one developed by the Banca d'Italia, and one developed by the Banque de France. So the Bundesbank and the Banca d'Italia developed two solutions for direct settlement in the current target services, so related to T2 and to TIPS. And at the Banque de France, we used the in-house DLT, so named DL3S. We have developed and continued a few years ago with our first experiments. And with this DLT, we directly issue tokens on DL3S representing central bank money. But of course, it's also related to our target services, as we need some cash we have in target services, in T2 in particular. We cannot be dogmatic, I think, regarding these three solutions. We need to analyze what would be the added value and how we could have seamless transactions with DLTs and with the current systems, as we will not have a big bank. Yes, we still need to analyze the three solutions. We cannot give a conclusion. It would be too early, and we need to continue.
Yeah, that's why we explore more. Jonas?
Thank you. Maybe add on why we ONB choose the DL3S system is because this is the system for cash on chain, because we are coming from the innovation side and we want to really testing something new and to find out the pro and cons. That's why it's the DL3S, because it's I think the only system with the cash on chain in comparison to the others. Whether it's better or not is another discussion, but for us, from the innovation point of view, is to find out what is the impact on our core business, settlement, DVP, and etc., with new technology, both sides on chain. And this is, from our point of view, why we chose that system.
Yeah, so I'm afraid that from the Euro system, we don't give you the scoop that actually we have a quarrel on who is best. No, but that is actually one of the points, I mean, that we were clear for us when we actually set this up. So we had the luxury of having 3 solutions to choose from and to see then the strength of what are, and actually try to measure then also differences. But it was not an issue of a beauty contest, which of the 3 scores better with some average scoring or so. So it was actually looking at what are the elements that are most useful, for example, for the market, for certain perspectives. So that's why we had actually, so everybody who participated had a whole list of KPIs to fill in on all of their work and to keep us updated on that. So that's what we actually then went through in order to assess. We also had actually, just weeks before the decision, we had also a session not only with our contact group, but we invited every participant in our trial. So all these 64 participants that came there and had run these, whether it's the 1.6 billion of securities that were issued, but also experiments for payments, smart derivative contracts, whatever, and asked for the feedback to understand what is important for them. And then now, also for our track 1, which is based on interoperability, it will, of course, make use of what is there. We are looking both what is useful for the market, and then there are other questions which are less visible to the outside of what does it take to put it in production? I mean, how does it fit, whether it's with the legal situation, the cybersecurity, and whatever else, that how easy is it to integrate something, be it a module, be it everything, or whatever. So those are the assessments that are being done. And that is, of course, now where there's a question marks around this, which I can understand. But again, we actually felt that it was more important to announce to the market that we are going ahead rather than actually doing all of these assessments and coming up with a plan and announcing them, because that's taking a while. Yes.
You want to respond to everything early on and give the market also a chance to, keep working with you rather than each.
Yeah, and also knowing that they can prepare themselves, that actually there will be more on that there will be opportunities. So there were also quite some market participants, because the pace of our exploratory work was relatively high, because we didn't want to drag on, but we gave some months to come to actually, we actually had 2 waves so that we also could allow late starters getting in and had, I was already optimistic, but I think the participation was even higher than what I thought. But then still some tried and they just did not find the partner on time or the technical part, and also for the trials, some legal work took them more time. So there are also more who wanted to participate. And of course, they know they can prepare, so there will be cash on chain than there are also from the central bank. There will be work. There are opportunities to get the experience, to think about how do the business processes work, use that experience then to standardize so market participants can prepare for that, yes.
Adeline, I think you wanted to say something.
No, it's just to say that we will also analyze all the services we can offer around central bank money, of course collateral, but we need to go further. As Olga mentioned, we need to create a new ecosystem around new technologies, and in particular in the geopolitical context. So it will be important, and we need to take time also in the urgency to analyze what could be all these services along the entire security chain, actually.
I think the securities chain is also something that is bound to change quite fundamentally with DLT, right? Because
Yes, in this case, the public-private partnership would be crucial, and how private actors could leverage on what the euro system could develop.
And even just going on-chain would mean going 24/7, or would you keep current hours?
Well, it's also I mean, the one thing is that what is the end game, the other one is what are interim steps. I mean, now for the trials, we were clear that we went actually, we contained it to normal business days, because also that will then, I mean, has implications, say, on the cash side to the minimum reserve system, the operational framework. So all this can be adapted, and it's not just a DLT question. We also have instant payments that are running 24/7. So those are points that need to be looked at in any case, and they can be amended. But that is actually also very interesting also in the long run. What is the optimal? Is it optimal to have, I mean, the one thing is to have the same day, but is it instant, everything gross? Is there a case for having kind of, I don't know, hourly settlement cycles for, at least for some operations, etc.? Is that more efficient than the other one? I cannot tell you now. So I'm very curious for this, and that is something to work on with the market on this. So of course it sounds like a straightforward thing, everything immediately, but how do you do that? Does it work everywhere? Because as soon as you have pre-funding in there, it gets more difficult. If you just can transact what you have, and that's easy. But how do you make a market with that? All this, how to organize this? I mean, that is something, and that's something where the market has to come together and look at that, how that works.
I think that would be a question beyond a European market. It would be a question of a global market, because the point of having 24/7 is not necessarily to just cater to European hours, but to worldwide hours. Security settlement from Singapore to Frankfurt to New York. Overlapping hours are very limited. So I think in that respect, it maybe goes beyond just, like I say, Euro, but it is something perhaps we should look to in the longer term.
Maybe, but for the time now, I think T+1 is sufficient. From my point of view, I'm speaking from the business point of view, and we saw with the issue, the DLD bond, T+1 is possible. Instant is also possible, and maybe we have the chance to free up capital, intraday capital. We have a better liquidity governance, and also controlling. This is possible, but I think it's more for the second trail or track, so to have the 24/7, yes.
I mean, just from existing technology, an example. So that was a question also when instant payment, once it was actually, so it was enabled, not only that instant payment existed, but actually it became really a truly European, available to everybody in Europe who has a normal bank account. There was also the question, what will shops do? So it was quite interesting to see. At the very beginning, then many said, okay, no, we cannot even use it because we do the batch processing. At the end of the day, to process, more efficient for us. And yes, that will probably remains, because for years, everything has been built around that actually things are processed not immediately and gross, and that they also cannot see of how it's received. So you need to change much more in the background in order to make full use of it. So that is a lasting thing, and there will be some inertia in staying where we are. On the other side, that's where one has to quickly look into, will we go for that 24/7 when there are the opportunities? So maybe that's difficult to stop. But again, maybe one can organize it also in the way for some parts of the market or segments where this is more obvious, where there are specific needs. But that really remains to be seen for the longer run.
And as for the global picture, and we've touched upon today already, I think it's been mentioned in almost every panel so far, how do you see extraterritorial scope in the wholesale CBDC trial, your trials and experiments and further deployment?
Well, that basically is a question of central bank money, to whom is it made available? And that's a decision which is independent of the technology. So we have we are opening accounts for specific entities. Not obvious that I mean, that changes simply because of the technology. So currently you work then with some, I mean, and in any case, even domestically, not everybody has access. So you essentially it is financial institutions, in particular banks, who actually have that access. Not sure why that would need to change. So you would still need to, in that case, have a bank account if you're not from the euro area. You need to know somebody who has a bank account. I mean, who has a central bank money account there. That's something which can develop. Rules on this are developing over time, but that is not a question just of the technology again.
Yes, I'm not sure we will change the policy access to central bank money, but we could work on a better combination to ensure better. For instance, we could work on modalities of access, and that's why we will work on this concept of shared ledger. It could be an opportunity to work on this combination and the better coexistence, as we cannot ignore. So the stablecoins, for instance. So it's also a call for us to work on this issue.
Thank you.
Yeah, no, that is really an important point. I mean, that it's seamless. And then actually also, if that connection is then efficient, and we have to see, I mean, as head of innovation, of course, I'm very curious of how this two-tier financial system will develop itself. But that is something where if that is seamless, then it doesn't also matter so much whether you have the direct access or not, so as long as you can use the functions of this. So that's the point. We had, for example, we had a workshop, I think that's also on the internet there, on it was on the business-to-business payments. And the travel industry globally is already on the DLT. So they do on their wholesale thing. So somebody needs flights, needs hotel rooms, etc. So they have a DLT network on this. So for them, it doesn't matter. I mean, they don't need central bank money as such, but they need something that the payment can be made internationally. And that does not mean that some of these travel companies have this. But they can work with partners, with whatever allows that access, and then to use that. Whether it is private money in that case or central bank money is a thing, but it is that the ecosystem can serve those needs, and that is not always on central bank money itself. So that's where we come more from the wholesale side, but everything should be enabled. Otherwise, it's a bit short-sighted.
Thank you. We're coming towards the end, so in case anybody has questions, now would be the time. No one?
They are hungry.
Oh, yeah, exactly. That's what I was about to say. We won't stand between you and lunch any longer then. Thank you so much, everybody, and I'll hand over.
Thank you. All right, thank you, dear panelists. You received a comment at how well you were drawing the lines between previous panels and this one. That was excellent. Thank you very much. And I know I shouldn't say much except for lunch break. Enjoy. And I would love to welcome you back to this stage at 1:55 or in the innovation room at 2:15. See you. Welcome back. Can you hear me? Now you can hear me. Welcome back, everyone. I hope you had a wonderful lunch break. I know everyone is moving a little bit slower, but if you hear me in the hall, please come back. It's going to continue, and it's going to continue in a great way. I already have with me here on stage our next keynote speaker. I'm very excited to have him here, Nils Beier from Accenture. He will continue the trail of thought that we already had on the interplay between the private and public sector. His presentation's title is The Role of Central Banks for a Tokenized Economy. And I'm really much looking forward to hand over to you, Nils. Enjoy, everyone.
Thanks. Does this work? Yeah. Okay. A couple of places left for people outside. So, yeah, thanks for having us here. We want to talk about the role of central banks in a tokenized or for a tokenized economy. Before I start, maybe a couple of words on Accenture. As you said, thanks, I'm Nils. I'm responsible for our public sector and banking cap markets strategy business in the German-speaking region. And I run our digital euro work across Europe. Maybe a couple of words on Accenture, just very quickly. We are a European company. Actually, we're an Irish company. And we have about 60,000 people working in Europe, 800,000 people worldwide. So it's quite a big tech company. We work for the 50 largest central banks worldwide, and we do a pretty wide spectrum of work. So we do the kind of heavy tech lifting stuff. So we basically build or design and build the RTGS system for the Bank of England, which goes live in the second stage in April this year. But we do on the other side of the spectrum like really cool experiments around, for example, CBDC in Asia or wholesale CBDC with the Banque de France, a really wide spectrum of things. Now let's maybe go to the role of central banks in the tokenized economy and our perspective on it. We don't really know if the token economy is going to come, but we know that if it will come, it will bring many, many, many new use cases on the business side, and this will basically drive many, many new payment needs on the payment side. Yeah? And this is true basically for all user segments. Yeah? Retail customers will want to buy cool fractional shares of housings, want to invest in new things, want to send money all over the world without paying any fees. Institutional investors want to buy tokenized assets in an atomic trade against safe money. The global payments in different currency want to be safe and transparent and efficient. And the area where we want to focus on today is the B2B space, because it's a little bit left out, but it becomes more and more important in the last couple of months in the work that we are doing. So in the B2B space, basically that's the real world, right? That's where our wealth comes from. It's where in the future our physical work will be done by physical robots. Our intellectual work will be done by teams of agents who completely autonomously interact with each other. And all these things around us will be produced by manufacturing X, where highly integrated machines work independently and autonomously with each other. They will exchange physical and non-physical services autonomously. And to foster this, we will need a payment side that is up to the job, basically, that will basically cater for all these new needs. And we know all the, let's say, buzzwords micropayments, nano payments, streaming payments, autonomous, highly programmable payments on a global scale, super cost efficient. But that's actually the product, a development in the B2B world, which we foresee requires. So where do we stand against all these needs? And I think the conference is basically covering many of these products. The primary kind of sector which is responsible to deliver on these products needs is the private sector. Yeah, it's not central banks. It's basically the job of the private sector to support the industry with payment needs. Yeah, and that's what's happening, and I think that's what the conference is in parts about. Yeah, it's about commercial bank money tokens, it's about stablecoins, and the whole spectrum of stuff out there, which basically we cover too, but I personally focus on central banks. Yeah. So if we look where we stand today with the offering of the private sector versus the needs which we just described, then we have a lot of open points. We, especially from a European perspective, we're not super happy. Yeah, so we have a lot of work to do. So I think we covered the retail part today extensively. The European industry is trying to produce some good solutions, but Vero is a good example right now. Lots of promises behind it, but so far we don't have a European product that basically covers, all the user needs, or basically the things which we see coming up in the future. On the institutional side, we have commercial bank money tokens, we have stablecoins, but what the big, large institutional investors are really looking for is a safe currency, safe central bank money. We didn't solve the global cross-currency large value payment problem so far. There's a G20 agenda behind it. And the area where we want to focus now on is the B2B area. We see a lot of private sector activities there. So, for example, JP Morgan is working together with the industry worldwide on really cool use cases to solve IoT use cases, machine-to-machine use cases, and all these things. But the 2 or 3 points which are still open. So the first one is, are we really, and that's a European perspective, right? Are we getting the same problem we have in the retail space, that for B2B payments, we will have US products only? So will we have a strong European banking or payment service provider industry which is able to deliver for our kind of real industry the payment products we need? Or will we basically step by step end up in the same situation as we are in the retail space? So will we have euro-denominated and European-controlled modern payment products for the industry? That's the first problem. The second problem is basically applies to everybody, and it's a classical problem. If you have private money servicing any need out there, and also the industry needs, B2B needs, then in the end, you want to settle on safe money. Yeah, that's what we have today. We have electronic money and lots of use cases are serviced, but in the end, you need a platform in each currency area where the banks can then settle their electronic money. And for this, and basically it's for liquidity, for risk reduction, interoperability, and so on. For this, basically, that's the job of a central bank. So there is definitely a job for a central bank in the future token-based DLT money economy. So, but before we jump to that one solution, which we also talked about, I think, with Alex Hachmeister in the morning, let's see what the spectrum of solutions are, which we came up with, because we see 3 possibilities how to service the B2B space from a central bank perspective. Yeah. So on the left side, you see the DESP, it's the Digital Euro Service Platform. It's basically the retail digital euro. That could be one product that solves the B2B problem. So basically, just imagine we have, in a couple of years, you will have the retail digital euro out there. It's a hopefully a good product, yeah. It's pretty cheap. But it is restricted to consumers and merchants, basically to retail use cases. So why, actually? Why? If we are the industry, yeah, we have a need, why can we not expand the scope of the retail digital euro to cover a couple of our B2B needs? Because it's obviously, it might be really, really cool to use it, yeah? Streaming payments, highly automated programmable payments, European-wide, maybe even cost-free for one of the two parties. And actually, and we all know that ECB excluded this kind of scope enlargement to the B2B space. Yeah, obviously didn't want to mess up with or increase complexity and get into the bank's kind of business models too much. But ECB is basically asking the question, or maybe thinking about it. And then there's this innovation partnership, the platform that is open to do some experiments on the Digital Euro Service platform. And a couple of industry players are actually experimenting with the platform if it is possible to service some of the B2B use cases. On the other side of this, and that's pretty real, right? It's going to go into production, and it's not short term, but we know the timeline, and we know that something is coming, so that's pretty real. On the other side of the spectrum, on the right side, that's a bit far out. But just imagine a tokenized DLT-based central bank currency running on any DLT out there, yeah. On any business DLT. Just build your business DLT and then you have your currency available to you on your network. Technically, that is not a problem, right? But just imagine a central bank, we all know they are pretty risk averse. They want to control everything. Hello. And for good reasons, right? For good reasons, yeah. So this solution that you have a central bank DLT currency that is running on any external chain, a little bit like cash. Yeah? You don't control where your cash, and it's your money, right? You don't say, oh, I don't want this in bars or something like this, or whatever networks. But there are a couple of experiments running out there, and I think it's just an interesting way to think about things. Most probably, let's say the most promising solution might be the middle one, where the B2B use cases is left to the private sector. Yeah, the commercial banks, they develop cool stuff, yeah, and our big corporates love them. And the central bank basically caters for the ability to settle different commercial bank money tokens or stablecoins or whatever the industry will come up with on a integrated platform against safe central bank money. That's basically what these Track 2 trials is all about. Yeah? So basically that's and that's basically the typical role of the central bank. It's not new. It's what we have today, yeah, because commercial banks are offering money, electronic money, to B2Bs today, and they settle it on central infrastructure for good reasons. So let's maybe look at how such a platform could look like. Yeah, so conceptually, and we are basically building prototypes and look from a pretty technical side on it. So basically, there are, I would say, four building blocks. Yeah, and the platform is basically everything which is where it says common central bank platform. That's the core platform, and within that core platform, which is basically ruled, secured, and run by the central bank. So that's safe central bank space. Nobody can mess around there. The rules are set by the central bank. In that safe space, there is the core ledger. That's where the actual currency, the euro, the pound, the dollar, basically runs on a DLT. And then, pretty straightforward. And then you have sub-DLT1, sub-DLT2, and so on, which is basically due to different technology choices the industry might have in any moment in time, yeah, because that might change. You never know what's coming. And the central bank common platform basically caters for different technology platforms the industry might want to put forward. And there, the commercial bank money tokens, the stablecoins, basically reside and sit, also regulated by a central bank. And then the settlement is basically straightforward. It happens between the sub-DLT of the commercial banks and the core ledger where they hold central bank DLT money. Pretty easy. A couple of other things, like obviously you still need to have funding, defunding for your central RTGS system. You typically have a API gateway to connect to the market. And then we have this marketplace services up there, which is in a intermediary zone, let me put it this way, which is out of the perimeter of the central bank, where the industry can basically develop whatever services they want, and step-by-step offer new services. Basically, that's all on a high level. That's the concept. It's not the only concept. There are many concepts on how to basically build a platform that can support commercial banks in servicing, in our case now, the B2B payment needs, but also any other payment need out there. There are many other concepts. This is one, but basically you need to maybe start with one. We do a lot of experimentation around it, obviously build prototypes, technical prototypes. I don't want to go into the details. Obviously, to build a technical prototype, we need to detail it out. And actually, technology is not, let's say, simple, but it's not the biggest problem, but you need to do it to basically understand what your policy choices, your business needs, etc., have as an impact, and if they are basically doable. Let me conclude maybe with three messages. The first one is we actually believe the token economy. We actually don't know, we did a lot of kind of research and stuff like this. When is it coming and so on and so on. We don't really know, yeah. But there's a lot of potential behind it because obviously as Europeans, what is the next wave of productivity? Everybody is basically looking for it, yeah. It's not building cars anymore, maybe. So we really need to find the next kind of wave of wealth and productivity for the region. It might be in this kind of physical machine world. Don't really believe that we're going to basically run the AI agent world, but maybe the physical machine world, the physical robo world, and they will definitely need, as they are autonomous, they will definitely need a payment system, a payment infrastructure that is up to the job, basically, and be the most competitive region where we can basically then export robos to the rest of the world. Hopefully. We like to do this in Germany. So what do you need for this? Do you need central banks? Do you need central banks for this? Yeah, I think we think central banks have a job to do. Yeah, they did a really good job in the classical electronic payment space, being the settlement engine for banks, for commercial banks, private banks. So I think the same job is required in the new world, in the tokenized economy and tokenized money world. We need a settlement engine for banks who cater for that stuff. Better be in Europe, better be quick for European banks to not basically lose the race again in payments. So central banks need to be pretty quick as well. And how does it happen? We actually believe, obviously, that no central bank can invent by themselves such a complex product. It's impossible. Yeah. It was difficult in years ago. We believe this is even more difficult and more complex. So to build a product that is really fit for the job you need to work with industry, and not only the banking industry, but as we said, it's a big B2B world, so it's a big collaboration, co-creation, and that's the way forward we see. Questions?
You mentioned earlier this idea of a central bank having perhaps a CBDC that is then free to move on to other chains. I'm not sure if I understood you correctly, so please correct me if I'm wrong, but would that not be very tricky to sort of control, because if it's on another chain, it's no longer within the jurisdiction of the central bank, and a nefarious player could perhaps issue more, wrap them with something else, call them CBDC plus or something, and that then immediately compromises the integrity of the central bank itself, right? How would you manage that if that's what you meant?
Let's talk about this next year, maybe. I think it's a big question. It's a big question. We just started actually to do a couple of experiments. We think technically it's not a big problem, but we didn't actually start the experiments, to be honest. We just started to have the design concept around it. We actually don't believe it's a technical problem. It's a huge governance and compliance problem, and actually a cultural problem as well. Yeah.
Thank you.
Thanks.
Great. That was a well-crafted vision followed by very clear statements. We need a solid way to settle electronic payments in the B2B realm. That was exciting. Thank you. Thank you, Nils. Before I announce our next panel, I would like to make you aware again of the other rooms as well. If you are, for example, interested in the Bank of Korea and their findings, the innovation room is right now hosting something on this topic. But without further ado, on to our next topic here, which will be a panel led by Tamara Schmidt, who will be joined by her panelists on the topic of tokenization into the mainstream. I hand over to you, Tamara.
Okay, so good afternoon, everyone. Thank you for having me. I'm Tamara. It's an honor to be here, moderate this panel, Tokenization into the Mainstream. And I'm thrilled to be joined by this remarkable lineup of experts, each representing key stakeholders in this evolving market. Tokenization has been a major topic in finance, promising faster, safer, and more efficient transactions. But we are now moving beyond the theory. So banks, central banks, and financial networks are integrating tokenized assets into real-world applications. However, challenges remain, from regulation to technology and interoperability. So today, our panelists will share insights on what's happening, what's working, and what still needs to be solved. We will start with a discussion and then followed by an audience Q&A. Thank you so much for being here. Let's start with a short round of introductions. Alexandra.
Thank you for having me here. I'm Alessandro. I'm from the Central Bank of Brazil. I'm an engineer by formation. I work in the telecommunication industry for some years before coming to the central bank since 2010. I'm a financial market infrastructure specialist in the central bank and also the project manager of our CBDC project, DREX.
Hi everyone, I'm Nick Kerrigan, Head of Innovation at SWIFT, and it's wonderful to be here at the Digital Euro conference today and to join you for these inspiring set of conversations. As part of my role at SWIFT, I lead on what we call New Frontier Trends, which includes the whole space of digital assets and digital currencies, and in particular my team has been leading all of the collaborative innovation efforts around digital currencies and blockchain interoperability that we've been doing over the last few years. I have 25 odd years experience in payments and banking, and was recently rather depressingly introduced on a webinar as a payments veteran, and I didn't think I was so old.
Thanks, Nick. Hi, thanks. My name is John Ho. I'm currently the Global Head of Financial Markets Legal for Standard Chartered. Besides that, I do a lot of new initiative within the bank, right from digital assets to tokenizations and AI, and how do we bridge that and use that for efficiency, advancement, and the topic today is very topical and relevant for those who are involved in banking and finance. Thank you.
Thank you, John. Humphrey, I'm with Partior. Also an engineer by background, then lost my way and went into banking, but finally came back into technology. Partior is a technology company. What we do is we use blockchain to try to solve for the traditional friction in cross-border payment and creating opportunities that DLT technology offers. The gentleman next to me represents one of my shareholders, so we will say the same things. So it's just disclosure to everyone that we sit on the same side, and looking forward to this discussion.
Amazing, thank you. So I'd like to start by setting the scene. So Nikki, SWIFT has been leading experiments in tokenized assets. What's the biggest shift you haven't seen that signals tokenization is moving beyond the hype?
Yeah, I mean, I think this is what I really feel, that actually tokenization is kind of now really ready for takeoff. I mean, we've seen some big numbers predicted. You know, BCG predicts that $16 trillion of assets will be tokenized by 2030. Standard Chartered predicted that 30 trillion will be tokenized by 2034, so in roughly 10 years' time. So we're seeing some major predictions, but I think what also then reinforces actually that these things are starting to happen is that there is real issuance going on. Obviously in Europe, we've seen issuance by KfW and EIB, amongst others, but we also see the growth of platforms that are starting to use tokenization to deliver on valuable, commercially relevant use cases. So, for example, platforms that enable the use of collateral and intraday repos, which is of real commercial value to financial institutions, and those platforms are growing, volumes quite considerably month on month. So, I think this is a space that's really starting to open up. As an innovator, I always look for what we call the S-curve of adoption, and a number of years ago in another life, I was part of the rollout of contactless payments in the UK. And that took 10 years, right? And lots of people said for 10 years, that's never going to happen, it's never going to happen. And then suddenly there was a behavioral change. There was triggers for that behavioral change. And now contactless payments in the UK are just the way you make payments in store. Nobody thinks about it. And I think now we see a lot of changes happening in terms of the geopolitics that we heard from about in the morning that are actually going to be the stimulus to really drive this market and make this market grow. So at SWIFT, we've been very much active in this space because we believe, and we'll come back to this topic of interoperability is really important, but we believe that it's going to be really important to support the community moving now from experimentation and POCs into live movements of assets and trials, and that's exactly what we're doing with the solution we've developed.
Turn to you, Alessandro. We know that Brazil is modernizing its financial system with initiatives like PIX and DREX. How do tokenized assets fit into this broader transformation, looking from the perspective of the central bank?
Nice. The tokenized assets, they have very specific let's say, way. It's defragmentation. That's what we think, right? Inside the tokenized, it has inherently defragmentation. And this is very important because it doesn't matter if you have tokenized assets in different silos, and you cannot talk every silo with one another. It's too difficult to interoperate. So we try to bring everything in one basket and to make it easy for everything to fit and everything to be changed, one token for another. So that's our general view of the tokenization. This is the most important for us characteristic of the tokenization. Bring everything together so it's easier to provide something valuable to the society. Something cheap, something fast and transparent in the way that we want to go and provide the market with a level playing field, that they can build something valuable above common and public infrastructure.
John, looking for the banking side, what's the most compelling reason for bankings to adopt tokenized deposits or tokenized real-world assets? And what advantages do they offer over traditional systems?
Yeah, I think the couple of advantages tokenization enable is able to cross the bridge between traditional payment rails, settlement rails with the new payment rails. Because I think the ability to move collateral, the ability to transfer asset of value and monies at speed, at a fraction of the price, is certainly the attraction that tokenization offers. I think before we get too hung up to say, oh, tokenization will have the promise, why are we not seeing it? I think before I start, I just want to go back to basics. When we look at tokenization, there are actually 3 different spectrums of tokenization. The most basic form of tokenization is just books and records, just as like a receipt, or what you hold, or representation. The second type of tokenization is what we call the digital twin. So you issue a digital representation of assets of value, but your pre-trade and post-trade settlement, some of them may change, but some of them hasn't changed. The more advanced version of tokenization is what we call the digital native. The representation of assets means that asset doesn't exist in the real world. For example, a digital native securities. Now that we have tokenization of carbon credits, tokenization of intellectual properties, these assets, the value of which rests and recorded on a blockchain and move, etc. So when you look at tokenization, we need to understand what actually do you mean, right? And the potential is huge in a sense, as I mentioned, the ability not just to move assets of value, but also to have composable exposure to the types of assets that you want, and ability to actually settle and move assets in real time. It's what attracts a lot of the ecosystem at play. As we speak, the initial view of, for example, fiat-based regulated stablecoin was largely used in a speculative digital asset space. Increasingly, we have large conglomerates, large commodity players, large export importers are looking at how do I move assets, or how do I move money, at the same time reducing the frictions, the time lag that we see in some markets. So I think that's something to bear in mind. So it is something that we see has the ability, as what Nick mentioned, to unlock the value, whether it's 16 trillion, 30 trillion, but the number is huge.
Maybe a follow-up question. We know that Standard Chartered has been involved in several tokenization projects. Can you share a real-world example where tokenization improved efficiency or security?
Yeah, I think one of the clearest examples, which is what public, we assisted China Asset Management to issue its first tokenized real money market funds out of Hong Kong. It is the first retail money market funds in the whole of Asia Pacific. The reason why they're doing it is just not to tokenize for the sake of tokenization, is actually the ability for clients to move their exposure within the value chain. For example, the client might have exposure in a bond,
exposure in equities. They also can have composable exposure at scale at a fraction of the price.
Humphrey, we know that Patchay is backed by major banks for interbank settlements. How does your infrastructure make tokenized finance scalable?
Yeah. I think I'll give first another example of Standard Chartered. They also had an investment in a company that did an FX PVP in Asia, and that was us. So that was also a very cool thing to use the rails for. Back to your question, I think what you see, and I think we're very proud because Patchay, compared to many other initiatives that do tokenization, is live. So what you see is the banks on our rails. We have unlimited approval from OCC to tokenize US dollar to move the value without a limit in value or volume. So it's not a proof of concept, it's not a white paper, it's real life transactions that are happening. And I think that is also what Nick alluded to. We need to move away by working together to go from the laboratory stage into solving real problems in the real world. And I think that only happens by working together. And what we're doing is day to day. We also work with Brazilian banks and did a submission and application with a Brazilian bank for DREX. What you see is we need to work together because the friction, and I will start with our primary use case. What you see is that in the traditional payment space, there are so many barriers due to legacy technology that in the interaction with SWIFT and ourselves, we can make things more efficient, more predictable, and faster. And then I think at the same time, and it's not for my customer, Standard Chartered or JP Morgan, it's for their customer. We're really using our technology for an end use case that makes sense in the real world.
Nikki, you mentioned interoperability before, and you know that Swift's tokenization pilots focus on interoperability. So what lessons have emerged on how tokenized assets integrate with the traditional finance?
Yeah, I mean, I think the headline from our work is that interoperability is hard, but it's necessary, right? And why is it necessary, right? It's because what you see across all of this space of tokenization is that different platforms, different standards are being used, whether you are talking about digital assets, whether you're talking about digital money, whether you're also talking about digital trade, which is equally important topic here. Now, all of these things can, in principle, be represented by tokens, but when they are on different technologies, what the risk is that you end up with digital islands emerging. And we saw that previously in the digital trade space, where you had digital trade platforms that didn't work with each other and therefore struggled to scale. So we think interoperability is vitally important to enable these markets to be able to scale. And I think you've got to bear in mind as well, with all the discussion we've had already on digital money, money is typically used for something else, right? So if I want to trade a digital security, I've got to have a cash leg for it. And the same with a trade, right? If I'm going to make a trade transaction, I need to have a money leg. Or indeed, if you think about tokenized funds and the work we recently did in Project Guardian with UBS Asset Management, where there was a conditional issuance of tokenized fund, and that was then paid for through the SWIFT rails, and we issued the confirmation back to issue it to investors. So we do think the interoperability is absolutely key in this space to help scaling. I don't think there's going to be one solution to interoperability. We will help enable it in the ways that we can, but there will be multiple different solutions in this space. I think, though, you need to be able to both interoperate between the new and the new, in other words, the new networks, but also you need to be able to interoperate between the new and the existing, because the existing structures, be they for payments or securities, are going to continue to exist for many years to come, and therefore being able to then interlink what we have in terms of the new and successfully orchestrate transactions across to the 11,500 banks and corporates that are already connected to SWIFT is for us equally important. And that's where I think you'll start to see the growth of secondary markets, be they in securities and FX, which is, I think, the next stage of development for tokenization.
Entering the challenges, so Nils just mentioned in the keynote before, some challenges looking from the perspective of the central bank. So Alessandro, how do regulators balance innovation with financial stability when dealing with tokenized assets?
Yeah, this is really challenging. And we central bankers do this very, very carefully. And that's why you have this a lot of proof of concepts and testing. But in tokenization specifically, we try to bring something into the society that will have bring some values to the society, to the customer, to the small business. And when we are trying to do that with a new technology, we try to experiment a lot of things. And we end up, in the case of the tokenization, there is a lot of challenges because we take one thing that in Brazil, imagine a lot of jurisdictions, you have to have privacy. So it's an open and DLT, for example, and how do we protect the information, right? We have been evolving in this, but there are a lot of small problems that we have to make sure that no one never can see what's happening there. That's very difficult, right? But trials and the openness with the society, with the market, and help from everyone, and everyone's trying together. This is positive. This is what we are trying to achieve. And by the end, it's new services to the user, and it has to make a certain quality. It's very difficult. We are trying. We'll get there, but we need help from everyone. So.
Yeah, another challenge is the regulatory uncertainty. So, John, we know that it's often cited as a barrier for the adoption. What regulatory clarity do banks need to scale tokenization initiatives?
Yeah, I think in order to scale this, we all need to speak the same language, right? In many markets, what is deemed a commodity, tokenized commodity, could be deemed as a tokenized securities. And that's also partly because there has not been a globally defined term on a number of what the tokenized, underlying real-world asset is. Is it a security? Is it a tokenized cash? I think we all need to have a very clear definitions, because if you look at US alone, right, a BTC could be a commodity one from a CFTC perspective. From an IRS perspective, is a property. And then from an SEC perspective, with certain features, it could be a security. So I think you've got to look at it from the perspective that we need the same definition, same taxonomy, so that we can standardize the definition in how that's being treated. The second aspect to that is standardization of terms, right? When we issue payments right now with ISO 222, all of us are subject to the same requirements, what we need to do. When it comes to tokenization, at this point, because it's so nascent, there are some initiatives like from ICMA, right? Doing a tokenized bond, certain things you need to go in terms of how you define the fields. But that is still very nascent. We need standardization, not just definition, standardization of how a digital bond will look like, a digital security will look like. And earlier we talked about interoperability, right? The connection between private to public permission blockchain is still a challenge. Scalability is still an issue. There's some latency going on. And last but not least, the issues relating to travel rule, right? The KYC, AML rules. FATF have actually did a recent survey that more than half of its member countries have yet to implement travel rule in the manner in which they regulate and looked at risks relating to illicit finance. But until and unless you have travel rule adopted across the globe, you will have friction in the process. So when we look at tokenization at scale, public and private sectors needs to collaborate across the whole sort of items I talk about, because once we are on the same page, we will get scale.
Yeah, maybe I could add to that, because I'm going, as opposed to violently disagreeing, I'm going to violently agree with John on this point. The importance here of standardization cannot be underestimated. And I'm a strong believer, I think all of you are, in the power of collaborative innovation. Most of what we do is highly collaborative. And so the work that's being done at the moment around different use cases, DVP, PVP, etc., what we need to do is to then take that work and bring it together in some form to create market practices, to create reference implementations that will be able to be used across the industry. We're aiming to help kind of convene people around that, and we're open to everybody kind of joining us in that journey, because it's crucially important that we bring together these standards, like seeing, for example, the bond data taxonomy. Yes. We import that into the blockchain world, and then we're able to then use that as a reference. And I think that will be very important to unlock the growth of the market.
Great. Maybe continue with you, Nikki. So we know that SWIFT plays a key role in these global payments, but the fragmentation could be also a problem, right? So how can tokenized assets integrate with the existing financial networks without creating this fragmentation?
Yeah, it's a very pertinent question, and especially with all the sort of things going on in the wider environment. I mean, we are obviously very concerned about the potential of financial fragmentation. We actually recently published a report together with The Economist that talked about the risks of financial fragmentation, and that could result in a decrease in global GDP of up to 6%. So that's a pretty significant impact on the world economy if we don't deal with this. Obviously, we can't influence geopolitics, but what we can influence is, hopefully, is some of the ways that the new systems come together, and to design them right from the start. And what we've built is a way to integrate with a number of different blockchains and a number of existing financial systems, and a way to then orchestrate transactions across those different systems. Because connectivity is necessary, it's needed, but unless you can actually orchestrate transactions, it doesn't have real value, because you need to be able to transact for real use cases. So we're going down that path. We're on that road of doing now live transactions to be able to demonstrate that works, and we'll increasingly connect in different, multiple networks to enable that, and to hopefully help solve some of this complexity. Obviously, we can't do that alone.
Yeah, Humphrey, you was agreeing with John when he mentioned the challenges. We know that Patchay operates across multiple regulatory environments. What are the biggest challenges in ensuring compliance while maintaining efficiency?
Maybe it's also more fun if we start disagreeing in the panel. Yeah. So, to start with Nick, it's not a real disagreement, but I think the connectivity of the systems is not the real issue. It's not the real issue. I think, from my perspective, representing a technology company, it's the rules and the fragmentation of compliance, KYC rules, governance, difference between the Eurozone and the US zone, Brazil having its own framework. I think, from a technology perspective, I can build the universal KYC engine. It's almost stupid. It's sanction list that you compare to transactions and the beneficiary and the payer. It's the treatment of the different jurisdictions and the interpretations that make it complicated. So I think, to an extent, this conversation of making it really possible in the real world for tokenization to take off is more limited by the differences. That maybe I should say it differently. If we look at the real opportunity of tokenization, is that we're creating and designing a global framework and a global technology, but applying local and domestic rules, which make it necessary to make the technology more complicated. So I think we're shooting ourselves in the foot a little bit, but it's not for the technologists to solve, because we can do it. It's more at supranational level and the regulatory level. So maybe you can jump in.
No, yeah, I agree. It's there are two views here. From the central bank point of view, there is the internal jurisdiction problem that we want to bring real assets, real-world assets, and the current infrastructure into a better infrastructure. And then we try to do that by defragmenting the most we can, so we can avoid interoperability, not only the building of the interoperability, but the maintaining, which is also complicated. So the most we can eliminate on that, we are going to try and do it. But this does not eliminate the need for interoperability, because there is always a little bit that's, let's say, we do it for 95%, but we still need to integrate with the legacy systems. So we try to migrate, and instead of interoperate, it's a little bit easier. And there is the cross-border, right? And this is for real assets, real world assets. So now to virtual assets, and there is another level of complexity. So we start by regulation and very carefully, and how do we integrate that? I think this is a big issue, right? You're right. We need to, in supranational levels, get an agreement, which is super difficult, right?
Yeah, I think the other thing to bear in mind, it's not just about the technology also, it's coming together. One of the things that we could unlock very quickly is to have a concept called digital identity, verifiable identity, because one of the friction points with respect to scaling this is the back all about it takes time to onboard a new client or a new person, because they're all different standards. If we come up to standards where it's a verifiable digital identity, whether from an LEI perspective or with all the relevant details that can be shared through safe channels, that can scale this in the sense that client can be onboarded, in the sense that we know what the client is assessed at from a KYC, AML, all the relevant information is there in real time. That to me is where you probably reach a utopian stage that you can actually scale, because we're all looking at the client from the same lens of risk, licensing, rating, and I think that's really, really key. I know there is a number of initiatives out there to resolve that, but unless we have the same way of looking at onboarding, that is one of the challenges that we need to resolve.
Yeah, I mean, I maybe in the interest of debating a bit on this, I mean, I do agree that in an ideal world, supranational kind of regulation or alignment would be desirable. But I also think in the private sector, we can't abrogate our responsibility here, because we can adopt things like as you mentioned, identifiers. I think about the ISO 20022 standard for payments, right? The industry came together and chose to migrate to ISO 20022. It's been quite a long journey, obviously, and we're still not done. But that was the industry's decision, because people saw that it was needed for compliance purposes, but also the opportunity then to have richer, more structured data was something that the industry wanted to go after. And so I do think it's we can't just say, we want the regulators to sort it out for us. We also have to take responsibility of thinking about how can we advance this and get to better outcomes, knowing that we will all have to align and probably invest in order to achieve those benefits.
And now looking ahead, look for the future. John, do you expect that tokenized assets to become a mainstream banking product? What still needs to happen to reach this stage?
Yeah, I think before I answer the question, I think most importantly, close to home here, is to look at the growth in Germany in terms of the tokenized bond market is a really growing market. Last year I was in Switzerland, where the Swiss National Bank indicated to us the whole of 2024,
The number of bonds, digital bonds issued in Switzerland have exceeded $1 billion from the Swiss francs perspective, right? So the numbers itself shows that this is only going to scale, right? But to your point, what does it take to move the dial? I think apart from what we discussed, the other leg that is missing, we need a digital form of cash settlement. Earlier today, I talked about whether it's a digital CBDC or a tokenized deposits or a regulated stablecoin. So I think we want to live in a world where we will have a number of alternative payments that the regulators will accept, so long as it's within the same, subject to the same activities, same risk, same regulation. And I think we will, if we live in a space that we have those digital payments that can move monies at speed, that will move the dial.
Humphrey, some believe tokenized finance could eventually replace traditional banking infrastructure. Do you see tokenization as a complement or as a disruptor?
A complement. I think it's the whole discussion we had prior to this, interoperability. I think tokenization will add functionality and use cases. It's not there to replace everything. I think, like the Americans say, if it's not broken, don't fix it. I think there's many things that go well. I think the real opportunity of tokenization is to find use cases that were impossible with the traditional rails and create new opportunities. Otherwise, it's throwing good money after bad money. It's not good business sense, I think.
Alessandro, how do you see tokenized finance evolving in Brazil's financial system over the next 5 years?
Yeah, what we are trying to build and is focus on the user experience. And this is important because tokenization by itself, if it is done by different silos, you only improve the back office of each bank, right? If you don't have any connections for new use cases, and so what we are trying to build is a central bank anchor. Like you said, it's important for everything to connect, and this is the wholesale CBDC as an anchor for everything, and then tokenized deposits and tokenized assets and tokenized electronic money, because everything has to connect on the second layer of money. So how I see it in the future is the user will have much more freedom changing assets, because our project is not only about money, it's about assets as well, tokenized assets in the same. I'm talking about real assets and real world assets. In case of DREX, we have regulation for virtual assets, but DREX is focused on mainly in the first phase for real assets, right? So we are trying to build something that makes it easy in a field that's provided by to the whole society as a level playing field, and the market can build a lot of good services above it. And we'll be sure that it's natively interconnected. It's easy to do whatever they want to do with the ideas the central bank doesn't have, but they have, they will improve the stack, right? So that's our vision for the project.
And for you, Nikki, what does a future look like where tokenized assets moved seamlessly across financial networks? What is still missing? We already mentioned some things, but if you might mention one important thing.
Well, I mean, I think in this we've got to raise our eyes up a bit, right? Because actually, if you keep your eye on the future, right, and you think about, in principle, anything can be tokenized, right? And that to me is potentially really exciting, because you're then abstracting from the silos that today exist. And if you think about that anything can be tokenized, then the ability to then coordinate and program things in a much better way becomes quite real. So in all the work we've done so far, the ability to program and coordinate and automate things, so a goods arrive in a port, I have to make a payment against it. Yeah, that's hugely manual today. But then we can actually start to automate that. Likewise, I make a securities transaction and I can settle against it. Or I can put the entire life cycle of a tokenized fund onto a chain and coordinate the payments against it. Or indeed, I look at the FX PVP settlement, where there's a growing growth of currencies that are today not settled on CLS, but they need to be de-risked and we need to reduce the settlement risk. Again, if they're tokenized, then we can successfully coordinate the PVP. I think these are the sort of like the things that we need to keep our eye on because, as Humphrey very rightly said, these are the new use cases that can be unlocked that are not possible today, but that tokenization can give us to do that. You ask what's missing? I think we've actually come quite a long way, but I think what's so far kind of missing is the ability to coalesce around how are these flows going to really work, and how are we going to not do those flows like one-off or for like one particular POC or one particular kind of jurisdiction, but how are we starting to establish patterns for those flows and definitions for the things in those flows and roles and responsibilities in those flows that we can all align on. And that then I think then starts to create then a momentum around the market, because it means that people know where they stand. They know, okay, if I'm going to play this role, I'm going to expect to do this thing. I'm going to use the asset or the token in this way. It behaves in a predictable manner, right? And those, I think, are the things that we will start to unlock. But I do think actually, because of that potential benefit, it's worth investing the time and effort. I mean, just one stat, right? Private markets assets, in other words, assets not tradable today, are at least 4 times the value of public market assets today, right? So you think about the benefits potential to the capital markets and the global economy of making those tradable. I mean, that could be really significant. So I think if we keep our eyes on the target here, keep our eyes on the future, then there's a big potential.
Great. Do we have questions from the audience?
A question. Everybody seems to agree that we need common standards, common ways of working together. There are hurdles, but everybody seems to agree that the path ahead is to have common set of standards, definitions, taxonomies. I would like to reverse the questions. What are the hurdles not to get there? Because everybody seems to agree that the way ahead is just to have common standards wherever. What is in the way that actually that doesn't allow to get there, or what are the things we need to look into? Sometimes, to advance, you have to get rid of the hurdles more than keep on advancing over them. So what would be there?
Yeah, I think what is important is to make sure that international setting bodies, public and private sector get together. As Nick and I mentioned, ICMA, when it comes to bonds, have done a lot to standardize bond definitions to the extent it's tokenized. Because as you note in a traditional sense, you do have to do a lot of reporting requirements. So when you do tokenization, you cannot have insufficient details. Otherwise, there will be frictions.
Exactly. Yeah. I mean, fully agreeing with you. And also, I think there's been a lot of good work done by different bodies, but maybe in pockets. Yes. And I think what we have yet to do is to bring those together, and also to say maybe if there's, say, in different regions, 2-3 frameworks have been created. Well, how do we take the best of each of those frameworks and align on which one are we going to adopt more widely?
Any other questions?
I also just checked Slido. There is no question from the online audience. Feel free to post your questions on Slido as well, if you're watching the stream.
Okay, so yeah, I'd like to wrap up with...
There is one question.
There is? Okay.
Thank you. You talked about standardization. Who are going to be responsible and accountable for the standardization of this technology in the future?
I think the central bank has a big part on it, but it's not alone, right? We have to get together with the market and test everything and build proof of concepts, testing, So this charge gets into the central bank as a mainly responsible for the standards, not only one central bank, but we together as central banks, if possible, we want and need a common thing to get ahead faster, but we need the market to talk to the market, to test the standards, to see if it makes sense in the future. So I don't know if you agree, but I see it's like that.
Yeah, I mean, I think it is a public-private collaboration piece here, very much so. I mean, that's typically what's worked well in the past. It's not like it's not like we never set standards in the past, right? I think we know there's a path here, but people need to take a bit of responsibility and leadership to bring some of those things together. Particularly, I think it's interesting in this space because we're actually seeing a convergence, right? You're seeing a convergence of securities and payments, for example, and there've been historically multiple standard-setting body in that space. So there's almost an alignment of standard setters that needs to kind of happen to be successful, I believe.
Yeah, we are seeing sort of promising signs of international setting body, like for example, in the derivative space, the International Swaps and Derivative Association have come out with definitions on how digital assets are documented, ICMA for bonds, and then OECD in terms of reporting of digital assets. How do you report? There's a framework, there's a format. So until once we get to a scale and they set the standards, we probably see the ease in which tokenization will be issued. Because right now, as we mentioned, there's promising, but the building blocks has to be there. But given that there is sort of client demand in the form of tokenization ecosystem, and I do think that when we reach the stage where there is sufficient scale, network effect in terms of adoption of standards, this is where we'll probably see certain aspect of this being commoditized.
Maybe one other thought on that, and we're just building here, but I also think about it's not just the sort of the standards to like what does a bond look like or those kind of, or how does should the data around a payment be conveyed, but it's also the standards about how we run the platforms that enable that. So in this room we know quite a lot about how you run resilient infrastructures, right? And we need to take some of that knowledge and bring that into the new digital asset space. And just to take one example, I mean, last year the three CSDs, Euroclear, Clearstream, and DTCC, got together and wrote these digital asset securities control principles, which I think were a helpful stage towards thinking about how do you have resilient infrastructures in the new space. More work to be done there, but I think we need to bring that knowledge so that we have kind of scalable and institutional grade infrastructures for this new market.
Great. Let's wrap up with a quick fire round. Really short, 30 seconds. If you could give one key piece of advice to financial institutions exploring tokenization, what it would be?
One key is I'll get back to the defragmentation. I know financial institutions don't have much choice if the ecosystem is set as they wouldn't know how to defragment. So for them to be at ease, that there will be a lot of competition. If this goes the central bank way, is to bring a lot of competitions. The big institutions would have a lot of competitions. But they will have a smaller slide of the cake, but it will be a very larger cake. So, and the small ones will have a little bit slice of the big cake as well. So everyone is happy at the end. We see this in peaks. In Brazil, it's possible. It's what we want. We want to bring everyone to a better future. So,
Nikki.
My one piece of advice would be get ready, because this space is accelerating, and all of us have to be ready for it. The good news is that SWIFT and others are here to support you and work with you to achieve success.
John?
Yeah, I think the space here is for those who are not involved yet, it might seem like this is so far off, but as you mentioned that tokenization is here to stay. The issue is how do I make myself relevant and how do I get involved? Because as we speak, the entire ecosystem is slowly changing, and this represents the paradigm shift of the future of finance, because new business model, new roles are being created as we speak.
Yeah, I think most has been said. I think not doing is not an option. And I think in the end, if we look at the financial services, there's always a settlement piece that is required. So also look at how things get settled. You know, there's a lot of use cases of a specific problem being solved in detail, but you also need to solve for the cash settlement. The money needs to be moved. And I know the solution. Yeah.
Great. That brings us to the end of our discussion. I would thank you to all panelists, Alessandro, Nikki, John, and Humphrey, for your insights and for sharing your experiences. It's clear that tokenization is no longer just a concept. It's becoming a real financial tool with both opportunities and challenges ahead. Thank you all to the audience for the engagement and questions. Let's keep the conversation going beyond this panel and enjoy the rest of the conference.
Thank you, Tamara. Thank you, dear panelists. I think this panel actually had it all from, and I quote, we need more testing, to we finally need to move out of the lab stage, over to violent agreements in terms of standardization. We had audience questions. Great job. Thank you so much. Moving on to one of my favorite formats of conferences, fireside chats. We will take stablecoins a little bit closer under our lens, and we will do so with Global Digital Finance's Jannah Patchay and Clarisse Hagege from Dfns. Please take the stage and give them a warm round of applause.
Is this on? Yes, it is. Okay, so we're very aware that it's the middle of the afternoon and we're the only thing keeping you all from a coffee break and more networking. So let's make this a really engaging session as well. So my name is Jannah Patchay. I am an executive in residence of Global Digital Finance, a partner of the Digital Euro Association. I'm also an expert member of the DEA and one of the founders of the Digital Pound Foundation, which is the DEA's equivalent in the UK. Clarisse?
Yeah. Hi, everyone. I'm Clarisse Hagege, founder and CEO of Dfns. We're a tech custody provider. We actually are servicing the financial industry, mostly banks, crypto custodian, and fintechs, working with players like Standard Chartered, Zodiac Custody, Tungsten, Stripe. And we've been, over the past now 4 years and a half, securing over 15 billion euros in transactions.
So the topic of today's chat is stablecoins under the lens, navigating security, interoperability, regulation, and market adoption. And this is, for me, the third session in a row I've had today on stablecoins. So obviously a very hot topic at this year's Digital Euro conference. And I think we've seen some of the themes from the two previous roundtables emerging on some of, I think we're getting now to a lower level of detail on some of the barriers to adoption of stablecoins. We're moving beyond just, broader themes around regulatory uncertainty or stability of stablecoins and things like that. And we're getting down to the detail of how do we actually make stablecoins work as an equivalent form of money in all the ways that people want to use money at the moment. And that, I think, is the kind of thing that brings together all of the themes that we'll be discussing today around security, interoperability, regulation. How do we overcome these barriers to market adoption? But to start off with, Clarisse, can you give us an overview of what, is it Dfns or Dfns? Dfns does, please, and how you fit into the stablecoin ecosystem.
Yeah, so, is it working? Hello, yeah. So I'm a former banker. When I started building Dfns with the conviction that the entire finance industry will run on chain. Is it within 10, 15, 20, 25 years? The time to market is yet to be defined. But the conviction was that blockchain was such a strong technology that it will bring a lot of efficiencies, right, in the way we actually interact with assets. And so when we build Dfns with the knowledge that if you want to actually interact with the legacy system of the players we're going to power, we had to build a solution that was first, bank grade in terms of security, second, easy to integrate, and easy to be interoperable with the systems that our clients were actually using. I think I'm going to switch.
That one seems to be working.
Is it better? Yeah, I think now it's more stable. So what we offer is very much the technology for our clients to be able to secure the transaction, but also to enable them to transact on chain. So when you're interlink digital assets and stablecoins, I think at the end of the day, what we're talking about is a transaction and what you need for a transaction to actually go through, right? And there's several kind of life cycle within that transaction. But first, it's make sure that when you initiate this transaction, it's actually broadcasted on chain. And blockchain technology is very new, and some of the network that people and companies are leveraging can be also crowded. And so making sure that you enable your clients to go from point A, from point B with extreme reliability is the thing that is more important. If we're going to all use blockchain technology, it has to work, I think, at least as efficiently as instant payment through SEPA or through any other network that we're using today on the instant payment. That's the first step. The second step is the security around who has access to this transaction. So this is nothing new, and this is not something that is actually particular to blockchain, and it's everything that is related to the identity and access management. So the permissions around the transaction. Who's allowed to actually initiate a transaction? What is the quorum of necessary officers we need to make sure that a transaction go from point A to point B? Has this transaction been analyzed? What is the compliance requirements I need to actually to validate that this transaction can go from point A to point B? And then it's the policies. How do I automate this transaction in a way that we can actually start thinking about programmable money and not just transaction from point A to point B? So do I need to limit transaction? Do I need to put velocity policies around my transaction, etc.? So that's everything that has access both to the identity access management and the policies. And then the third leg is, to us, I think, the most important, but that's because we like to think that we're cybersecurity first before being any sort of tool that enable fintech to transact. We come from the security background, so the last thing is to making sure that this transaction does not get hacked in the middle, right? Obviously, everyone knows blockchain is irreversible, so if you actually get your private key hacked in the middle of this transaction, then the transaction will never go where it's supposed to go. When you talk about security, we can actually go in detail later if this is a topic that we want to drill on, but there's not only the security on which you're going to safekeep your private key, there's also all the security you put around the management of your key deployment service and the way you transact with your assets. In other words, the corporate security that you're all used to operate with in banks, central banks, fintechs that are mature, etc. And so this is absolutely, of the utmost importance in our opinion. And when you look at, for instance, what happened with the Bybit hack, going back to those first principles of what we're providing to our clients, actually a service that enables them to go from point A to point B without any in a compliant way, in the most secure way, going back to first principle and corporate security is actually super important. So at Dfns, when we've kind of built the engine, what we made sure that we built is actually a technology that is completely surrounded by the good practice that we've all been operating with for the past 30, 40, 50 years, that are not new to blockchain, that are very much inherited and that pertain to certain framework our clients are operating with, such as the REF framework, et cetera, But happy to, drill down if it's...
Thanks, Clarisse. And we'll come back to a little bit more of the detail on security challenges in a minute. But just to get a sense from the room, how many people in the room do we have who are stablecoin issuers or aspiring stablecoin issuers? Stablecoin infrastructure providers, shall we say? Yes, there's hands up over there. Come on, Nick, you are kind of. How about your business models depend on or will use stablecoins in the future? Okay. People just kind of interested in stablecoins. Right. Okay, so that's where we're at the moment. And I guess for those of you who aren't using stablecoins in your business models at the moment, what are some of the things that are stopping you? I mean, you're at the Digital Euro Digital Euro conference, so you're clearly interested in new forms of digital money. But what is your barrier when it comes to stablecoin usage in your own business? Something must be stopping you. Okay, over here.
My name is Alexandra, and I came from Ukraine. I'm actually representative of a quite conservative industry, agriculture trading, and we simply don't have a stable coin in agriculture, which can be used by our farmer for the financing and for the hedging and for the other purposes. So this is why I'm here, and that's why the main barrier that it is still not existed in our industry.
Okay, so it's the absence of a stable coin that you think could be beneficial to Ukrainian agriculture, improved payments and things like that. And so it's more learning about stable coins. Okay. If we go through like the key themes of this this session, security, interop, regulation, who finds security to be a concerning angle when it comes to working with stablecoins? You seem to be better with shows of hands than actually saying things. So security, not too worried about that. Okay. Interoperability, the fact that stablecoins, may be issued on siloed blockchains, or they may not be interoperable with existing payment rails. Who's concerned about that? Okay. And regulation, lack of regulatory clarity, not knowing how these things are treated for tax purposes, not knowing whether they're crypto assets or money. Who's concerned about that? Okay, kind of toss up between security and regulation then. So let's talk about those. So Clarisse, what are some of the, I guess, unique challenges when it comes to security for stable coins, basically? What makes, what additional security considerations do we have to take into account that we don't need to take into account when it comes to existing fiat money?
I think in the previous panel, we talked about few blockers for stablecoin adoption. We talked about standardization. We talked about items that were missing for tokenized assets, stablecoin, to be actually deployed globally. I think that this is an effort that is going in parallel, but the truth is that we've been missing use cases. We've had a solution in search for, or we had a solution in search for a problem, and we've been kind of turning a lot around, and obviously regulation for the longest time has been one of the biggest blockers, but now regulation has been set not only in Europe, but in Asia, in Middle East. We had enough places where we could start actually put in production a lot of use cases. What we see at Dfns, because we not only work with banks, but also with fintechs, is that we had the first players really building application leveraging stablecoins, meaning not the first use case of stablecoins, which is how to on and off ramp from DeFi, because that's how stablecoin has been a thing, right? It's just to enable DeFi traders to on and off ramps. But we had the first use case back in 2021 of actually builders leveraging stablecoins on cross-border payments, right? Since then, we've been growing a lot on this use case. We're actually servicing clients that is a bridge. We got acquired by Stripe, and we actually had a lot of volume growing with them. And I think the reason why I'm going back to that is because we never talk about security as something that is monolithic and applied to every single use cases that is being built on Dfns. It's very much use case first, right? So if you're operating in a context where you're doing B2B cross-border payment via stablecoin, or if you're operating in a context where you're doing remittance application leveraging stablecoins, or if you're doing a banking application for businesses leveraging stablecoin, your whole security framework will be different. Why? Because your risk model is different, right? And you're always building your security according to a risk framework that is very depending on your use case. So I think, especially when you talk about stable coins, there's not one application of stable coins. There's several. There's the one that we see today, the one that are successful, the one that actually make us come to this conference and think, okay, so what do we do with stablecoins? And if we drill down a bit on that, I think what we've seen is that we had players trying to do B2B cross-border stablecoins for the past 3 years, not being successful because, first of all, no treasurer will actually do a cross-border stablecoin if the bank cannot accept the stablecoin. They're not going to take this risk, right? It's a risk appetite that you will never actually do as a personal within a larger organization if it's just to optimize your trade by a couple of bips. What you're going to do, and the reason why you're actually leveraging stablecoins is when you have pain and when there's utility to it. And the reason why a player like Bridge was so successful and was that 1.1 billion acquisition by Stripe last year is because what they did was actually looking at the use case where stablecoins were actually solving pain. And there you've seen go-to-market like global payroll. How do I make sure as a company that is scale AI paying hundreds of workers globally in the world by the hour, how can I actually make that more easily? Right, and actually transfer one USDC to one wallet to this person because I pay them by the hour or even by the minute. Global payroll is definitely something that makes sense for stablecoins and where we've seen a lot of applications. When you're looking at this use case, the security framework is very different, right? So first you need to secure the transaction, but you also need to secure the place where the end user will actually receive that payment. So it's not just about the money in movement, it's also about the wallet that will receive that transaction. And so on our side, the way we've been designing our product is by making sure we had the modularity that would enable our clients to build this specific use case. Once again, there's not one setup fits them all, but more kind of use case by use case specifics.
Okay. And I think that's a really interesting perspective as well. You've mentioned cross-border payments. You've mentioned, payroll, using stablecoins and things like that. And one thing we can't really escape from there is the need for multi-currency stablecoins, the need for stablecoins that are denominated in currencies other than USD. As the gentleman over there said, there isn't a Ukrainian stablecoin, which is a challenge if you're, participating in the Ukrainian agricultural industry and things like that. And I guess the other question then to you as an audience is, who is just not using stablecoins because there isn't one that is useful in the currency that you are focused on? Okay, so that's not the big blocker either. Right, well, I think, what we've heard from some of the other roundtables today as well is...
Because I think we're still exploring, right? Yes. And there's still a lot of exploration. I think what I really like about this conference is the fact that real life and real use case is meeting actually banks that have been looking at how to implement these solutions for the longest time. But to come back to your point about the multi-currencies, I'm going to challenge that. Do we actually need multi-currencies? So today we have 55% of our clients in Europe and 80% of the volume on our platform is in USD stable, whether it's the USDC, etc., etc. I'm going to pause 2 seconds on that. So what it means is that today we have, when you look at all these use cases where you have a stable coin in the middle of a transaction, in a cross-border transaction, etc., so the famous stablecoin sandwich, what we've seen is that the sandwich is becoming a burger with a very fat meat that is the USD, right? And it's very possible we're going to eat steak only in a few years, right? So in other words, we need, in my opinion, multi-currency because the infrastructure that is being built right now is very favorable for the hegemony of the dollar, right? And so I think here we're entering more into geopolitics conversation because the truth is that when you end up actually receiving USDC and you live in Mexico, you're happy to keep your USDC, right? You are actually hedging some sort of volatility on the currency rate. Plus all these players actually building use cases, leveraging stablecoins. They are offering you the wallet, so it becomes your bank account. They're offering you the yield, so you're actually starting saving and having interest rates on your deposit you did not have before in a money that is actually stable, right? And so today, in the real life, and I would say with use cases that we've seen being built, we've seen recently, a stable coin on Mexican peso, on Brazilian real being issued. But the truth is that we're still missing the use case. What is the use case? When do I swap from USDC to Brazilian real, right? What is going to be the use case that is going to actually enable for this stable currency to take off?
Yeah, absolutely. And I think, you mentioned the geopolitical angle there. I think there's also the personal user experience. Yes, some people might want to receive US dollars, but really not everyone wants to take currency risk when they're being paid by their employer. Not everyone, wants to take FX risk and, have to manage exposure to the US dollar to, a currency that's not theirs when they transact day to day. And when we look at digital asset markets in particular, at the roundtable before lunch, Vik Chandran from Deutsche mentioned one of my favorite examples in the UK of Santander's issuance of the first tokenized GBP-denominated bond back in 2019. A huge blocker to them undertaking that initial transaction with another counterparty was the absence of a regulated on-chain settlement asset. So basically they had to tokenize their own deposits, which no one else wanted exposure to, and they did it as an intergroup transaction. Now, 6 years later in the UK, that still remains an issue. And, you guys in the EU are a bit ahead of that in a way, that same structural barrier is being broken down now with the existence of MiCAR and, the slow growth of more accepted euro-denominated stablecoins, I think. But we can't underestimate the importance if we want to see the benefits of tokenized asset markets, if we want to see the evolution of a digitalized financial system, of having the ability to settle in the currency in which assets are denominated.
It's super important. No, of course, it's absolutely important. I think we've seen a lot of initiative on debt capital markets that do not take off because we're missing the cash leg, right? And so we're missing the settlements in the currency in which the assets are denominated. It's absolutely true. I think the question here becomes, until we have actually a digital euro, right, and until we have sort of almost a top-down approach on this subject, how do we enable euro stablecoins, right, to gain TVL, because today when you look at the stablecoin in euro, they're very, very small compared to what you see in USD, despite the fact that in Europe, we were one of the first regions to have actually a regulatory framework. And so in my opinion, it's no longer a matter of infrastructure. It's no longer a matter of regulation. And so it's a matter of how do we bring that use case that is actually useful for euro? And there, I think something that could be missing and maybe a break to actually the adoption of several use cases is actually linked to the regulation. The fact that you cannot have yield-bearing stablecoin that are regulated under MiCAR in Europe is preventing a lot of use cases that are more financial than cross-border payments or than any sort of remittance, which we would have a corridor between euro and Africa or euro and Asia, is very important. So people are turning to DeFi, right, when they want to actually provide that yield-bearing stablecoin, and that means that we're not pushing into the real economy actually stablecoin in euro. And that discrepancy between what we see as pertain to the USD and what we see in the euro, I think could be a lot of blocked by the regulation that we have today.
And focusing in on euro stable coins in particular, and as you said, we're seeing lots of little euro stable coins emerging. This is normal at this stage of the market development. We would expect to see lots of fragmentation, and then later, further down the curve, a slow move towards consolidation as we move to adoption. But there are really specific challenges from a technical perspective when it comes to stable coins that can impact this sort of consolidation process. And I'm thinking here about interoperability. So when we use money today, we're not really thinking about where that money is, or technically, can I access it? Or does my wallet support the blockchain that this stablecoin is issued on? And things like that. And so interoperability and breaking down the barriers to fragmentation are really intertwined with each other. And how do you see that being resolved over time?
It's a really good question. We heard on the previous panel that, or was it the one before, I can't remember, that CBDC could be a way to actually provide liquidity for stablecoin or bank stablecoin, commercial bank stablecoin. And so to create that sort of interoperability within the commercial bank. But at the layer below, it's actually very fragmented, right? So over the past month, we've seen more and more interest from traditional fintechs that haven't been operating in blockchain at all, have not leveraged crypto before, to get into to expose themselves to stablecoins. And one of these players told me that it seems to me that if we don't issue a stablecoin by the end of the year, we're going to be out of the race. So I think what we're going to see this year, mostly coming from the US, but I expect as well a lot from the Europe, is a lot of fintechs starting issuing those stablecoins, so at the corporate level, right, which will be all issued on very different technology, which will be probably not all listed in the same exchange, so where the liquidity will be extremely fragmented. And I think we're missing that sort of layer in between what the role of CBDCs will be for a commercial bank stablecoin, and from commercial bank to the corporate world. And yes, first it's technology. How do we enable interoperability? So it goes through the infrastructure, making sure that when we're actually building retail use cases, we are wallets that are multi-chain, right? So that can actually within at the wallet level, we can have some sort of interoperability. Then after it's at the blockchain level, how do we enable faster, more secure bridges between chains, right? Is it through the help of centralized party that will be the liquidity providers, or can we actually have interoperable layers like what we've seen with layer 0, what Chainlink is doing to actually bring the liquidity from one chain to another, and then again after that we need to make sure that we also leverage this interoperability from the corporate level to the bank level, and there I think there's still a bit of time before we achieve that part. So I think it goes back by, once again, we need to think about the use case. there's going to be some consolidation in technology. There's going to be some specialization of certain technology that will be more, that will attract more payment use cases, that will attract more financial use cases, and where we're going to see some convergence that will help in that space. And I think at the end of the day is making sure that when you start building, you build with, we're talking about the standards, but we build with the infrastructure that has the most modularity possible so you can stay agile. You can stay agile on building for a certain blockchain, but maybe transitioning to another, and you can stay agile in building the pipes that are actually relevant to your traditional systems. So making sure that your payloads can be compatible with the Swift messages you're actually sending today in your traditional systems.
And this role of CBDC in the future that you touched on is super interesting. I mean, we often think of wholesale CBDC as being, the main anchor of stability in, a future tokenized commercial bank money system. But there's also the role of retail CBDC as well. And like you mentioned before, it's not just the ECB, the Bank of England has also explicitly stated that one of the roles that could be played by a retail digital pound is as the means of kind of functional interoperability between different privately issued forms of digital money, if everyone is required to basically provide conversion in and out of a retail digital pound, for example, then that breaks down some of the potential barriers that could be put in place by firms trying to create walled gardens. But I say functional because obviously you have to have some kind of useful technical interoperability as well to support that. But just to finish off, so we've talked, about all these different forms of money, and what do you see this future ecosystem of new forms of digital money, tokenized commercial bank money, tokenized central bank money in both wholesale and retail forms, stablecoins, in all their forms? How do you see this playing out? Do you see that one is going to emerge, a bit ahead right now, but we'll gradually see kind of settling down across time? Will they compete with each other directly? What's the future going to look like?
So I think that regulation is already kind of putting some trends in terms of what we see within the market. So first of all, in Europe, we're going to see more and more consolidations around stablecoins, and I don't think that eventually there will be a lot of stablecoins that are regulated just because of the capital requirements you need to make sure you can keep and maintain your stablecoin regulated in Europe, and so that is going to drive regulation. So even though we're talking about a lot of the multiplication of stablecoins, the regulated one, there's probably going to be a few that will be remaining within the next few years, which means that the other one will be more associated to some sort of loyalty in-app program, right? So we'll see some stablecoins that will be more DeFi related, and will kind of bring that yield within the application, replacing slowly the way we're actually thinking about loyalty program. And I think there's going to be interesting things that are going to be developed, but mostly once again on the DeFi side, with stablecoins being liquid within other stablecoins, and eventually off-ramped into regulated stablecoins. It is going to be very interesting next 2 years, where we're going to be first a lot of fragmentation, but eventually, once again, because of the framework what we see, but also because of the infrastructure that we need to actually put in place to be able to develop these rails, I think that there's going to be more specialization of technology, more specialization of infrastructure provider, and convergence around certain standards and certain technology. Yeah.
Thanks, Clarisse. I think we're out of time. Very, very quickly, any quick questions? Gentleman over here.
Yeah, thank you. Peter Bofinger from Würzburg University. I have one question. When you talk about the market for stablecoins, what market dynamics do you expect? So isn't it, from an economic point of view, a kind of natural monopoly that we are facing with the stablecoins? And you can see it in the US, so there's only Tether, and all the others are are almost insignificant. And so what is the process that we expect for Europe? Wouldn't it be the same thing, that we have this kind of natural monopoly, or is it even too late because Tether is dominant already?
So with stablecoins that are not bank-backed or bank-issued, right? I think there's going to be a few of them. You're going to see Circle staying in a circle, and you have the EURC. You're going to see maybe a few players that have been very early into getting their license, that are very well backed, and that will be able to maintain. But in my opinion, there's going to be it's going to be close to a monopoly in those regions. Now, every single bank that we talk to is thinking about how do I launch my stablecoin, right? Both in Europe and in the US, and that is going to create some competition. Now, it's all about distribution, right? So if you create a stablecoin that, in terms of use case, is more meant to actually leverage cross-border payment for your businesses, you're not going to compete on the payment side, right, for actually retail use cases. And so this is where I think there's going to be a rush from banks into actually going into those retail banks, because in those retail applications, sorry, because otherwise the monopoly is going to keep on growing, and whether we're in the US or in Europe, there's going to be a very, very few players. Yes, I agree with you.
I think we're being gently urged off the stage. So thank you all very much. Thank you, Clarisse. It's been really interesting talking.
Thank you very much.
Thank you. Gently urged. No, thank you very much. I thoroughly enjoyed the fireside chat, especially the sophistication around interoperability and the siloing effect. I think that was needed. That was really cool for me. The next panel, and the next panel moderator, no joke, he just, when we met outside, he just looked me in the eye and said, Marcel, I have one more thing to do today. I was like, okay, we are up for something really great. I'm very much looking forward to the panel on bridging TradFi and tokenized deposit. Please give a big round of applause for DEA's Konrad Kraft, who came all the way from South Africa, and his packed panel.
Thank you for that warm welcome, Marcel. That was really generous of you. Of course, I'm not the only person on this panel. The real experts are the ones joining me. And they will introduce themselves a bit later. But thank you for joining us on this session entitled Bridging Traditional Finance with Tokenized Deposits. We've heard quite a bit about stablecoins, CBDCs, both wholesale and retail. And now we're going to maybe touch on tokenized deposits and their role in not only traditional finance, but perhaps modernizing traditional finance using this instrument. So, of course, the stakes are enormous. There are potentially trillions that could be ported onto distributed ledger technology. And but we have to, of course, first outline very key aspects, that being interoperability, regulation, and, of course, building systems that balance both innovation while ensuring financial stability. So today we've assembled a stellar team of experts to unpack this topic. It's a very important topic, of course, because tokenized deposits hold great promise, potentially, especially in light of the rise of stablecoins, which have stolen the show of late. And I'm sure we'll talk about stablecoins as well a little bit in this discussion. But before we get kicked off, perhaps let me ask my esteemed panelists to introduce themselves, maybe starting with you, Klaus.
Yes, my name is Klaus Judge. I'm working for the Z Bank, and I'm trying to bring commercial bank money on the LTs.
Hi, everyone. Oh, it's working? Yes. Marcy Dumitrescu. I work at R3. We're an enterprise technology company, probably best known for Corda, which is our permissioned DLT. We're live with over 60 production use cases, some of which are present today. And we also have out-of-the-box digital currencies, tokenization solutions that cater to CBDC and tokenized deposits.
Manfred Richels, now working for the German Saving Banks Association since 4 weeks, former times for UniCredit, more than 20 years, also exploring possibilities to make deposit tokens available on blockchain for our customers.
Hi everyone, I'm Tony McLaughlin, 30 years working in TradFi and now have founded a stablecoin clearing system.
Great. I'm sure they didn't really need an introduction, but for formality's sake we did. So let's get things kicked off. Let's set the stage. Maybe let's start with just a clear definition of what tokenized deposits are, so that we make sure that we're all talking about the same thing, because there can be a little bit of ambiguity when it comes to these things. Maybe, Marcy, could you take us through what tokenized deposits are and how do they differ from traditional deposits and some of these other digital money forms? And then what role does the DLT technology play in the management of tokenized deposits?
Yeah, absolutely. I think we could probably spend a whole panel talking about the differences, especially between tokenized deposits and stablecoins and wholesale CBDCs. But I think, for the purposes of time, I'm going to look at these through kind of 3 lenses. Firstly, it's who are the issuers, what are they backed by, and what regulatory frameworks underpin kind of each of these forms of digital cash. So with tokenized deposits, it kind of says what it does on the tin, right? It is a tokenized representation of commercial bank deposits on a DLT or blockchain. It is fractionally backed, like traditional deposits, backed by deposit insurance. And a very important aspect, an interesting aspect, especially for commercial banks around tokenized deposits, is that in most regions, they are covered by the regulatory frameworks that underpin traditional deposits. So this kind of clarity has been super clear, especially here in the EU. MiCAR very explicitly states that tokenized deposits are not considered, a crypto asset, and that they're covered by the Capital Requirements Directive. And I think that kind of regulatory clarity is very important. Conversely, when we look at stablecoins, in terms of issuers, it most commonly tends to be non-bank entities who issue stablecoins. Of course, we do have some examples of bank-issued stablecoins, but they haven't quite proliferated as much. And of course, these are 100% backed by HQLA, right, which is slightly different to how tokenized deposits are. And they're underpinned by these kinds of novel and emerging regulatory frameworks. So, MiCAR has done a great job in terms of defining, asset reference tokens and e-money tokens and the likes. We have the Genius in the US, which is trying to also provide more clarity around who can issue stablecoins and how they can be issued. And of course, there's movements in the UK with SIFMA as well. So I think, an important distinction between tokenized deposits and stablecoins is really where liability lies. Tokenized deposits are a liability to the commercial bank, whereas stablecoins are a liability to that non-bank entity that has issued them, the issuer itself. And that has a lot of implications, when it comes to the likes of redemptions, but also transferability of those as well. And we talked a bit about how wholesale CBDCs could potentially be hugely complementary when it comes to private digital currencies. And so I think there's a lot of interaction that can happen there. And then finally, wholesale CBDCs. We've done a lot of talking about that today, but it is issued by the central bank, a tokenized representation of central bank money, and I think there's been concerns often with retail CBDC, especially potentially disintermediating bank deposits, and there's been kind of design choices there in terms of applying limits on those to potentially prevent that. But I think that in commercial banks in general need to start thinking about how they can participate within the digital currency space, and tokenized deposits potentially provides an interesting opportunity for that.
Great, nice comprehensive overview. Thank you very much. Now let's move over, because we've heard quite a few, discussions around maybe commercial banks launching their own stablecoins, sometimes being averse to CBDCs, but also being an integral part of the distribution of CBDCs, given the correct remuneration framework or incentive framework. Maybe over to you, Tony. What are some of the motivations for commercial banks or incentives to develop tokenized deposits, maybe over stable coins or just in general, actually? Why would they look to something like this?
Just simply to serve their customers. So, the way I think about a blockchain is it's just a venue. So if a bank's customers want to transact on Ethereum, for example, if the bank can't service those customers on that venue, then someone else will. So the reason for the reason for putting a bank branch on a high street is because that's where customers do business. The reason for putting a bank onto the internet is because that's where people do business. The reason for putting a bank onto a blockchain is because that's where people presumably or potentially want to do business. So simply, the point is that if the bank isn't in the same venue as their customers, then their customers are facing a vacuum and have to work with someone else.
So it's customer demand. That's where the customers are, and we'll move to what they are requiring. Okay, pretty straightforward, I guess, right? But I want to talk about some of the use cases, because if it's just money that is on a different platform, a different highway, why, right? And maybe I can come to DZ Bank here, Klaus. You guys have been involved in machine-to-machine payments, or offline, in fact, utilizing tokenized deposits. So what are some of the business models that you've identified potentially, or use cases rather, and how can programmability of tokenized deposits through smart contracts leverage truly novel financial products and services? What have you seen through your trials and explorations?
Mm-hmm. Yeah, the CBMT is clearly targeting at corporates. Yeah? I mean, it's targeting corporate use cases, and we want to provide the money where they want to do the business. It's about the venue, just what Tony said. I mean, we have been approached by our large corporate customers, some of them, and clearly asked, okay, we see a large potential in using DLT to getting things more automated than today, saving costs, but we have a problem paying. When we do business, we need to pay, and when we started to think about, okay, how can we probably solve that? And the idea is pretty simple. We just bring our money to the same venue where our customers are doing the business, because we heard a lot about interoperability problems today and standards and such, and I think it's pretty easy to just generate some benefits for the customers, because when we went out and asked them, okay, where do you want to do, which DLT want to use? And the answer was Ethereum or R3. That's it. I mean, I'm a bit sorry for everybody else, but this was the answer. Really easy. And when you look at the Ethereum space, when it comes to standard, they have an easy answer. They are ERC20, ERC1155, ERC1400. So we tested these three, and we found ERC1155 is okay for us to press commercial bank money into this. So we can use the existing standard in this space, and that's what we did. We did a test run, and it proved that these ERC1155 with commercial bank money, the CBMT, works as money from a functional point of view. What we are not now trying to do is getting BaFin to say, yeah, the way you set it up is okay, you can use it in production mode.
Okay, interesting.
Maybe just to complement on this one, as you said, customers' wishes are quite clear. They want to put their business more on this new type of technology to create synergies on that one. And they're not looking for sophisticated functionalities of money. They just want to have the same money they're using today for their business also on the new technology. That's what they are looking for. And that's super important for them because finally they're looking for having exactly the same features of money available on the new technology. They don't want to get to know a new legislation. They don't want to talk to their auditors and try to understand how to do the accounting for this kind of money and and so on and so forth. So they want to keep the existing features of money on a new technology. And that's exactly what deposits tokens are about.
Great. Nice, consolidation there. But I want to stay with you, Manfred, with regards to, the rise of stablecoins. Okay, so banks want to issue stablecoins, some of them want to, but then you also have the tokenized deposits. What's really the benefit here? Is it the easier transition, perhaps? And then also, we had a bit of a discussion outside about the wholesale CBDC. How does this tie in, and does this render tokenized deposits a little bit obsolete, or is there still room for that specifically?
Yeah, let's start with the stablecoins. Stablecoins, at least in Europe, are with MiCAR quite well regulated. So you know exactly how to set up a stablecoin under MiCAR regulation. And therefore, it's quite easy doing that. For the commercial bank money tokens, so tokenized deposits, it's a bit more complex. Because yes, we have existing regulation, but they do not serve automatically for the new technology, which means there's a harder way to go to make this part available. The good news is banks can do that. They are on this way, and for sure, if this will be approved by the regulators, then this is the way to go, especially for those corporates because of the needs mentioned before. Talking about the wholesale CBDC, it's a super important leg to mitigate finally the settlement risk. So it would help banks to even more focus on the customer needs because there's no settlement risk behind the processes. Similar to what we currently have with payments, it would even better work than with CBMT and a wholesale CBDC settlement leg.
Great. Now let's have a look at some of the hardware, or let's say the technical underpinnings of this. There are different, obviously, DLT choices that are out there. You mentioned R3 and Ethereum because of its Ethereum request for comment standards, ERC20. I'm actually a bit curious about the scalability, actually, that you spoke about, and transaction throughput, but maybe you could illuminate us on that topic. But before I get there, just in terms of public permissionless DLTs, I mean, we saw the paper recently by Ulrich, who was here yesterday, and then and his counterpart. How can commercial banks meaningfully participate in public permissionless DLTs while still, implementing guardrails that are, and all the other requirements in terms of regulation and these types of things, and interoperability? So maybe I would like to put that to you, Klaus, and then maybe Tony and also Manfred, if you want to add something.
Yeah, the interesting thing is none of our customers ask for it. None. So why should we? Why should we go to public unpermissioned DLTs right now if there are none of our customers doing their business? I don't see it. Yeah? So we will start where the customers want us to start, and this is with permission blockchains or permission DLTs. In the current project phase, we are trying this out on the European Public Network as well as on the UDPN. They joined our team. I'm very happy about this. And we will see how it works. If our corporates would ask us to go to a permissionless blockchain, we would really consider it because they don't see a fundamental difference in it. I mean, the commercial bank money token is just commercial bank money in another different, or in a different technical form than today. So it is a restricted asset because it, as today, it is restricted to customers of commercial banks, and this exactly this just stays. It stays the same. And I don't think this is a primary feature of permissionless blockchains. So why should we go there?
Yeah, look, it's a good question, and without making a judgment about whether people want to use public chain or not, let me just give you the impediment. The impediment is that if you work for a bank and you are doing any kind of outsourcing, you have to demonstrate that that's a responsible outsourcing. So if you look at a public permissionless blockchain as being an outsourcing, you've got a big difficulty because there's a process within banks called third-party risk management, which is essentially a long questionnaire. And if you want to outsource to Ethereum, there's nowhere to send that questionnaire.
Vitalik Buterin has an email address, I think.
Well, potentially. So here's the first thing, which is the bank doesn't know where to send the questionnaire. The second thing is that one of the reasons why banks have been prevented from using public permissionless blockchains is because bad things can happen on them. But coming back to the earlier analogy, bad things can happen on a high street and bad things can happen on the internet. And we don't expect the bank to be responsible for all of those bad things that happen in those venues. So I think the way forward is this, which is number one, regulators have to give clarity about whether banks have to apply traditional third-party risk management to public permissionless blockchains. If we get past that hurdle, then the next thing to distinguish is between what are the risks that we expect the bank to mitigate on public permissionless blockchain, and what are the risks that they cannot be held accountable for or responsible for. Because there is nothing a bank can do if a fork happens. So we have to recognize that a fork is like force majeure or an act of God. You can't hold the bank responsible for that. Again, like the bank on the high street, if I put a bank branch on a very dangerous high street and someone takes out money and walks down the street and gets mugged, that's not the bank's responsibility. So I think the way forward is be very clear about what we're asking banks to be responsible for, and don't expect them to be responsible for the uncontrollable.
Great analogies there. Anything to add, Manfred?
As I said, we are currently looking for a B2B business first. Yeah? And I haven't seen any corporate asking in a B2B space for a public permissionless blockchain. That's the only point to say on this one. And I have doubts that they want to get these compliance issues because they have exactly the same obligations as Tony mentioned for banks.
Okay, great. Maybe let's turn to the technical experts from R3 here. What would the motivations or choices, what would inform whether a bank chooses public or private? And then how could we potentially, ensure interoperability between existing infrastructure and, the DLT infrastructure? And then what role do standards play here? Because if everyone's going to have their own private blockchain or private DLT, let's say more correctly, would there be needs for standardization, different banks, different DLTs, etc.? What sort of complexities are involved in that?
Yeah, I think this is one of those things that kind of keeps me up at night because it's such an important question, especially on the interop side. And in terms of that, I know Nick has done a fantastic job in the previous panel discussing interop, so I'll hopefully try not to repeat too much of what he said. But I guess on the public and private side, there are banks who are experimenting with both. I don't like the term private, but permissioned blockchains and public blockchains, right? Obviously, being on the permission side, I'll be a bit more biased on what we can do there. But on the public blockchain side, there are a lot of benefits, right? There's the openness of it, the access to a massive, liquidity pool. There's like $210+ billion in stablecoins that you can access. There is, the ability to kind of take advantage of the network effects and the composability. So a lot of benefits there. But when it comes to building applications for regulated financial institutions, that's where you do come into issues around compliance and data privacy and bad actors, as Tony mentioned, and so that is where traditionally permission blockchains like Corda, like Besu, and the likes have come into the fray and have really tried to kind of reach those requirements and create those use cases for the regulated institutions. But I think the crux of it is that we can't make the assumption that everyone's going to build on the one chain, right? There isn't going to be one chain to rule them all. And I think, especially at R3, we've really been very open about this, and we want to interoperate with whatever value ledgers or networks that our customers need to interoperate with. And so interoperability between different permissioned ledgers is very important, but also between public and private. You have billions of dollars in tokenized real-world assets sitting on private chains that could really be plugged in and used on public chains. And there is a demand for stable investment vehicles in public chains. I think interoperability between the ledgers and blockchains and traditional systems like your core banking systems, right? You're not going to start tokenizing native tokenized deposits on a blockchain on day one, right? There has to be a bit of a transitionary period there where you can, kind of take your organization on that journey. So I think those things are really important, and when we look at how tokenized deposits can interoperate with other kind of digital cash or digital asset systems. There's a couple of architectures that have come out. There's the unified ledger model where the BIS and a couple of others are really pushing forward in terms of having all of these digital cash, if it's tokenized deposits, wholesale CBDC on the same ledger, right? And there's great benefits there in terms of composability and atomicity, but you're also assuming that everyone's on the same chain. And then there's the other view of, kind of like a network of networks, or almost like a multi-asset FMI, where you have different permissioned ledgers that interoperate seamlessly with each other. And there's so many kind of interoperability solutions out there. We've recently partnered with Onera, and we've also revived Hyperledger Harmonia and Cacti, which looks at our interoperability between Corda and Ethereum. So yeah, I think seamless interoperability is absolutely important. And I think some of the previous panels made comments around standardization and how important that is as well. So yeah, and ultimately I think all of these forms of digital cash are super complementary to each other, and you need interoperability for them to actually scale and be successful. And that's important for tokenized deposits,
Maybe to be a bit more provocative, you have no interoperability problem with commercial bank money tokens, because it is running exactly on the chain where the customer needs it. So there is absolutely no interoperability problem to solve. The only problem you have, because commercial bank money tokens are issued by several banks, is a fungibility problem, which is a totally different story than technical interoperability. So with the tokenized deposits, I doubt that you have an interoperability problem.
I would make a small argument there to say there's definitely a fungibility problem, but if you have a scenario where your tokenized deposits exist and live in different or disparate chains or ledgers, then they do need to some extent some way to be able to communicate with each other and kind of cross those borders. But it depends on how you look at it, I guess.
Yeah, exactly. It's dependent on the need of our corporates. And currently, as said, they do not need it. And by the way, there's always a quite simple solution to this problem. You use your normal commercial bank account and use this as the, let's say, cash leg. That's the easiest part. So it's not really an interoperability problem to be solved with commercial bank money tokens.
Klaus, did you want to say something?
Yeah, exactly. I mean, Manfred and me we're working together for a few years, so it's exactly what he said. Yeah?
Oh,
I mean,
are you ganging up on Marcy?
It is a restricted asset. It is a restricted asset. Yeah? So one of the nice sides of this is that everybody using it has an account with the bank, so you can use just your normal bank account as a bridge. Marcy is right in the sense that if you want to have the commercial bank money token on an unsupported DLT, for example, you need interop, of course. Yeah, you need interop because the banks will not probably supply each and any DLT. I mean, you all know how it works. We look where are our corporates, where are big corporates, where is real business. So we are going to support these DLTs. If you are on a smaller DLT, which is not directly supported with the CBMT, you have an interoperability problem. And for example, R3 is here to help. I like the idea, really. I'm not kidding. But this is not a problem that banks should solve, in my opinion. We have specialized companies for that.
Okay, so now that we're talking about problems,
more solutions.
Let's talk about problems, right? So what are the problems that you do face when you're looking to move to tokenized deposits? From a regulatory perspective, besides technical, what are some of those challenges? Tony, you can also join in here if you'd like.
Yeah, well, there's one fundamental problem which could be considered as being either a feature or a bug, and I'll kind of illustrate that with this, which is my cloakroom token. Now, this cloakroom token isn't my rucksack. My rucksack doesn't fit in my pocket, so it's a more convenient form of holding my rucksack. Now, it's possible that I could transfer this token to you, and then you can go and claim my rucksack. But that's not how a deposit works. Stablecoin works in that way, which is the holder of the token owns the asset. A deposit isn't like that, because a deposit is a relationship between me and my bank. And a deposit between Klaus is a relationship between him and his bank. So you have to do an extra step if you're transferring. You're not transferring the deposit token between me and Klaus. What you're doing is you're destroying that token and creating a new token for Klaus between him and his bank. So call that a feature or call that a bug, but the difference between a stablecoin and a deposit token is that the stablecoin has that bearer aspect and the deposit token does not.
Very apt, appropriate example. Do you see any other problems, Manfred, while we are on the topic of problems?
It's exactly like Tony said, and also the regulation is very different. And as the MiCAR in Europe was specifically built to create something like a stablecoin, it is not the case for the deposit tokens, and that's where currently we have the discussions with the regulators to ensure that deposit tokens are really seen as deposits. We are on a very good path there, but finally this is exactly the questions we need to answer, that we are under a complete different regulation and see this really as deposits in another technical form rather than a different animal.
And another thing, I mean, we are offering a new form of money because we think it's much more suited to do the business on the DLT. On the other hand, the problem is, for the corporates, they have to do their business on the DLT. I mean it. I mean, we run our tests and we found out, okay, it works, but how do you integrate corporates, the DLT, into the existing business processes? What is about the billing process? What is about the procurement process and so on? Because this is all not needed. I mean, you have an atomic swap between an asset and the money. You're done. And they are just not used to do it this way. And so they have to transform the way they're doing their business, because what we are really aiming for is a unified ledger in the sense there's money as one asset, yes, but all the other assets are not probably financial products. It's a machine doing some kind of work, a robot or something like this, or the right to drive a car. You go on as you want, yeah? So the corporates have to adapt to this and have to change a lot of the business processes, actually. And this is not done easily. Huh?
Interesting. We do have some time for questions, perhaps, from the audience. But before we get to the questions, are you guys comfortable with that? Before we get to the questions, I'd like to maybe just ask each of our panelists to have a single takeaway from this discussion and the future of tokenized deposits. Let's start to my immediate left.
Yeah, if there's anything you took away from this discussion, please remember tokenized deposits are deposits. Thank you.
You stole I was going to say the exact same thing. No, but absolutely. I think tokenized deposits are a really interesting way for commercial banks to start leveraging DLT in a very tangible way. But I think one of the most important things is creating use cases that add value to your end customers and that actually make your users want to use them. They fix a problem, they fix a pain point, and it's a tangible outcome for them.
Yeah, if there is a demand for stablecoin, there should be even more for commercial bank money token.
Oh, wow.
My suggestion is it's become very clear to me that lots of people have got opinions about Bitcoin without having read the Bitcoin white paper or ever having transacted in Bitcoin. It's very obvious to me that many people have got opinions about stablecoins. They've never transacted in a stablecoin. So, if you want to raise ducks, you can get a consultant to come in and give you a presentation about ducks. You can read it on the internet, or you can just try and raise a duck. If you want to understand what a stablecoin is, download one of the wallets, Phantom Wallet, MetaMask, transact in the stablecoin, and then you will understand what the real thing is. Again, it's very clear to me, and I'm afraid I've heard many speakers today talking about stablecoins, and it's perfectly clear they've never received a stablecoin. So let's not have opinions about things. Don't have an opinion about a duck based upon a picture of a duck.
Okay. Thank you. Very interesting. Maybe just a few questions. I think there will be quite a few. There's some hands flying up there.
So tokenized deposits are deposits, fine. So deposits between banks are cleared through central bank money, actually, through an RTGS. The benefit of tokenized deposits is that they could potentially become 24/7 because deposits are not. The transfer of deposits are generally not. Do you believe that in order to enable that 24/7 tokenized deposit transfer from bank to bank, you need to have a wholesale CBDC to do the clearing, or it can be done differently? It's to anybody, really.
I mean, it would be great to have a wholesale CBDC, which is available around the clock, yeah? But the CBMT is designed to span several currency regions. So we are multi-issuer, multi-FX, or multi-currency, yeah? And when we started designing it, we made a few decisions. And one very important decision is it has to work with the settlement methods that are out there now. And we started 4 years ago or so. So we are prepared to function with the current settlement process, but we would be really happy to have a new wholesale CBDC issued by ECB. And yeah.
Okay, thank you. Maybe I have to stand up. So my name is Deji, and I'm a fellow of the Digital Euro Association and also the issuers of Naira-backed stablecoin. Very strange, but that's Nigeria, Naira-backed, regulated Naira-backed stablecoin. And I thank you with what you said here because it's been theory, and I'm living where stablecoin is practical in Africa. I used it yesterday and in a very, very unlikely way. So I have 2 kids and I send money every month for upkeep, right? And I did it right here in Frankfurt. with my stablecoin dollar, and I sent to the local one we issued, which is the Naira-backed stablecoin CNGN, and whoop, to my wife's account. It went in Nigeria. And that's like what stablecoin does. And with the local one we have, for example, when we started, we just launched. And when we started that, there's this company in Nigeria called InterSwitch. They are actually the first unicorn in Nigeria. And they have this card scheme where they issue cards actually bigger than Visa in Nigeria, bigger than MasterCard. They've issued over 80 million of those cards. But this is the unique part. The card does not work outside Nigeria. So if you step outside the shores of Nigeria, I have it in my pocket here, but I can't use it to buy anything here. And they say, look, this is how we can use this local stablecoin we just issued to power what you have. And we've been invested into by Seco, and we also have investment by Coinbase Ventures. And what we're saying is, can we handshake this local stablecoin with your dollar stablecoin and make it usable? And so we just have the liquidity providers, market makers behind the scene and make this work. And so we're talking to orchestrate that. And I think stablecoin is very useful, and I think it's great, and I think we should use it before we comment. And I agree with you 100%. My second question, the question is this. What is actually the difference between the deposit, tokenized deposit, and the CBDC? So in Nigeria, again, I have a practical example. I'm involved with the central bank. And they started with the retail CBDC, the e-Naira. Of course, it's a fantastic failure. And the reason is very simple. The banks decided to lock their doors against that retail CBDC because they think it's taking deposit off the bank, and automatically I become the customer to the central bank. And we have a lot of issues because the central banks, time.
Sorry, we discussed a short question. I have to interrupt you here, but I think the question, if you could answer it really briefly.
The question, again, this is a token is just a representation, and it's a representation of a promise to pay, and the promise to pay can either be on the balance sheet of a regulated non-bank, which is fully collateralized, or it can be a representation of a liability on a commercial bank, or it can be a representation of a central bank balance sheet. So the token can actually represent different liabilities and different balance sheets. And so there is, I think this is a mistake that we're making. We are looking at the stable coins that we see today and the CBDCs that we see today and the tokenized deposits, and they all look different, but soon they may all look the same. And the key thing that needs to happen to make them look the same is that you can redeem them all at par value. That's called singleness of money and cash equivalents. So I think my prediction will be that going forward, the distinction between central bank, digital currency, tokenized deposits, and stablecoins will disappear. You will have tokens that can be redeemed at par value on demand with different issuers.
Great. I think we are at the end of the session. Is that correct, Marcel?
I think we can do another question if I'm double checking with the agenda. I think we can do another question.
Okay.
If it's a short one, I want to re-emphasize.
So first of all, a comment. So we announced together with SAP that we allow our invoices to be paid in stablecoins with the PayPal stablecoin. So if you look for a client on public blockchain, then here we are. So second question is, I mean, we heard this morning Mrs. Hachmeister talking about, let's say, the Eurosystem view on their, let's say, priorities from wholesale CBDC down to stablecoins and commercial bank money tokens. So what's your view on that? Specifically, I mean, Manfred, you talked about we need to have clarity. It didn't sound for me that way that we might get clarity from the Eurosystem or, yeah.
Yeah, on the wholesale CBDC, I think the way to go forward was clearly announced by the ECB. Therefore, we are now pushing them to get a wholesale CBDC solution as soon as possible. Because this would help for various use cases. It's not only something which is really important for CBMT, but specifically important for the asset settlement. Therefore, I think that the Eurosystem is giving priority to this is of utmost importance. About the others, I don't want to talk about the digital euro today, even if I could for hours. I think it's important now that, especially in Europe, private solutions and especially issued by banks need to speed up, need to come and to really get adoption to the market.
Great. And I think with that, we're at the end of our session. Enjoy the rest of the program, and thank you to our experts.
Thank you. Thank you, Konrad. Thank you to all of our dear panelists. You certainly delivered. And yeah, thank you for your patience, dear audience. We are already 10 minutes into the break. I would love to welcome you back at 16:45. When we will have the next panel. See you in a few minutes. Welcome back, everyone. I hope everyone in the main hall also realizes that we are continuing. Yes, there they are, the people coming. Great. All right. Welcome back. Brief shout out again to our fantastic sponsors behind me that make this great event possible in the way that we can conduct it. And let's move on to the next chapter. We are again talking about stablecoins, and I'm very pleased with the fantastic panel that has already taken their seats. The title of this panel will be The Golden Age of Stablecoins. And Lena, I hand over to you.
Thank you so much, Marcel. Welcome, everyone. Also from my side, I'm looking forward to discussing stablecoins again, but with another set of excellent people. And I'm sure we'll get a few new insights. So we will try to answer the question, is it now the golden age of stablecoins? Has it begun yet, or will it still begin, if ever? So I'm really looking forward to be discussing this with you. Maybe we do a quick round of introductions. I would like to ask each of you to just briefly introduce yourselves and your company. Clarisse, would you like to start?
Sure. Hello everyone, I'm Clarisse. I'm a co-CEO and co-founder of Dfns. We're a tech custody platform serving mostly banks, financial institutions and fintechs, and we've been securing over 15 billion euros since we started building Dfns.
Hello, my name is Michael Wild. I'm the chairman of the DEuro Association, which is speaking for the DEuro protocol, a fully decentralized stablecoin placed in Switzerland.
Hi everyone, Patrick Hansen, Director for EU Strategy and Policy at Circle. Circle is the largest regulated issuer of stablecoins out there, both on the US side for USDC and also here in Europe with our euro-denominated stablecoin EURC. I spent most of my time working on our European setup, European expansion over here.
Hello from my side, Joachim Schwerin, Principal Economist in the European Commission's part that is responsible for the real economy, DG GROW, in the unit on the digital transformation of industry. My remit is every type of blockchain, crypto, tokenization, application and policy development for the real economy. And I was also involved in drafting MiCAR and also the other financial things. I'm happy to discuss stablecoins now. As you said, everything has been said, but not by everyone. So let's have another discussion.
Thank you, everyone. So the subtitle of this panel is Life After MiCAR. But I was wondering, should it not rather be Life with MiCAR? Patrick, Circle has some experiences living with MiCAR, so to say. Maybe you want to share a bit about that, and maybe also thinking about the stablecoin markets in general. So the fight for market shares has definitely begun. Do you think MiCAR provides an opportunity for euro-denominated stablecoins, or do you think USD-denominated stablecoins will still be favored?
There was a lot in there. So a couple of things. I would say, first of all, MiCAR is a never-ending story, right? I don't know if you want to call it a never-ending love story, but it has at least been with us now for 4 or 5 years. I think the plans to regulate stablecoins were, the earliest here in Europe, around the world, and at least for us, I would say it was always seen as a net beneficial thing. And that's why, at Circle, we decided early on when we launched our Euro stablecoin in summer 2022 that we would onshore that under MiCAR and also, bring our entire stablecoin business over here. And so what we now do is we issue both EURC, the euro, and also USDC, the dollar, out of our regulated electronic money institution in France. And it has been a success story, at least for us. We're by far the largest MiCAR compliant issuer today. And we're seeing quite some traction. So to give you an example, our euro stablecoin, it has quadrupled since our MiCAR launch from a small base, admittedly. It was like 30 million last year, and now it's at like 130, 140 million. And we do think that it is related to MiCAR, because all the institutions that are now looking into it, the PSPs that are looking into it, the exchanges that start listing it, that's partly thanks to the regulatory clarity we've enjoyed in the EU. Nonetheless, we might touch on some of potential shortcomings of MiCAR as well. think empirically speaking, if you just look, you just open whatever Coin Market Cap, CoinGecko, or any other ranking of stable coins by market cap, so far not many stable coins have found their way into MiCAR. I think we're almost the only ones in the top 50 of stable coins. And so there is the question of how attractive is the regime and the framework for the major stable coins out there. And if it's not attractive enough, or we do see some challenges, some shortcomings, how do we address those? And I'm sure, we'll touch on some of these today.
Michael, would you also think about MiCAR as a never-ending love story? What's your experience? What's your relationship status with MiCAR?
Some people before my career in the DeFi space, I had been managing director for Binance DACH and also for eToro. On the other hand side, there was an auditor with KPMG. The point I would like to raise here, I think MiCAR gave us a framework we can operate in the crypto space. But when coming to DeFi, and I think Patrick just touched it, DeFi is not under the MiCAR regime defined. And this is, on one hand side, it's good. You can drive innovation. On the other hand side, for us, the protocol which launched, which I'm speaking for, we are orientating on MiCAR, but we have some uncertainty. So what will happen if the regulator, for example, BaFin, or in our case, FINMA, will come and say, hey, Switzerland is a little bit special. Hey, we have MiCAR and you're issuing a stablecoin. No, we do not issue a stablecoin. The protocol is completely on-chain. It's a code. And I think this is something, and I look into your direction, this is something it needs to be spoken about also with the regulators, with the think tanks, with the regulators. And for me, MiCAR is a good framework, but it has gaps, and we need to plug these holes.
Thank you. Now, turning to you, Clarisse, you're already taking over the microphone. Security and custody are also pretty crucial for issuing stablecoins. What do you think about MiCAR, and do you think it's influencing custody solutions for stablecoins?
With MiCAR coming into force, all the institutions that will be regulated under MiCAR will have to be DORA compliant, right? And so I think this is where we're converging into some sort of security and compliance framework as well, that is bringing some stability in the space. And we've been seeing over the past few months and few years, right, that we've been seeing players that have been operating without security standards, compliance standards, and putting at risk the end user money. So in my opinion, this is definitely a good thing. Now, when you look at DORA, there's obviously several levels, and still a lot of clarification that everyone is trying to find out. Right? For instance, as a tech custody provider, where we see potentially more volume coming into our platform, where we have more of a systematic risk, those tech custody providers will ever have to comply as well with DORA requirements, even though they are not under MiCAR regulations, right? So we've seen a lot of players that have been now looking for MiCAR registration, thinking differently about they were doing custody before, starting really thinking about their business continuity, disaster recovery program, what was the counterparty they're handling with. Okay, so actually custody of digital asset is not different than the word we were actually using before. So do we have a counterparty that has the right certifications in place? What type of controls do they have in place? And I think what's interesting is when you look at the DORA framework, there's also conversions with certifications such as ISO 27001 that are bringing some clarity. So overall, there's been quite of a stressful period, I think, from all the players. Excitement as well, because it's been a business enabler. It helped also clients to understand who's doing what, who's operating in the right way, and that's obviously a business enabler. And that continuity is absolutely essential if you want to start moving from proof of concept to actually production, if you want to start scaling. So overall, for us and for our clients, what has changed is that now we see compliance as a sort of North Star to actually also develop features. So we're compliance first as well in terms of technology providers. And what it means very concretely is that you need to enforce segregation of duties, right, when you're operating under DORA framework. So that has actually some consequences on the way we build our product. Who has access to what? What is the level of granularity that is acceptable? That's one, right? A second one that is important is about the location of the private keys. So MiCAR hasn't been so specific about these items, and I think it's been positive up until now because it's given everybody a lot of flexibility. It hasn't created any disruption in the way we're operating, but things are very different when you're actually being regulated in Abu Dhabi, in Singapore, in Japan, in Hong Kong, right? And so overall, once again, life after MiCAR, I think on our side it's been much more of a focus of how do we enable our clients, how do we bring that modularity that enables them to actually remain compliant not only in Europe, but in other jurisdictions as they grow.
If I may just follow up directly on that, because you said there's some flexibility which you feel with MiCAR that you are enjoying. Can I say it like that? Like, are you enjoying that and are you taking advantage of that? Or would you actually like if there were stricter rules?
Our clients are enjoying it. I would say this is mostly what we see. When we have clients that are facing, for instance, Hong Kong Market Authority, and they have to have in their operations 98% of cold storage, 2% of hot storage at all time, this has heavy consequences on their operations. So on our side, it would be very, if we had a guidance that were more specific, it could be a competitive advantage for us, right? So there could be a business opportunity there. But it would be also a big struggle for our clients, and I think it would be overall not favorable for business. So there are some areas in which we interpret what MiCAR is saying, not only on what is self-custodial, what you can do around self-hosted wallets, where we see that there's been some flexibility here that a lot of our clients have been enjoying. But no, overall, I think this is mostly positive for the industry.
Okay, thank you. Talking about custody, I often have to think a lot about consumer protection. And Joachim, Brussels is known for being at the forefront of consumer protection. Do you think this is something that will also favor this regulation? Do you think it's beneficial of the MiCAR regulation, and other legislations might copy that? Or do you think it might even be a bit too strong and make it too strict for companies?
I think that consumer protection is completely exaggerated. And when we designed MiCAR, I can only speak for the colleagues that designed MiCAR. We, of course, have, let's say, minimum requirements, but I don't see a liberal regulation like MiCAR that is underneath MiFID, that is there basically to empower utility tokens and also give clear rules for stablecoins that, of course, can be discussed in many details, but not regulate anything else in the crypto space. We heard of DeFi, but also other things, DAOs, NFTs, etc. These are all highly innovative areas where the normal case is that you invest money, where you bear the risk and you know that. So, of course, there are certain rules necessary. But if you look at what has developed in the level 2 standards, for example, on reverse solicitation or other things, that is completely against the spirit of MiCAR and is certainly not the intention to be there. We are not there to protect every stupid person that doesn't know what to do with the money. And I, of course, understand that there is a tendency to come from the institutional investors, from the established ones, that discover crypto as a sort of side issue to their standard business, that they want to have very similar rules, but that, again, is a misconception of MiCAR. MiCAR is not an extension of TradFi. MiCAR is the second step after the General Data Protection Regulation of having a bottom-up regulation where we put ownership in different hands. And therefore, I would say that from my perspective, consumer protection is probably the last thing that I want to discuss about. I would probably rather think about the enabling potential of writing certain things on paper and having it done on the market for a certain while. We are far away from thinking that all of this is perfect. We are very attentive to listening to the market and have a lot of meetings. We recently 2 weeks ago, I organized a workshop in Brussels on the relation between MiCAR and DORA with the industry stakeholders. We have tons of open questions. We ourselves have tons of open questions, so it's a huge learning experience. And I think we should take the time to let that sink in, but keep as the benchmark that crypto is a different paradigm compared to, let's say, traditional finance, where other topics might be in the forefront, and we want to preserve and support this, I would call it, anarchic, innovative edge that you have in crypto, which should not be corrupted by traditional thinking.
Thank you. I'd be very keen on Patrick's and Michael's opinion on that. Do you feel like you're being heard in Brussels? And do you feel like those, or like your innovative ideas are being supported? Or do you sometimes have a bit of a critical view on that?
I think that train has, has left, unfortunately, already. MiCAR, at the end of the day, in its current form, was adopted 2.5 years ago. And Brussels, at that point, kind of was done. So what happened in the last 2 years was EBA and ESMA took over and started, issuing those level 2 standards and guidance. And I think they did, to some extent, consult the industry. They also always published, public consultations on those topics. And those were quite helpful and quite useful. I think overall, one challenge is it's just the MiCAR text in and of itself is manageable. It's like 160 pages roughly. But if then you start digging into the level 2 standards that were published and you're a CASP, say, you start facing thousands of pages you have to comply with. And it starts to become probably a barrier to entry to the smallest player. Circle is lucky to be, at this point, quite a large company with the necessary resources to go through these compliance costs. But for smaller startups, the barrier is way higher than it was a year ago. And so I think in Europe, we need to make sure 2 things. One is that we continue to enable bottom-up innovation from developers, from coders, from people like students here that want to dig into crypto and blockchain technologies, and we don't straight away give them a baggage of compliance and legal costs that are hardly surmountable for them. That's number one. And then the second challenge, and I think that's one that will be increasingly important, is how do we make sure that whatever we decided here in Europe in terms of rules of the road is actually compatible and interoperable with the rest of the world, right? Because at the end of the day, crypto assets, stablecoins, those are global assets. They only make sense from a global perspective. That's why they're globally liquid, accessible, usable. And if suddenly we kind of try to balkanize, the crypto asset space by saying whatever you do in Europe over here has to be, completely, shielded from the rest of the world and isn't easily integratable to services around the world, that would be a massive, I would say, damage to the European crypto industry. So overall, cautiously optimistic, but I think these are 2 major factors to take into account when it comes to reviewing MiCAR these next couple of years, and where the Commission, in my opinion, should be in the driving seat, because it was, from the early days, the goal of the Commission to create a thriving and bottom-up startup ecosystem around crypto.
Michael, you were nodding all along. Would you agree to that?
Mostly I cover Patrick's opinion, but I need to tackle it from different angles. As you know, I had been involved over here in Germany when overtaking Binance as head of Germany, and then becoming Austria and Switzerland also responsible. The big players had massive funds invested into governmental relations to try to shape MiCAR in the best way so that they can enter the market. And I mean, it's an open secret also. Binance was involved and tried to revitalize the relationship to the regulator at that time. I think it was a little bit a pity that the market went down due to the DFX fraud. That had massive impact on, for my opinion, perhaps Joachim will disagree, but for my opinion, on MiCAR, so we got stricter rules than expected. But on the other hand side, when coming now to the DeFi space, where we are moving, we are a small company. So we started half a year ago. We are fork of Frankencoin, the biggest Swiss stablecoin, which only has around 10 million volume, because Switzerland is a small country. And we released D-Euro yesterday into market. At the moment, we have 2.5 million volume. And the problem is when you were talking about DeFi, and talking about working groups, talking to regulators, I think there's a lot of uncertainty, I would say, with the regulators, because there's a lot of discussion. I discussed it in the morning with Christoph Kreiterling, who was ex-BaFin. And what is DeFi? How do you define DeFi? It needs to be completely independent. You do not have a liability person. You do not have an entity you can make liable. And the problem is the most companies in DeFi space, so this is what Patrick tackled, are small companies. And these companies are not sitting on a table. And I'm a little bit skeptical if there will be MiCAR 2.0 or there would be an extension to MiCAR, also covering DeFi, if you will have the right regulatory framework. Because it needs to be defined, what is DeFi, how do you want to regulate it? Because if you want to regulate DeFi, I need to regulate you, Lena, because you are the customer acting with the code.
Can I ask a question?
Of course.
You're not afraid that if you start regulating DeFi, it becomes CeFi?
That's precisely what it is, yes.
Excuse me?
That's
Sorry?
precisely what it is, yes, exactly. That's the reason why it's not regulated. Yeah.
Sorry, I was slightly distracted there. Do you think we should still do it? Like, should we try to define DeFi and then should we regulate it, or should we just keep our hands off of it?
It should be a clear definition. What is, from a regulator perspective, what is decentralized finance? Because when you, as a young company, I mean, I'm coming from traditional finance. I was working for Commerzbank. I was working for Credit Suisse, also in the risk and compliance departments. You need to tell the innovative and young players, what is it? How do you need to set up the code and possibly also the supporting organization to stay on the DeFi path and not to slip over into the centralized path? I think it would be good if there's at least a recommendation or some core principles like BCBS did in the past for risk things the industry can orientate on.
Yes, I wanted to come back to that, but where I agree with you is that almost even from a technological standpoint, I think if you don't want to put guidance, because once again the risk is that it becomes CeFi and then you're under MiCAR, but at least from a technological standpoint, I think pretty much DeFi is operating on smart contracts, so we need to have kind of some norms or some audits or some frameworks around the way you actually should audit a smart contract, some companies that start being certified, some technology that is actually certified. And I think, to me, regulated DeFi has to be at the technological level. It's giving guidance, the most precise guidance possible, to make sure that there's visibility for consumers, right, to protect consumers. There's visibility for consumers when actually interacting with DeFi, and when they actually plug their wallets to any dApp, they understand, all right, this player has done the effort to actually give some clarity to me as a user, right? And I think if we start doing that, this is already such a big step that will enable you to, attract many more users without touching, once again, at the kind of core regulation of MiCAR.
Possibly. If I can add, this is exactly what DeFi is for me. DeFi is very transparent, right? And what would block the regulator to say, hey, at least you need to transparently show how much funds you have an audit on your funds, have an audit of the code. We do it by voluntarily on the webpage, so we are uploading the documents at the moment. And in the morning we also discussed there could be also a possibility to embed regulation in the code, that might be a necessity. And I tell you, from one angle, I totally agree, it would make sense, because a little bit in DeFi, if, for example, a sanctioned country will come and will use the protocol I'm speaking for to transfer funds, you cannot stop the code. There needs to be at least some kind of control mechanism. The most people in DeFi space will hate me now, but it should be a possibility to block unwanted customers.
If I just may, I'm sorry, I'm fascinated by this discourse. From our perspective, I must say it will not happen. And I also think that we have a number of reasons for that. I mean, given the proviso, of course, that our political leaders in their wisdom decide what they want. So if they tell us to do a MiCAR 2.0, especially on DeFi, we will of course do it. And I think that we have also, and that's not only myself, but my esteemed colleagues made clear that we take the Casablanca approach, for those that have seen the movie. So basically, we will arrest the usual suspects, those that can't move fast enough, but it will not be on DeFi. I mean, if you take DeFi seriously, this is about disintermediation. We have already made a far shot with MiCAR, because crypto assets are by far the smallest market that are regulated under traditional financial regulation. That is not self-evident. Now to go for DeFi, which is even much smaller, which is much more diverse, which is much more innovative, in our opinion, first of all, requires to ask a number of very serious questions, of which we have heard a number of things. Indeed, what is really decentralized? In our opinion, nothing is fully decentralized, at least not all the time, so that would require some standards, which is a difficult area to get to. In blockchain, we have at least 5 different layers that we use in our systems. In my personal opinion, at least 2 of them will never be sufficiently decentralized, at least not now. It's basically the same with AI in a specific way. So it would have to be very, very detailed rules, which would, in my opinion, be quite counterproductive in terms of innovation. It would also require ring-fencing DeFi against things like DAOs. I'm working on DAOs on a legal wrapper in Europe that includes, in my opinion, things like collective liability. And the baseline of that, if you think of bottom-up technology, you only disclose anything that even includes your identity, your funds, whatever you do, if you scale to that extent that you enter a market which is already regulated, and then you have to do that. But before that, you are in a sort of virtual chat room or doing your thing. No one has any right, in our opinion, to know anything about you. And I don't care about sanctions and all that stuff. This is a fundamental human right, like privacy, where you can do whatever you want if you agree on a value system, and only if you enter a regulated market, you have to be regulated. So we are fully opposed to any ex-ante approach of defining everything and then giving it to the European and national regulators to come with another 10,000 pages of that. Let's take the one example where we have a little bit, like the Danish NCA's guidance paper last year on DeFi. I dislike that for many reasons, but I must say that this is, of course, a very valuable contribution, because what the Danes say, building on their experience from their sandbox and a lot of companies, for the first time is we ask you basically 3 serious questions about your technical infrastructure, your governance, and basically the essentiality of what you do. And if we don't find a problem in these 3 areas, we stop asking questions and go ahead and good luck. This is the first document from a regulator that I see that is reasonable in terms of structure, and then at a certain moment says that when we don't see any problems in the first 3 questions, we stop asking questions. I'd love to see that more. And this is a sort of changed spirit in this space that we need to install more. But in my opinion, and I fully respect that, I think we can work with guidance, we need to educate, we need to see of how transparent also with smart contracts. I mean, when you give smart contracts to politicians, we have very weird ideas. There are politicians coming to us that you say, you need 1 smart contract for every country and we regulate it and things like that. I mean, certainly doesn't really recognize the nature of these things. So I'd be happy to take a soft approach to do that more. But the moment that you put DeFi in any traditional financial regulation, it is not DeFi.
It's a fascinating place to be in, like a DeFi protocol calling for regulation and
for the definition.
Okay, and the EU Commission opposing regulation. So I didn't have this on my bingo
I
card.
take your statement when the regulator will come, and they will reflect it to you. The boomerang will come back to the Commission.
I know that, but we have power to deal with that. But
no, I mean, I largely agree with Joachim on this. I think it's so complex, it's so technical. There is no market failure today that any kind of formal criteria on what constitutes DeFi would, in my opinion at least, necessarily create more harm than good at this stage. I think it needs to be a case-by-case assessment. Otherwise, I just don't think it will work in practice. And I think we have enough right now to work on with respect to MiCAR 1.0. There is so many open questions. There's still standards that haven't been adopted. Like, just to give you one example that touches stablecoins, the level 2 regulatory technical standard as to what constitutes a high-quality liquid assets under MiCAR for EMT issuers and ART issuers has not been published yet. And so at this stage, we're still, dependent on drafts, on conversations. And so I would advocate for let's focus on what we have built like for like 3 or 4 years now, MiCAR, the framework. Let's make it work, right, in terms of crypto asset services and stablecoin. Let's make it competitive. Like the European industry as of today doesn't have competitive businesses that are globally visible and competitive with the major institutions out there. So let's make it work first, and then let's see whether in the future there are market failures in DeFi, and if so, we'll think about how to address it. But at this point, I tend to agree with the Commission, and I don't think a kill switch would be a good idea at this level.
And do you think the MiCAR is an enhancer for creating more competitiveness in the EU, or like actually global competitiveness of the EU?
I think it's too early to say. The market will tell, and it's only the market that will tell. It's not like talking. It's not like being here at conferences and speaking about what you build and what you plan. At the end of the day, it's numbers. We'll have to wait and see. In 3 years from now, we may sit here, and then we'll see what the volumes are in MiCAR, for example, for trading platforms, if there are even like remotely comparable to the liquidity we see on Asian or US exchanges. Today there aren't. Maybe there will be, we'll see, and that will depend also on a pragmatic approach by regulators. Same for Euro stablecoins. We're putting a lot of resources behind our URC stablecoin. Let's see if it works. I think we'll hopefully see also some change in posture towards stablecoins here in the European Union. But at the end of the day, I think the industry will do everything it has and everything it can, but ultimately it's also up to the public sector and try to enable it. And then I guess, we'll check back in 2 or 3 years.
So it is up to the public sector, but I wonder if you compare what's currently happening in the US, where the public sector with bill drafts is really pushing for it, and I wonder, maybe a question to all, not only to you, Patrick, if the EU can really catch up with that, because currently the market share of euro-denominated stablecoins is really tiny.
I don't think we're behind yet. so in my opinion, yes, when you look at the volume of USD stablecoin or USDC against URC, of course, there's a big discrepancy. But to me, it's less of a, it's today, it's still not a matter of a regulation that is too strict, because for the longest time, regulation was better than anything. We've been moving to the United States 2.5 years ago, right before FTX collapsed. I must tell you that we gained much more business in Europe than in the US. So the US has been absolutely dead. To me, to come back to, will the EuroC, have a 10x or 100x or 1000x in terms of TVL, we come back to the use case, right? So it's about what do we enable with the euro stablecoin, right? And it's very possible that as long as stablecoin are mostly used for, once again, off-ramping DeFi, well, USDC is going to be used by most of the players, right? Because there's not much use into leveraging EuroC, in my opinion, for that specific use case. So it goes back to the use case, and maybe one detail about MiCAR and an element in the regulation that may be an issue into developing more euro-based stablecoin that I'm pretty sure the US will not implement is once again the fact that you don't have any yield-bearing stablecoin. And that is, to me, the #1 potential retail use case for euro, and the #1 potential way for actually a euro stablecoin to increase, right, and to grow faster, because at the end of the day, most of cross-border transactions are made with a USD leg and not a euro leg.
Would you agree to that, Michael? Do you also think the race is still on?
It's historical. The dollar is the leading currency in the world, right? And when crypto came up with stablecoins, dollar was the #1 choice. And when you look to the US, I mean, I'm not so deep in the regulation over there, but from what I understand, the regulation landscape was very fragmented, and SEC was not very, not very pro crypto and stablecoins. But now with the new president, America First is doing everything to keep the dollar the leading currency, and this is exactly what is happening. And from my point of view, in Europe, I mean, we have 27 member states, and we are discussing, and it starts also with MiCAR. BaFin is handling MiCAR stricter than, for example, other regulators. And I mean, I think we have other problems, what we need to tackle first. And yes, there is potential for Euro stablecoin or Euro stablecoins. There is big demand, but it will not replace the US dollar stablecoins.
I think the major opportunity here, at least also like speaking to many folks here at the conference, and is really the first mover effect in terms of institutionalization. I think that's something, you know, when I speak to colleagues in the US or elsewhere, where I think other regions are still lagging. So in terms of, you know, asset managers that start thinking about tokenizing financial instruments when it comes to tokenized capital markets, when it comes to payments use cases using regulated stablecoins, all of these more institutional volumes that could come on chain here in Europe, I would say there we have at least a couple of years still of a head start. But that's, you know, the next 12 to 24 months will be really key here, because at the end of those 24 months, all the other like jurisdictions in the US, also in Asia, you know, Hong Kong and elsewhere, major financial jurisdictions will have come online at this stage. So it's really up to us now in terms of major banks, major asset managers, major payment service providers, just to embrace that technology, because at the end of the day, that's what the regulation has been created for. Regulation wasn't created for regulation's sake, right? We wanted to build a business and an industry here, and I hope we can. And by the way, my comment wasn't like referring to stablecoins only on like our competitiveness, even CASPs. Like if you look at custodians, for example, US custodians, crypto custodians have hundreds of billions of assets under management and under custody. The largest European custodian is like a drop in the ocean compared to that. Same for derivatives exchanges, spot exchanges, etc. So a lot of catch up to do, but let's leverage that first mover advantage.
Okay, we do need to wrap up soon. Joachim, do you have another point on that, or can I ask you one final new question?
I'll ask a final question, because most things have been said, and indeed I could talk a lot about the dollar or not, which is very much in decline actually, where we see the stablecoin approach in the US as a last-ditch attempt to again increase the global uptake of a dollar. You shouldn't forget that the role of the dollar as the reserve currency has gone down from more than 80% to now 57%, and much further declining in a multipolar world. If you bring up stablecoins for the unbanked around the globe, where basically you have it one-to-one tapped to the US dollar and bring all of that in, you have a massive volume, and they see it from a strategic perspective of trying to get rid from their massive debt problem, which at a certain moment will kill them. So if we develop a strategic vision on that comes from the demand side, I think there's a lot of potential, but it finally requires that politicians get the act together and do that.
We only have 2.5 minutes left, but we haven't really answered the magic question. Are we in the golden age of stablecoins, Joachim?
No, we are not. And look, as an economist, I must say economics is very simple. And we talk a lot about the supply side of what we supply in terms of technology and solutions. If you look at the demand side, everyone I speak to in industry, in startups, normal consumers, just want workable digital solutions. It can be anything. And we know that if you have a complete spectrum from crypto to CBDCs, we haven't talked about private commercial money, all those things that have basically a non-digital and a digital version. And whoever gets the act together first has a moving advantage, but also we have a disparity of use, so there will be not the one big solution that will kick in. I'd love to see stablecoins much more developed, and I wish everyone here luck, but from my perspective of coming from the real economy, where I think the beef lies, we should also talk about not only e-money and, let's say, these straightforward solutions. But stablecoins are basically products that can be combined with a type of reserves of anything, real-world assets, commodities, things like that. Anything can by now be tokenized. And that is a very interesting way in the future. So I think the moment that you can tap that potential, you have much more leverage than you have now. It's certainly that stablecoins are on the up at the moment, but to call it a golden age just because finally a few of them are to compete on global market is a misnomer.
Patrick, 15 seconds to tell me if we are in the golden age of stablecoins.
Yes, we are.
Perfect. I like concise answers. Michael, what do you think?
I think we are at the beginning, as Joachim said. We need to create more USPs and real-life use cases for stablecoins, and this is what we try with D-Euro. Not offering a stablecoin, also offering the user direct minting loans and providing savings, all via a decentralized protocol. And I hope others will follow.
And Clarisse, how golden do you think it is?
I think it took 15 years for stablecoin to become famous overnight, right? But it's very much just the discovery. It's the beginning of what we're going to see.
Perfect. Thank you very much. Right on time. Thank you for the interesting panel.
Very nice. I wrote down a few key takeaways that definitely stuck with me. First and foremost, MiCAR is both a business enabler as well as a DeFi uncertainty. MiCAR will very unlikely be extended to include DeFi anytime soon, and crypto assets must be viewed globally because they are a global phenomenon. And that is fantastic. I want to take a brief reminder. I'm sure all of you here know it. You've been here all day, but there is an innovation room, and that will keep having great presentations and panels as well, and up until we have closing remarks on the stage. We will continue with compliance strategies for financial institutions, and for that I would like to welcome EY's Clément Robert and Jakob Busto. I hope I pronounced that relatively right. It's great to welcome you guys here today. Please give it up for them.
Hi, good afternoon. Is it working? It's working? Okay. It's a pleasure to be there on stage this afternoon. We are one of the last session of the day, so I know if you're still here, it's because you're interested in the topic, and I thank you for this. Even in the introduction we mentioned is going to be about compliance. I promise we'll try to make it a little bit more fun than only compliance, and we'll bring you a little bit the view from the market. So my name is Clément Robert. I'm a senior manager in the business consulting practice of EY Luxembourg, and in my role, I'm supporting banks and payment institutions across EU to do payment transformation. Today, I'm with Jakob, and we will present you some of the trends that are coming, both from a regulatory perspective, but also from a product and impact perspective. Jakob, you want to say a word about you?
Yeah, thank you very much. I hope you can hear me. Yeah, my name is Jakob. I'm a manager with EY. Thank you for calling me Busto. It's like sounds way better than the German pronunciation, so happy with that. Yeah, supporting in payments and technology transformation projects, and here today to bring a bit closer the topic of payment and regulatory initiatives. So for some background information, we have conducted a survey among European banks in 2024 with roughly like 80% of top-tier banks, so we have seen a very high involvement in that. We have followed up in several workshop series with all of them, and we're happy to share some of the insights that we found within this exercise. So looking at the expectations that arise from the regulatory initiatives that Clément will tell you a bit more later on, we can say that there are basically three things or three key points that I want to highlight today. With one being the higher control of data and the better user experience, which I think is somehow obvious looking at the different initiatives that you will see in a few seconds. What I found interesting is that increased personalization and the enhanced security isn't like having that kind of an important role as we would suggest or like think of, given that we're talking about open finance and financial data access. So the third thing that I wanted to highlight is we were asking the banks whether they feel aware on the one hand, but also ready on the other hand. And we have to say, we have received an answer that 67% of all the banks and all the stakeholders that we have interviewed are feeling challenges that they cannot really assess as of today. So they know that there will be a lot of challenges emerging from different regulatory initiatives, but at the same time, they are not very aware as of now of how to handle them. So do you want to tell us a bit more on what the initiatives are?
Yeah, I think it's important that the EU is pushing for transformation, it's pushing for modernization. Payment is one of the industry that has evolved a lot over the last years, but it's part of a wider strategy from the European Commission and the European Union, which is called the Digital Finance Framework. So there are a few pillars, I'm not going to cover all of them today, but there are a few pillars which are pushing banks to transform, particularly in the payment industry. The first one I'm going to call out is open finance. So we all know about open banking that was introduced a few years ago. The first time that fintech and banks had to collaborate, had to work together to exchange data. Now the EU is pushing for wider exchange of data, for a wider ecosystem, which is a new regulation, which is called FIDA. The objective is to start exchanging financial information data, not only payment, but also investment, insurance, asset management. So we are moving from what we call open banking to open finance. It's one of the first pillars that is on this diagram. The second one is what we called modern and safe payment. The EU is pushing for the introduction, the mandatory introduction of instant payment. We'll go after, it's one of the key topics of today. Instant payment is not a new product, not a new service, but this year it has become mandatory for the banking industry to accept it and to send it. It's part of a wider initiative to accelerate the pace of payment. And finally, the third pillar that we wanted to highlight today is a digital identity. When we talk about faster services, a better ecosystem, a start to exchange data, the EU is modernizing the digital identity topic. It comes from digital signature, but also how citizens can identify themselves online. All of this is part of this wider strategy that we will cover particularly with the topic of instant payment. Very briefly, if you can go to the next slide. Yeah. Very briefly, in terms of timeline, it's a very relevant topic for the banking industry and the payment service provider, but there are different phases. Instant payment is today reality. The first pillar entered into force in January this year, so 2 months ago. Second phase of instant payment, which is the mandatory sending of instant payment, is in October. So all the banks in Europe right now, besides the few ones that were already live, are undergoing massive transformation projects to move their operation to instant payment. When we go into FIDA and the digital package, so what we call PSD3 PSR, we're still at a legislative stage where we expect this new regulation to be voted by the end of this year, so Q4 25. So we are looking realistically at some entering into force around 2027. Digital euro, I'm not going to cover the timeline. I think you've heard it a lot today. And digital identity, it's not a new topic. It's being introduced at the moment. There are some few pilot cases which are being developed at EU level. And we are looking realistically at something around 2026. So really the agenda is very packed. You know that banks and payment service providers have a lot of regulation to comply with, and it's not over. And this is also why we run this survey that Jakob is going to comment on in a minute.
So, so after seeing the timeline, and very important or very interesting question that followed up on this was how banks and market participants feel about their respective awareness and the readiness for the actual implementation of the regulatory initiative. So as you can see from left to right, yeah, I think it's left to right, For all the ones that were either voted on or from a clearer perspective, such as the SEPA instant payment regulation, or for example also the Payment Service Directive and the Payment Service Regulations, you can see that awareness is given and banks consider themselves aware and ready at the same time, so they know what they have to handle with and they know or basically assume that they can comply with the requirements. Especially for the two initiatives that not have been voted on, such as FIDA and Digital Euro, they state that awareness might be given at a certain level of detail, but not completely all over the bank, and especially not in all departments that are affected for the respective initiatives. And at the same time, they also stated that they are struggling to define, as of now, the changes that they have to do to comply with the requirements. So this also applies to from a technical perspective, meaning they are not sure as of today on what changes they have to make on an IT level, but on the same time they also refer to the compliance setup in terms of which requirements they actually have to implement to comply with the regulatory rule set. So this was a very, very interesting outcome of our survey in terms of the readiness of the bank's readiness, and I think you will cover now the main implications besides that.
Yeah, so I think it's important to understand that for banks, all this regulation cannot be taken one by one. It's part of a wider ecosystem, part of a transformation agenda. Some of the key, let's say, impact for the banking industry and the payment service industry are listed on this slide. The first one, when it comes to instant payment, is increased fraud rates. We know that instant payment is one of the methods which is more and more used by fraudsters online because the money is going out in 10 seconds, 24/7. So it's one of the payment methods which is being used the most for fraudsters. So banks need to revisit their fraud prevention mechanism. The way they have used to identify potential fraud is changing. Social engineering, social scamming, frauds that are happening online are on the rise. You have all the EBA reports telling you on a quarterly basis that it's coming up and up. And this is something which is key. It's not only fraud prevention, it's also transaction monitoring. It's going to be one of the key requirements of the payment services regulation coming in 2027, where banks need to have better and more agile fraud transaction monitoring system in place. I mentioned instant payment today is a hot topic for the market, moving from D+1 execution of transaction, basically almost 24 hours to execute a payment, to 10 seconds. It's a huge change for most organizations. And what is very important is what we call the 24/7 operation. Banks are now used to work from the target 2 hours from Monday to Friday, and when you arrive at 4 in the afternoon, the bank is closed, they will look at your payment tomorrow. With instant payment, there is not such thing. If you want to do a payment at 8 p.m., if you want to do 1,000 payments at 8 p.m., they will need to process it. So for banks, it's a radical shift in operation, and one of the key topics for this year. Final one I'm going to comment on is FIDA, the open finance regulation that is going to be introduced. The objective is not to create a supermarket of data, but it's to give the possibility to clients to exchange data. They want to give the control of the data to clients to be able to exchange this data. So banks will need to put in place what we call a data access interface, basically a dashboard where you as a customer can see the data you have and give access to this data to your asset manager, to your insurance company. So it's a big IT change. It's a big data management exercise for banks, which needs to be undertaken starting from now.
So after talking about the implications, we wanted to cover two regulatory initiatives in a bit more detailed way, with one being the Digital Euro that I wanted to give you some more insights on, and the other one being like the instant payments and the implications on the UX level. So I think on the Digital Euro, it's kind of cold coffee, given that most of you are pretty active in the space and have already had like dozens of presentations already today. So I will not cover on the basics and try to give our view on the regulatory side of the Digital Euro. So I think not really looking at the end user level and the actual usage, I think what we can see from the legislation or the legislational draft that we have today, we have to expect a retail CBDC that will come along with mandatory acceptance and mandatory distribution. Not really want to discuss this from the implications on the bank side, but I think this will be like one of the major major things for banks in terms of that they have to actually implement it, regardless of their actual opinion, regardless of the business model behind, and they will have to ensure that the digital euro is distributed basically the same way as cash today. So we consider, or like this is also the reason why you can say the digital euro is somehow cash 2.0. There are a few interesting things in the legislation which I do not really want to cover in too detailed way, but I think another one will be the offline case and the feature or the request for accessibility, which I think will be very interesting in the context of looking at today's solutions that we have in the market for end users as well as for merchants. So thinking or looking at the target image of the digital euro, I think we can see a solution that's providing additional value to end users, but also to merchants, giving the different perspectives that are included in the legislation. So for banks, I think what's important to consider within the next weeks, month, but also years, you have seen the timeline that Clément has presented, which means we're expecting the legislation to pass somewhere in the next month, and we expect the next phase to start then by 2026, beginning of 2026. This implies that the digital euro will not be live before 2028 at the earliest, rather 2029 with its first use cases. But still, we have a strong opinion that banks have to start their internal assessments now, which means they have to look from different perspectives, like what are the implications on the liquidity side, for example, what are potential liquidity outflows, what is the impact on the KPIs that I have, basically from an accounting perspective. Do I have impact or any effect on my credit risk, for example? Do I also have any effect on my calculations for credit management and so on? So this is a very important thing to consider for banks within the next month and in preparation of the digital euro. Furthermore, I think all of you can read, so I will not just stand here reading out what is on the slide. But I think for banks to consider what's very important is that this is a cross-functional initiative. So for your internal assessments, we highly recommend to bring all the people and stakeholders from various departments together and look at it from a holistic perspective, rather than from like a product-based view or from a process-based view, because while all of these specific and detailed perspectives are very valid on its own, we think for the beginning it is important to develop a holistic understanding on the one hand, but also like one strategic direction for the whole bank that considers all of the different perspectives in the bank and on digital euro.
And I think that there is a common denominator to the two topics we presented, being instant payment and digital euro. It's going to be the user experience, the use cases and the user experience. If we want to have adoption, if we want the digital euro to be successful, we need to have a user experience which makes sense, which is convenient for the user, that they can understand. For now, the topic which is being pushed at the highest level, it's a top-down approach where we are pushing a product to the market, but looking at the customer experience, ensuring that it's flexible, that our end user, being the EU citizens, are able to use it easily, will be the only way where this product, at least for the retail perspective, can compete with existing payment method. Today, we all have Apple Pay or Samsung Pay in your phone with just 2 buttons. You are paying with your phone, you are paying with your smartwatch, you are paying now with your ring. It's very convenient, very easy. Now to come in 3 years and to explain to people, hey, we have a new ways of paying, do you want to use it? You will need to be convincing, you will need to have a customer experience that makes sense. If not, there will not be any adoption. So some of the lessons learned that we're saying for today's implementation of instant payment needs to be kept in mind when digital euro will be launched. One of the big fraud prevention mechanisms that is being put in place at the EU level right now is the verification of pay. It's a service for free that will be launched in October, where banks, when you will be about to initiate a transaction, you will put the IBAN of a client, you will put the name of the client, the bank will tell you, yes, this is the right beneficiary, this is most probably the beneficiary, this is not your beneficiary. This service will create friction. People will start seeing in October, you will see it in your web banking, corporates will see it in their treasury system, ERP system. From October, we are introducing friction in the payment journey, in the payment experience. So we have two competing trends. To some extent, we're adding friction to prevent fraud, and we are trying to accelerate the speed of transaction with instant payment. This is why I think a lot of work needs to be done today. And I think Jakob agrees with me because we're working on the same project, looking at the customer experience and the customer education and the customer awareness over the next few months is going to be key because people do not realize yet what is going to come. On the retail side, for sure, but on the corporate side is also a big problem. Today, transactions for corporates are being pushed through file-based messages most of the time. They are not inputting transaction manually. They might not have realized yet that banks are adding this new flow, these new processes. And in October, when banks will be ready, their customer most probably won't be ready, and they will call the relationship manager and say, what happened? Why can't I pay anymore? And again, taking the example of instant payment for digital euro will be key for the development of this product. That was all for us. We are still 2 minutes before, so I hope you enjoy it. Yeah.
Are there any questions in the audience right now? I would love to hand you the microphone. If that's not the case, let me briefly check if there's a Slido question from the streaming viewers. And sorry, it's just a suspense. I have a really poor connection as well. It's like adding to it. No, it's not the case.
That's okay. Thank you very much for your time, and it was a pleasure to be there.
Thank you. Great job. All right. On a very personal note, I want to take a second to say thanks to the audience, both online as well as offline, for your personal comments, for reaching out to me personally, but also for the productive criticism. I think I can speak in the name of the Digital Euro Association as well when I say that this is very much needed and very much appreciated. Your feedback is always very welcome. To the online audience, this is the last time you will see me because I am now handing over to the very last panel and the last thing that's going to happen before the closing remarks on this stage. And you know, the last panel on a conference is always a great opportunity to talk about the vision, to see what's on the horizon, to maybe take a look into the future. And that is what Jonas, Gógl, and panelists will now do. We will now talk about the European digital identity. Jonas has already joined me. I would love his panelists to join me as well. And as I already said, from me, a good night, but do not turn off. This is going to be exciting, and the closing remarks are going to be as well. And now, give it up for them.
So yeah, thank you very much, Marcel, for this very nice moderation once again. It was really great to have you here as a moderator. And also, of course, you know, we are now standing between you and the wine. That's always a challenge. As the last panel, very similar to the panel after lunch break, where people are, not that active. But I can promise you we make this exciting, so that you stay here, and after this 40 minutes, you really say, okay, it was good that I stayed here. And we do see a few folks here in the room, and also heard that there are still a few hundreds actually available online and still part of this online. So no a dense stay in terms of information, but great that you stayed with us and are part of this discussion. So with me today are three distinguished panelists. So we have Alex here first, we have Markus, and we have Steffen. And I think before we go into the content for today, let's start with a very brief round of introduction. So maybe Alex, you wanna take a start and briefly introduce you, and maybe also how this relates to identity in particular.
Sure. So my name is Alexandra Kish. I'm the CEO of the Global LEI Foundation. So LEI stands for Legal Entity Identifier. I have a background in banking, SWIFT, and standardization, the ISO 222 standards for those who are familiar with it, and blockchain for the last 7 years. And part of blockchain and digital assets in general is digital identity and the need to identify not only individuals, but also organizations and the people acting on behalf of the organizations. And that's what we've been working at Glyph on for the last 2 years now, is building a protocol that enables organizations to verifiably identify themselves on any digital platform, blockchain or Web2, but also the people acting on behalf of that company or that entity, or system acting on behalf of that entity, to verifiably prove they are effectively acting on behalf of that company. So avoiding fraud, impersonation, and everything else.
Thank you, Alex. My name is Markus Nazarek. I'm co-founder of Atonic, what is a small consultancy for big clients. And I have also a background in payments and banking for more than 25 years already. And the topic identity became very relevant already a couple of years ago. And so we are very deep into this topic, and also being part of the build of the German digital identity wallet. So Audi is something what we are very familiar with, and trying to help and support this project as well.
Stefan Schwam, we work as principal responsible for the identity and trust stuff at EMSG Security Advisors, so serving clients cross industry in this subject. Have a history of about 15 years. After 15 years, I stopped counting. Took part a bit in the development of the German EID, so if you want to protest, you also can come to me. But also take part now in the development of the UDI wallet and the different European projects, supporting clients and first projects in the subject, but also not only in identity, but always to solve the whole value chain. Yeah, it does not help if we know who the person is. At the end of the day, we need to issue or to provide also other evidences like KYC, like KYB, but also we want to sign contracts, and we may want to preserve it for the next 20 or 30 years. And this is exactly my playing field, so supporting clients in the subject, supporting trust services, wallet providers in becoming certified. We are not auditors, but we do the work before, so to prepare everybody or the client in becoming certified, and to keep the circle round or to make it complete, I support the regulative authorities in defining exactly the framework you have to comply with, or the trust services will be certified against. So I shape the European standards in the subject, and thanks for mentioning the blockchain subject. We have a trust services on blockchain now, so achieve legal trust according to EIDAS in Europe, and together with a colleague from Spain, I'm the responsible project lead for the European standard against which trust services for ledger will be certified.
Perfect, yeah. So you hear already from this introduction that we have very distinguished people here. So Steffen, who's very working at the forefront on European level. Alex also involved in a lot of the important stakeholder discussions. Markus also supporting the German wallet. But let me zoom out a little bit because we need to understand what we are talking about. And first, a comment, you see it maybe. So Johannes is not here with us today because he's actually, let's say for good reasons, not here. But we will still make the discussion very very exciting. I guess I cannot tell more, some might guess, but yeah, it was all planned, so all fine. But again, why are we talking about identity? That's a question you might ask yourself, and we heard a lot of words already, like EIDAS, EUDI, how does this relate? So what we do see is identity is now a core topic for Europe, and this means both identities for natural person like us, and also identities for legal persons, so for companies basically. So that's strategic importance for the EU, part of different initiatives, and we have actually also seen that a regulation has basically entered into force or came into effect last year in May, which is the EIDAS 2.0 regulation. So this means there is a harmonized European regulation in place that makes all the stuff we talk about tangible. So we're not talking about theoretical constructs, and you've seen the timeline in the EY presentation. This is real, and this is actually coming, I mean, before a digital euro is coming, and that's also why we brought it up, because it's just super important. So this means, again, just to mention a few times, 2026, the EU member states have to provide wallets for the end user. So 2026, which is not a lot of time anymore, obviously. And 2027, there are a lot of parties basically that have to accept this wallet into their processes. For example, banks, for example, PSPs, also marketplaces, public authorities, end of 2027, right? So also here, 2.5 years. So that's why it's so important to talk about, because there are these legal requirements, and this identity topic I think will change a lot, and we will discuss now what it will. And it really concerns everybody who's active in the banking, PSP, marketplace space, and also is related to some blockchain initiatives and to the digital euro somehow as well. So just this, to set the scene, why these folks talk about this topic of identity, just because it's coming and it basically concerns all of us. So enough of a monologue, just to set the scene. So let's really go into the subject, and let's first talk about the identity for the natural persons. So basically for the private citizens, for you and me, right? So we all know we have currently the possibility to have a physical ID if we buy things, if we open a bank account. Some people also might use, and you mentioned this, Stefan, the eID, so the digital identity that you have in most of or some of the European countries. Now the question is, like to all of you, what will change? So whenever we have this identity and it sits in a wallet, why the fuss? What changes, and maybe also what's in for the end user? So how does this help us? Which problem does it solve?
Maybe I start, because I know that Stefan knows the eID by every character, but I think the topic was really the question, why should we do this at all? Because there are already electronic identities, and the question was, can people use also their identity in another member state? How would that work? And this thing is already more than a decade old, and became something what was very important, because everything now moved into the internet, online services, and should be digital. And very soon it became also clear the identity itself is nice. Some member states already have such a thing, but the real, so to say, the power application was if they would do also more than just identify themselves. So even if it is called European Identity Wallet, the term wallet implies already there's a bit more behind than just identity. And when you look into the use cases, and that was my job now with the German Identity Wallet, what can we do with it, and how can we engage a complete ecosystem to change a little bit, becoming more digital? In Germany, this is a really good thing. But also help the people to make things a little bit more smooth, don't wait for letters and days, and make things a little bit more seamless in the process. The wallet becomes something you can put more stuff into it. So you can put, so I say credential, what means in the EIDAS, it's attestations, so something you can put into it, show to someone else and say, hey, it's my diploma, or this is my a building application, something, or this is something I need to provide evidence that that you can really trust this credential. So the wallet became something far beyond electronic identity. And so the first thing is to understand this part. The second part is the complete mechanism behind this kind of data, what is stored in the wallet, with all the security behind, so issuers, and then you can verify and you can validate what is this information, where is it coming from, and making this then, and that was a big thing in the discussion, somehow also privacy preserving, and then it becomes something useful. So combining very, very modern concepts, not everything of it is even completely fully developed and final, but making the wallet something useful in the all-today world of a citizen, so to say. So, and then we come later to this point, so for the citizens first. I stop then there, but maybe some use cases. And we can
so basically what this means, if I kind of summarize this, one of the main goals was to harmonize this between different countries. So if I now go to Spain or something, that I can use this ID and have a standard, that is can be used, within the whole euro area. And a lot is basically about, digitization, obviously, but also efficiency gains, just showing my phone, my ID, reveal this, then automatically, automation, something is triggered. So basically about smoothness, user experience, getting process, done in a more efficient way. Is this kind of the main use cases, or is this more?
I think this is one of the main use cases. I think EID we have since 2014. Yeah, it's called EIDAS 2 because there was an EIDAS 1. Yeah, so we had EIDAS 1 since 2014, but during EIDAS 1, the new SSI paradigm appeared. So self-sovereign identity, that the user decides to whom he gives which kind of data. So with the EID, you have to provide, in most cases, the whole data. Yeah, but if I only want to know if somebody is older than 18, it might not be necessary that I get the address. Yeah, so to combine legal trust with privacy-preserving technologies coming from the SSI, self-sovereign identity paradigm, and on the other hand, the subject or the fact of that identity is much more than only it's this person with this name and this address. Identity means also my driver license, my power of attorney, my diploma, my KYC data, for example, payment information, etc. And the idea with the EIDAS 2 was to keep exactly or to meet exactly all the different variances of identity. Yes, so and I think the core advantage or added value of the OID wallet is not, okay, I have my EID now in the mobile. It's exactly that I can combine it with additional evidences like my driver license, etc. But looking at Alexandra, I think the hidden business is not the citizen. The hidden business of the OID is exactly the organization, because the EIDAS defines the member states have to provide, by the way, by 27, a wallet not only to the citizens, but to all companies. So exactly the definition, we have a unique ID for any company in Europe. And now think about identity is more than knowing that there is MSG with this address owned by family Seadmeier. It means also KYB data. The data currently in registries like the commercial registry, like registries for sanctions, something like this. And now think about, you get those data not only as data sets, but as proven data. This is what attestation means. Somebody who attests those data as authentic. And you get those data. And now imagine which level of efficiency we could achieve for master data management, for KYB stuff, or in the industry for product passports to make supply chain evident, etc. Because I have data with a proven authenticity, and I have somebody which is liable for. This is the qualified trust service at the end of the day. So the business is not the citizen. The business is where I look a bit to Alexandra and to give the ball to him.
Do you want to take the ball?
Sure, and that's why I think the whole construct needs to be thought differently than individuals, because a business wallet needs to be an institutional grade business wallet that cannot be controlled, for example, by one single individual in the company, right? You don't want one person in a company to be in charge of representing the company because he has access to the wallet. So hence the importance of having a different approach for business wallets, that they need to be multi-signature by definition. So you need to have multiple people deciding to show an attestation or show a credential that belongs to that company. And what is important as well to mention is that companies don't act, they don't do anything. It's people acting on behalf of the company that do things. CEO signs contracts, CFO signs annual reports. It's not the company itself. So you need to have a way for that company to issue credentials to their own staff or to their own CEOs, C-levels, or even to their clients, actually, for KYC reasons, to issue attestations or credentials that they can then store in their personal wallet as individual, and not only have, I am Alexandra Kesh, here is my ID, this is my passport, this is my driving license, this is my COVID certificate. That was the first verifiable credential we've seen in Europe, in the world. But this is also my business card as CEO of Gógl. I can present it. It's linked to my company credential, very, very strictly linked to it to ensure I'm not impersonating Alexandra Kesh, and I can act because of that attestation, because of that credential.
And I mean, that's super efficient, right? Because if you don't need to send out PDFs or a lot of data that you are really in charge, it's just in your phone, you know, so you authorize, done. And I think that's like kind of a game changer if you think about, you know, big corporates, about maybe also, you know, companies part of a bigger group. Like it's so painful to authorize things, and that's I think why it's really underrated what's currently, you know, happening and going on the business side. But Marcus, I think you also wanted to add something.
Yeah, that was because I have two things to add. Probably the one was we already spoke about the identity or KYB or KYC data, what is possible. And I want to step a little bit aside again to look at the other features this thing has, and then also look at this from a perspective for natural persons and legal persons. So identity was one thing. We spoke also about signing off data, a signature of something, but there's also authentication, and that was what Steffen mentioned, was you can authenticate a person but also data. Yes. So the data is true, and we had a very, very nice discussion just in front of the stage. That was there's more and more data-driven business models. How do I make sure that I can trust the data? And then I want to pay for data, but I should get the right data and not fake stuff. I shouldn't have from the right person who has the right to sell the data.
And with AI, that's even way more important. Right?
Exactly. You have all this trouble now and try to find solutions, and you need to automate this process and not sending a fax to the next public administration to say, yeah, I'm the owner of this IP and I own this AI model because I did something maybe and I have the rights to use it. And if you combine all these problems, then you need some automated mechanism. That is one thing. So authentication and then there was another thing what is probably not mentioned yet but was super important. There's also now, and it becomes very, very vital for payments. Now this thing is extended also to authorize something. That was not part of the protocol in the beginning at all. Steffen can probably then explain what it used to be, but there was an extension last year in November to extend the protocol by something you can show to the wallet or the wallet user or the corporate wallet, please approve or sign, and is this a payment or is this a contract preparation or something? So you can approve by someone willingness, consent, and all that stuff, and that is also part of the wallet. I just want to mention this because you can see it from a personal, natural perspective, a natural person perspective, but also from company perspective.
The way we summarize that with the VLEI, so the Verifiable Legal Entity Identifier, is it's for authentication, it's for permissioning, so please do something, and it's for digital signature. And any type of digital signature, it can be signing a transaction on blockchain as well, actually, which is permissioning and digital signature at the same. So it's all combined. Those are three major functionality of that type of technology in a way that is pretty much revolutionary because, at least in the context of VLEI, it is self-sovereign in the sense that the organization itself is in charge of except for its authorized signatories, which today requires a third-party verification, like in the real world. You go to a notary and you verify that effectively the right person, the right signature, the right company. But that's done differently on digital, but it's the same. You need to have that third-party verification. For other credentials, the company, at least in the VDI context, can issue and revoke their own credential completely autonomously, without having always to go to a third party and pay a third party for, like it happens for digital certificates, for example, today.
And I think what's worth to mention is we started the discussion with the Audi wallet. Yeah, so my recommendation to you would be, if you think about the IDAS, forget the Audi wallet. It sounds a bit hard, I know. Because in the marketing, you always see, okay, the Audi wallet is coming. The real value of the IDAS regulation is what we call attestations. Yes, so who is allowed to act for a company? Do we have sanction information? Do we are the data really authentic, etc.? Yeah. Attestations can be issued in any system. Okay, paper would become a bit difficult, yeah, to print a signature might become complex, but as long as you speak about digital, you can use those attestations now. You don't have to wait for the Audi wallet coming up in 27 and maybe in place 2028, 2030. Attestations, like mentioned, also for signing, the product passport stuff or KYB stuff, etc., can be used now. The technical framework is pretty much the same. Independently, if you have your Audi in 2030, it doesn't matter. The protocols, the formats, the technical requirements, the security requirements are pretty much the same. So the clear message is, look now, what does the IDAS mean for your business? Define your strategy, define your business model, and start now. If there's the Audi wallet upcoming in 3 years, just integrated, it's then another wallet you may have to you will interact with. But waiting for the Audi means to use the benefits in 2035 or never, or to have too much work in 2 or 3 years. Yeah, so long story short, EIDAS is not the Audi. EIDAS is exactly attestations, signing, and a full end-to-end digitization.
Yeah, that was actually, because you mentioned it, in the time I was looking into how can Audi wallets being implemented in Germany, I spoke to hundreds of companies in the last year to figure out, would they be kind of interested to start early? Do they understand what they have to do? What would be the next step? And it was super interesting because it turned out what you just mentioned. The first was, okay, the PIT, it's EID. I don't. Maybe this is once a year a customer comes to me and wants to use an EID. This is not the biggest use case I ever have seen. Why should I do all the implementation to just accept EIDs? It's already working today. So why should I do this? Then the conversation continued, and then, oh yeah, that's not only identity, it's also all the other use cases possible because you have attestations. And then it turned out that more than 95% of the use cases are attestations. It was not ID at all, or not governmental-backed IDs at all. It was the other way around. The most important thing was, can I authorize something? Can I provide some attestation? Can I make an authentic data set? And then the next thing came. It turned from, oh, it's a compliance program, and I spoke to the wrong people, to the business and product people, because they said, this is super interesting. This is a business opportunity. So I had more conversations because I had to switch the teams to spoke then the next few of calls with product people. And that is what Steffen just said. It was kind of the experience to figure out, okay, this is an opportunity, this is something. But then it turned out probably, Alex, but you can continue. This is the way. I, as a company, need this as well. Because it's the same principle. It's not just for my people, for my customers. For me, it's a thing.
Yeah, maybe I can share a few of the VRDI use cases that we see. So the VRDI, as I said, is a self-sovereign, an organization self-sovereign identity and verifiable credential system that works globally. The root of trust of that system is the Global LEI Foundation, which is the foundation I'm running, which is overseen by regulators, 70 regulators from 50 countries. So it's a pretty strong root of trust. And the objective is to create a system that works everywhere, not only in Europe, not only in the US, not only in Hong Kong, across border, because identity is by definition something that you want to, that is relevant not only within one region or one country, but also around the world. And when we started the VRDI system, the first use case, very strangely, was regulators. So the European Banking Authority, which is the banking regulators here, has piloted the system to authenticate banks into their system. So I am Société Générale and not BNP Paribas, because I'm presenting my credential or attestation. And then also verifying that the person reporting to EBA was the right person in the bank, delegation of authority, through a digital signature. Very simple use case, authentication, digital signature. Other use cases in the US is about securing telecommunication, like SMSs, like phone calls, by linking phone numbers to companies. Very simple. So by authenticating that, or by the authenticity of a phone number and ensuring that it's linked to Coca-Cola or Netflix and not someone else pretending to be Netflix, and then I'm sure you're receiving those SMS every day asking you to. Yeah,
we have the use case in Europe too. It's
exactly,
pretty much the same.
Absolutely, yeah. and those use cases are being implemented in Europe. I understand that as well, and in Japan, etc. In Hong Kong and China, it's about credential issues by hospital to their doctors or to their patients to be able to operate or to be active in Hong Kong coming from China, because there's a lot of fraud of fake certificates between hospitals in China and hospitals in Hong Kong. In Japan, it's about KYC. So I do my KYC with a bank. I receive a VRDI credentials from that bank that I can present to another bank to accelerate my onboarding with that other bank. And that's the KYC use case we were talking about. So it's really... what I like to say about those type of identity and credential system is that it can really do everything that you would do in the physical world, but way more efficiently. It's verifying that you know you're dealing with, and you know why you're dealing with that person. So that's the credential part, or an organization, of course.
But that reminds me also to one thing what was kind of also learning on my steep learning curve in this topic was, in the moment you offload personal data to some storage like a wallet or something where it belongs to the owner itself, and you ask every time you need the data, you can ask him, you can or her, you can exchange the data. You offload data out of your premises into the data owner, but because you know it's available, I can address it. That made things possible or cheaper, because from a compliance perspective, you don't have to store, to keep it, to hold it on your side. And there was a case in hospitality that they had exactly the same problem. You can't transfer just every data from one region to another because of compliance reasons. It's even forbidden. So for example, we have this problem between Europe, China, India. So send personal data on the backbone of your franchise company. It is a huge topic. If you offload the data to the guest user, guest app, whatever hotels then use, they carry it with them. If they then arrive in the hotel, they check in. There was no data sent over the backbone. It was played over the boundaries. And that made things much, much cheaper and much more easy. But you have to think that way. The data goes completely different ways now, and you have to adapt a little bit in your paradigm how you create architectures, where data flows and what data do you really need to store? Probably not. And how you interact with the data. And that was interesting to see how much money they can save to not replicate a complete SAP system in all regions just because they have backbones and have all the traffic there.
Look a bit at the time. The question might be, how does it relate to the other topics discussed in the conference? I think the most important is that the regulation on the digital euro requests the combination with the OID. So also, if you will have to use the OID in 27 for digital euro, welcome in the boat. Yeah, so
At least
maybe
as an option, at least, right? So not mandatory, but as an option.
It's an option, but we all know what means option in European regulation. Yeah, you set the facts because the OID wallet will come up. Yeah, so there is the pressure at the end of the day. If you look in Article 5F of the EIDAS regulation, it defines that the banks have to accept the OID wallet in case of strong customer authentication by request of the user, because the OID is voluntary. But what does it mean if I have 31 member states of EU and EFTA providing wallets to their citizens, and you have countries like Germany who said, okay, there will be the government wallet, and I also allow private companies to provide such OID wallets certified. Yeah. So now imagine Google, already working on the subject, certifies a wallet in Germany as OID with Google Pay. Do I have to say more concerning digital euro and other stuff? Yeah, so this is one. And the other subject, what we didn't discuss until now is, with a wallet, independently if it's OID or not, we can combine the identity with a property. This is exactly, for example, what we currently pilot in a European project. It's called Trace for Use, 30 partners led by Italy. And what we pilot there together with the European music and film industry is who owns a song. I know the owner, the identity of the owner, but I also can trade this property, because the property is manifested as a non-fungible token, which is issued in the European blockchain service infrastructure. So a European blockchain network with governmental trust anchor, because provided by the member states. So what we do, we combine identity, the ownership, which is an attestation to make it legally compliant, and we have the property manifested as a non-fungible token, which we can sell in a DRT network certified against the European standards, so I have the legal trust for the DRT network. And this, if you do it, who owns Hey Judy, or who owns a song, or who owns a house or a ship, doesn't matter at the end of the day, this is a semantic question. But what we see is that the European Commission goes the way to combine all those regulations, all those infrastructures to a coherent framework. And as CLIVE is an international organization, what I can say, the world is watching us. They look what works with EIDAS and all those stuff. What works, they will adopt. What won't work, they will make better. But we set facts. We shape the digital future not only of Europe. This is, I think, what we can say.
And I mean, I guess that's super important to link to all these initiatives, because you see it's all related. It's not a silo, right? So digital euro related to the digital identity. We also do see that even if the initial credentials are not based or issued on a blockchain, they can be used in a blockchain context, right? So they can use in the tokenized economy, whatsoever you name it, right? So I guess that's the next step in the evolution, let's say, but it's an important step, and this is how it all relates. And just looking at the watch, we have maybe time for a last 2 or 3 minutes to discuss. So,
sorry, just to explain a little bit what Steffen just had part of his message is something very important. That is, in the beginning, an OID wallet was a member state has to provide an OID wallet, means governmental wallet. That is not the case anymore in this strict thing, because Germany decided last year every commercial entity can create an OID wallet. It has to be certified, but that means there are already more than a handful of applicants. They think, or currently we have to say, thinking about providing a German wallet for OID. This is even much more true for corporates, because there is not a member state provided corporate wallet that will be something what is a commercial background. So that is very important to understand. OID not anymore means, or probably never had, but it was not that clear in the beginning. But now also more and more member states decide, okay, we open this for the commercial market to provide these kind of wallets, and that turns a little bit in a completely different story now.
Yes, completely. And I mean, that really shows why this is important, why we go into this direction. So to maybe also summarize, what I got from this discussion, because we also want to stick to our time, and I also know that some people have to leave on time. Just to mention this topic, this became clear to me as well today, it's a topic that is really coming. It's not just for end users, it is one, but a really big part of the use cases are coming from the business world. End user, it's interesting, this privacy piece that Stefan mentioned, you don't have to always reveal your whole ID, but just specific statements or proof-specific statements. And really that one has to hurry because 2.5 years are not so long. So with this, I would like to thank the panelists for this identity, for this great discussion, for being here with us, for you to follow that. And maybe a last big round of applause. And thanks so much. All right, so this day was hopefully full of a lot of interesting, insightful discussions. At least I had many of them, so I hope you as well. So it was really what we discussed today. We talked about stablecoins, we talked about CBDCs, retail, wholesale. I mean, made this pretty clear also how these topics are related. And even we heard this identity topic where you might think, man, how does this relate? It's related to all of them, because for digital euro, it's actually written in the draft proposal that there has to be some working together, let's say. And similar, if you link this to blockchain systems, we have heard this also is connected to stablecoins, tokenized deposits kind of initiatives, and build, or will, at least from my perspective, also be some kind of a ground layer for all of this. So with this actually, it's 6:30 here. So we are really thankful for everybody of you who joined today. It was really packed here most of the time, and really enjoyed it, at least for my time. So a really big thank you for everybody who came here all the way to Frankfurt, and also the hundreds of online participants that were here. So you can definitely be sure that this was our third round, but there will definitely be more. So we might announce the day for the next one pretty soon. Not set yet, but we will definitely communicate this on time. In particular, I wanted to say a few words just to thank people, and don't want to make this too long because you all waiting for the wine or for going back home. I know that, and I see that. First of all, really thanks to Marcel, our moderator, doing this again, an amazing job. So thanks so much. Then, of course, I want to thank all the sponsors. I mean, you know how event organizations work. You need some sponsors to make this possible in a way to get, the good catering, the drinks, and also venues and stuff, also figured out. So really thanks for everybody, for all our sponsors here. I mean, you see some of the flyers here that supported this event, which is, of course, something we as a small association need to make this stuff viable. And lastly, One before that, I also want to thank all of you for coming, so that's for sure. So we really appreciate that. And lastly now, I really want to thank the whole Digital Euro Association team. So in particular, Tamara, who's also sitting in the back for running all of this. Yes. She did really hell of a job, and this is always stressful, but it seemed to work out very well, everything. And also, of course, the rest of the team for supporting moderation, agenda, being even the back of it stuff that, it's just required for such a conference with a few hundred participants. So also here, thank you very much for the whole team. Thank you all. Thank you all for coming, and now, enjoy the rest of the evening. We have said some, I think, wine and water is what we have, so you can pick between the two. Enjoy. We are here around for a few more, a little bit of more time. Thanks for coming. Hope you come next year, and also if you would like to learn more about our association, of course, feel free to reach out, and enjoy the rest of the evening. Thanks so much.